When he would say that कि भैया मैं आ रहा हूँ 15 मिनट में, he would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Kutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
new year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Welcome to India Market Open with me, Neeraj Shah, my colleagues Hiral Dadia and Alex Matthew. And guys, suffice to say, oil remains the insider. And if oil prices are perking up as they seem to be right now, there is a risk off on the table.
It seems like it's a sell everything except oil market, with even gold prices going down.
Yeah.
So that's the point.
And you know, we've been talking about petrol prices, diesel prices not going up in our country as well, but you have private players who have gone ahead and hiked prices. So you know where the trend could go. It's just that the government is going to absorb it for the time being.
Yeah. Just before we get to the global setup, I think it's important to give this clarification because there's so much of furore over the last 48 hours about whether there is enough gas at the till in India or no. So the PIB has released a statement, and I think we should get that statement up before we get to all the top developments on the screen, that the PIB has said that there is enough fuel at the gas station for 60 days. This was released as of 2:15 p.m. yesterday, and people do not need to go and do panic buying. So I think it's very important to put that into perspective, that despite the situation, as the Ministry of Petroleum has said, India is secure. 60 days is enough buffer. Now if that also doesn't last, then well, God save us. But for now, things seem to be okay. So don't go out and queue up at the petrol pump just so that you feel that tomorrow they will not have the fuel.
And the other thing is the likelihood of at least another few weeks without a petrol price hike. But then the government has not said anything about that. This is just our interpretation, isn't it? But we should go to the global setup and several developments that have taken place. Trump says that the US will pause attacks on Iran energy establishments till the 6th of April. And that's a pretty big statement, particularly because it went contrary to the kind of tone and tenor that he took during that cabinet meeting. He says that talks are ongoing and are going very well. This is his words, exactly. Trump is also saying that they are taking control or taking control of Iran's oil is an option, but he did not give context or any details of what that meant. Meanwhile, Witkoff, senior administration leader, has said that a 15-point action list has been sent to Iran as a basis for negotiations, and that list includes various aspects, including ceasefire, as well as access to Hormuz Strait and nuclear restrictions. And on the flip side, Iran, apparently, according to reports, has said that the US demands are unreasonable and maximalist. And it is also said that it has not asked for a 10-day pause on strikes on energy plants. That's a Wall Street Journal report. And in the meanwhile, it has launched multiple waves of missiles at Israel, striking both Tel Aviv as well as Haifa. And by the way, some reports are also talking about the 5-point rebuttal that Iran has sent back to the US. And among them, it's talking about complete cessation of military action, as well as control of the Hormuz Strait. So hardball is being played by both sides. It remains to be seen whether those talks go in the right direction. But in the meanwhile, markets, I was talking about a sell everything except oil market. That was evident yesterday. Stocks, bonds, gold all saw prices fall pretty sharply. Oil was the only commodity that rose. And meanwhile, Barclays has raised the S&P 500 price earnings forecasts. They're actually talking about a new target for the S&P 500 that implies a 16+% upside. This is basically a 16% upside from Wednesday's close. But overnight, you had the S&P 500 that dropped about 1.7%, the Dow closing 469 points lower, and the tech-heavy Nasdaq dropping as much as 2.4%. And by the way, helium shortages are beginning to affect global tech supply chains as well, with Qatar producing nearly 1/3 of world supply. So you could see further disruptions and resultant impact on financials, and that will flow through in the prices of risk assets as well. Steve Rice, Global Chief Investment Officer at Standard Chartered Bank, joining us this morning. Steve, thanks so much for taking the time. We're talking about, good morning, and we're talking about earnings yet to be impacted in a big way in the US and maybe in a few more areas. But in places where there is a significant degree of oil sensitivity, the worry now is that the impact is going to be significantly more prolonged.
Yeah, for sure. Obviously, the longer this goes on, the more challenging it gets for the global economy. We're already seeing obviously different. I mean, you talked about what's going on in India, but you can see elsewhere in Asia as well, actions being taken to try and reduce the demand for oil and to manage the scant reserves that many countries have. So that obviously, the longer this goes on, the harder that is going to be managed, and the more that the price increases that are in the pipe will be passed on to the consumer. So from that perspective, obviously we do all want this to be over as quickly as possible. We've had some pretty good words coming out of the US president's mouth, I guess. It's quite volatile, as you noted earlier, so it's not necessarily all one way. But the fact that we're seeing things, I think the US starting to show signs of wanting to negotiate is a positive step. It's not going to be smooth, for sure. We see Iran obviously willing to sort of, through intermediaries, starting to have conversations, but for them, this is an existential risk to the leadership. So they want some assurances that I don't know how they're going to be provided, but I think we're moving towards the end game. But I think we've still got 2 or 3 weeks before we actually get there.
And Steve, in 2 or 3 weeks, so many things can change. By the way, great having you, Steve. This is Neeraj here. It's been a really long time, but I'm very happy we have you here. Now, you've seen multiple such cycles, Steve. Is this slightly different? And therefore, for risk assets, how does it play out, even if the end game is 2 or 3 weeks, only 2 or 3 weeks away?
So I think, obviously, I think when we started this conflict, the focus was on how long will it be, and we were sort of starting saying 4 to 6 weeks was our central scenario. But I think what we probably underplayed as an industry, and from our side as well, was the severity of the attacks and the potential permanent damage that this could inflict. And that, I think, that came home obviously with the attacks on Iranian gas infrastructure, and then obviously on Qatar as well. So we have already seen a permanent degradation of supply. So we're not just going to go back to where we were before the conflict started. So from a market perspective, it's really difficult to obviously figure out exactly when things will when we see some resolution coming through and markets will bottom. My only fear, my main fear about the current situation is I think Trump is very, very focused on financial markets. So if markets don't sell off, his willingness or intensity of negotiations I think will wane quite quickly. So I don't personally think we're out of the woods from a market perspective yet. We still think it's a buy on dips, because we think that will ultimately come to play. But in the short term, there's still significant downside risks in our opinion. Our markets are only down 7%, I think 7 or 8%, peak to trough. Only down 3%. This is global equities, down 3% year to date. So in the big picture, this is a smaller drawdown than average. The average drawdown for the S&P 500 in a year is around 20%. So we're barely scraping the surface at this moment. So maybe we'll see some further downside before we see a trough.
Interesting, Steve. Good morning, Hiral here. So you're saying some more time in terms of markets by the time we come back to those trough levels as well. Now, that's when it comes to markets. How are you looking at it from an economic perspective, the central banker's perspective as well? Because before the escalation, the idea was we are looking at growth up, inflation down, right? You had called this the Goldilocks, the death of the Goldilocks in the past. If Brent sustains at levels where we are currently, Does the risk of stagflation come in now? And what happens to the central bank's rate cycle?
So obviously from a growth impact, higher oil price acts as a tax. So it is, as you say, it moves us away from Goldilocks towards stagflation. We don't think we'll actually get there, but obviously if oil prices were to stay where they are now for 6 to 12 months, Goldilocks would be thrown out altogether. And then the question is, to what extent could the global economy deal with what we're seeing today and actually continue to grow? And in the US, that's obviously a conversation of, yes, inflation would go up, but the labor market's already pretty weak. And we think that's the key difference between now and 2022. Apart from inflation expectations have surged nothing like what they did in 2022. Still, even short-term inflation expectations and long-term remain well anchored. So from that perspective, we do still see that the sensitivity to the inflation shock from the Fed is likely to be a lot lower now than in 2022, but it would create a significant headwind. So when we look at interest rate markets, we've seen a huge repricing, as you intimated, across the global economy. Where people are now saying 0 rate cuts in the US, hikes in the UK. Both of those were expected to cut going into this conflict. And across emerging market worlds, either stationary or cuts. Now people are looking at hikes as well. So now our sense is that we are getting to peak pessimism on interest rate expectations. We've seen a massive repositioning. So now people are generally, short rates, if you like, so expecting higher rates at the extremes. What we're suggesting to clients, we're starting to see value in bond markets, at least in local currency terms. So the US bond market, we've been saying anything above 4.25 is starting to look attractive. Obviously, we're clicking around 4.4 today. We're seeing a very, very sharp sell-off in gilts as well. So for sterling-based investors, because we're bearish on sterling, we're bearish on the dollar, so you need to be, factor that into our thinking. But we see good value in the gilt curve, at least for sterling investors as well.
Very interesting. And so, therefore, from that perspective, in the way that capital flows are going to move, Steve, in your opinion, and placing India in that emerging market back, even in the run-up to this conflict, it was being viewed as a fringe, maybe diversification play. The fact that it had underperformed for a while, but there were still murmurs that, valuations are still expensive. How does it stand right now when people are, first of all, looking at different asset classes? They're talking about treasury in certain pockets looking attractive, so they're moving away from equity. How does India look in that context?
So I guess, if we just step back and say where have we been today, and I'll talk about India as well, but just talk about regional markets around the world. So you can see that obviously equities, as we mentioned, down 3%. Asia's still up so far, Japan's still up. But obviously the sell-off in Asia has been pretty severe more broadly. India obviously hasn't had a good year even before the conflict, and obviously has underperformed markedly within Asia. Even the US, it's underperformed local currency or in dollar terms. So it's been pretty a challenging environment. I mean, we entered the year, obviously pre-conflict, thinking, look, the market in India is derated. We think that earnings expectations have troughed. So from that perspective, we're starting to get more interest and have an overweight to Indian equities. Clearly, that has not worked out. And now we have to face the fact that obviously higher oil prices does impact India more severely than many developed markets, particularly obviously the US, but also other markets as well. So we've taken a short-term trade off India, but over a 6 to 12 months time horizon, assuming we see some sort of resolution to what's going on in the Middle East relatively quickly, on a 6 to 12 month basis, we still think that India can outperform within Asia. But obviously, it is really, really critical to see an improvement in the Middle East situation to get to that point.
By the way, as we speak, the government is going to cut the excise duty on petrol and diesel. This is one of the three things that the government will do, obviously, to counterbalance the rise in crude prices. And they'll have to take some hit themselves. I reckon at some point of time, the prices at the till will go up as well. So keep that at the back of your mind. Steve, if the oil, so this is of course the big move that has happened this morning. Viewers, keep that in mind. Steve, if the if the war drags on for slightly longer or becomes slightly more severe than what you're penciling in your 3 weeks endgame scenario, and therefore if oil prices were to stay higher for longer, does that make you negative Indian markets currently at these valuations? Because we are no longer at 26, but we are at 23, but the macro has worsened for India and the earnings print could also worsen. So can Indian equities see a further 5-10% correction if this war drags on?
So, I absolutely believe that's possible. We have a 30% probability to this being more drawn out than that sort of, I guess, 2 to 3 week scenario as we see it today. So that's clearly a risk for global equity markets and potentially bond markets, although that's maybe more priced in there. But also into Indian markets as well. So now I think it's important for investors not to get excessively caught up in what's going on here. Because history shows us that if you have a 5 to 10 year time horizon, then dips in markets are good buying opportunities. Obviously, that's very, very clear if you have a diversified global portfolio. But even within equities, even within Indian equities, that's also true. So from that perspective, we shouldn't get too caught up in here. We should be looking to say, okay, are the markets are going on sale? Are there enough on sale for us to be dipping our toe in now? And our view is that generally people should be continuing to invest, not necessarily accelerating purchases at this stage, at least in the global sphere, but continuing to invest and then looking for opportunities to accelerate in the coming weeks.
Okay, so this is going to be the key from here on, that yes, there are opportunities, but further downside can be expected. So staggered purchases is the key from here on. But thank you, Steve, so much for joining in. It's always a pleasure to speak to you on NDTV Profit. We know it's a truncated week, but in terms of where Wednesday's close goes, we did reclaim that 23,000 mark in a broad-based rally that we saw in terms of markets. 1.5% upside is what we saw. We ended at around 23,250. This is the second consecutive session of gains that we've seen. Names like Shriram Finance and Ultratech were the top gainers, seeing gains of over 4%. In terms of the breadth as well, we've seen it stay bullish for a second straight day, which is giving some comfort to the markets, and the broader markets also have been outperforming. In terms of the small cap index, which was up nearly 2%, names like PCBL Chemicals and Triveni Engineering saw some smart gains. Mid cap 150 was also up nearly 2% in trade. Names like Godfrey Phillip, Balkrishna Industries that were seeing some smart moves. In terms of sectors, all of them ended in the green. It was Nifty Real Estate and Nifty PSU Bank which saw the best performance across categories. And lastly, when it comes to the Indian rupee as well, that weakened by around 20 paise to 93.97 in intraday trade against the US dollar. Clearly, the breadth somewhere, Neeraj, is favoring the markets. Volumes, not sure too much.
Yeah, completely agree, Hiral. By the way, just before we get to the trade setup, we should try and get Somit up on air to try and talk about this excise duty cut and what it may imply for OMCs, because there is two things out here that OMCs could actually go out and raise the prices at the till. Remember, Hiral was talking about Nayara raising those prices. Indian OMCs, BPHPRC haven't done thus far. Does this give them the ammo to do so? So it'll be lovely to hear from Somit before we get to our stocks as well. So keep that in mind. Okay, the trade setup for the day today. Remember, as we said, oil prices are the deep insider. And because oil prices have risen, you would suspect that this would mean that the markets would take a step back. And I think Asia is already showing that. In fact, the uptick in the oil prices and the uptick on Wednesday that came about ahead of this weekend, and we know that weekends are notorious when it comes to announcements from the US, I would want to believe that traders would lighten their positions going into this weekend. Remember, next week too, we have a very short week relative to the global markets as well. So bear that in mind. I won't be surprised to see the markets drift lower today during the course of the day. If we start off flat, we may be lower. If we anyway start off with a large gap down, then the things may be separate. But otherwise, if we start off flattish, won't be surprised to see the markets lower today. And yes, OMCs are in a sore spot with the crude uptick and the Nayara price rise. Again, something that Hiral was saying. But I'd love to understand from Somit, because he tracks this so closely, as to what the impact could be. Keep in mind, guys, just one small thing that came about, which was research published by Rystad Research. And they said that the world's biggest LNG plant in Qatar won't be able to quickly restart even after the Iran war ends. Their research suggests that 2 of the plant's trains were damaged and need new gas turbines to power LNG refrigeration. Delivery for these may take about 2 to 4 years because of the massive backlog. Now, even if they hurry it, it comes in with a lag, and therefore you don't have, this conflict means that crucial energy infrastructure doesn't have a switch which goes off and comes on. There might be more between that.
Yeah, I mean, you know, to get back to the same supply levels is going to be the concern. Once you get back as well, your initial will be what? 40, 50%, and that is going to be an issue from a longer term perspective.
Yeah, so there are problems at hand.
There are problems at hand as well. So that's what we should be watching out for so far. But very quickly, if you see in terms of a couple of other things that we need to talk about in terms of factors today, clearly you're looking at the trade setup, which is really influenced by reality check on the geopolitical front. And Nifty has been attempting a relief rally earlier this week. In fact, the failure of US-Iran talks are expected to yield a concrete ceasefire and extension of the Hormuz deadline to April 6th, and that is what has brought the bears back into the driver's seat. Now, the gap-up optimism of earlier this week has been replaced by a gap-down warning from Gift Nifty. If you quickly pull up Gift Nifty on your screens as well, you'll see what the levels that we are seeing right now. 150 points gap-down opening is what is on the cards today. Your support is coming in at 23,000 first up, and then 22,900, and resistance at 23,500 and 23,600. You know, Nifty will have to cross, or will need to cross, that 23,850 to actually turn truly bullish, and that's a distant target right now. From where we are at. In Bank Nifty as well, the support is coming in at levels of around 53,200 and 52,930, and resistance at around 54,055. So these are the crucial levels that one should be watching out for as we speak. But let's head across to my colleague Puneet, who will take us through all the F&O cues. Puneet, good morning. What is the derivative action indicating?
Well, most certainly something that you guys talked about, that while we are seeing a downtick at the start, almost 100, 150 points odd, led by global factors, we did have a respite in that way in yesterday's market holiday, but largely continuing to be and hovering around the 23,000 mark. We are still yet to see conclusive evidence of a support at 22,800, as well as moving forward to 23,200. So for now, seem to be building in that support at this point of time, both for the Nifty as well as for the Bank Nifty as well, which did dip to 51,000 and then bought back above the 53,000 levels. Here again, you need to continue to maintain that support of 55,500 as one of those levels to watch out for as well, and hence build on the trading history from this point onwards. When you look at the foreign investors, they've continued to be sellers, while domestic investors have bought yet again of 5,400 crores in the markets. The index long for foreign investors, though, continues to be stagnant at that 14% mark for now. Seems to be that they are waiting on the sidelines, not reducing the positions, but not adding much as well, at least in terms of the longs and the calls that they are buying at this point of time. But similar number yet again for the put call ratio as well, very, very stable between the 1 to 1.2 mark, and continuing to reflect what we're seeing in the index long as well. Finally, just to wrap up, we've seen very stable picture in March at 23,000 as a key level for the puts, and out of money 24,000 as a key money for the calls, and very limited change in open interest that we continue to see also. So largely, as you guys rightly highlighted, might see a downtick at the start, but could be a day where it is hopefully concluding what has been a volatile week, to say the least.
Okay, so that's with regards to where the F&O data, what F&O data is indicating as we speak. But clearly, Alex, you know, first up, because of what's happened in terms of Neeraj indicating the excise duty cut, OMCs will remain in focus, but a lot of other stocks that we should watch out for.
Oh yeah, 100%. So OMC is in focus, and they have been very volatile. You've had technical experts point to the reasonable suggestion of not trading these because of the kind of volatility that they've had. But you know, the other space that has been in focus is real estate, and we pointed out to you day before yesterday that it's replaced IT as the worst performer sectorally in this year, bringing Brigade Enterprises is a stock to watch out for in that context then, because the company has launched another residential project in Bengaluru with a revenue potential of 700 crore rupees. The project is situated on 4.11 acres in northwest Bengaluru, and they'll offer 2 and 3 BHKs. Tata Motors PV, its Jaguar Land Rover has had a tough time of it in any case, but reports are suggesting that it's going to suspend production at the UK plant Solihull for up to 2 weeks on account of supply issues. The temporary halts of production are for certain car lines at the Solihull plant, is what the report says, and that period anyway includes a pre-scheduled shutdown for the Easter holidays that takes place next week. But it's still a negative, because if they're not able to produce, then they're not selling, and it's going to reflect badly in the numbers, which were already impacted in the previous quarter on account of that cyber attack that took place. UBS on delivery is an interesting note that I saw this morning. They've maintained a buy with a target price of 600 rupees, and they're asking whether delivery will flex its muscles. They say that the headwinds are behind for them and they eye profitable growth. Valmo and quick commerce impact is largely in the base. The private capital constraints are set to limit competition in the space, and they're expecting a margin upside potential going forward as well. So these are the 3 on my list, but I'm pretty sure that there are more that are more news specific.
Yeah, I mean, on my list I have a HAL, which is interesting because, the government has said that they will be looking to procure helicopters and aircrafts worth 400 odd crores under the modified Udan scheme. Now, they will be procuring 2 HAL Dhruv helicopters for Pawan Hans and 2 HAL Dornier aircrafts for Alliance Air. The company currently has an order for supplying 34 Dhruvs, 180 LCA Tejas Mk1 aircrafts and 156 Prachand attack helicopters to the armed forces. So watch out for this one in trade. Infosys also, on the back of the acquisitions that they've made. Now, 2 US deals in one go is what they've signed. The first one, they've announced acquisition worth around $560 million, which is Optimum Healthcare, and it has acquired for around $465 million, whereas Stratus Global has been acquired for up to $890 million. This actually deepens their presence in the US healthcare and insurance verticals and is expected to close by the first quarter of FY27. So watch out for this one in trade, because Optimum could actually add close to 1.3 to 1.7%, and Stratus could see around 0.2 to 0.3% to the growth of Infosys, and both deals are likely to be marginally EPS dilutive in the initial years. Currently, there are 3 pending M&As that are expected to add close to 2 to 2.5% of inorganic growth in FY27, and analysts are estimating Infosys could clock around 7% constant currency US dollar growth in FY27, with the offshore capability that could improve targeting margins over time in April to FY27 guidance, which excludes these if the closure is still pending. And the entire sector will be in focus as well on the back of the buybacks, because the buyback tax rules have changed, and this will be effective the 1st of April 2026. Now, the buybacks were treated as dividend income, and they were taxed at a slab rate, which was a high slab. Investors were taxed up to 35% on buybacks. Now, investors will pay only capital gains tax on buybacks at 12.5%. Flat 12% surcharge would be replaced the earlier slab-based charges. So this new rule will actually make it efficient, but the benefits will be unevenly spread. So the impact on the IT sector is something that we should be watching out for, because this is a sector which usually relies on buybacks. And lastly, L&T Tech, it's actually sold its Smart World and Communication unit to AMI Paradigm Solutions for 452 odd crores, and this is a part of their strategic shift towards engineering, intelligence, and manufacturing and technology sectors. So watch out for this one also in trade, Neeraj.
Okay, very quickly, the 3 names on my list before we get to that big breaking story as well. But the 3 names on my list: Azad Engineering. Well, wrong day to come out with a positive announcement, I'd say. But Azad Engineering it's a constructive thing for them, because they've signed an 8-year pact with Mitsubishi Heavy Industries in Japan to be the single source supplier for gas turbine parts. Now, this is big for Azad, for any company in this space, if you will, because apparently, as I read from a piece of research done on Azad, that power turbine nozzle way in manufacturing is considered to be extremely complex, and it ranks amongst the most challenging processes in aerospace and power generation engineering. It involves creating specialized components designed to withstand temperatures, guys, exceeding 1500 degrees Fahrenheit. Wow. High pressure, high velocity gas flows. So since Azad has gotten that, which means the precision engineering is good, I would presume that the street should reward it, but the day is wobbly, so don't quite know. Bharat Dynamics is the second one. The company is establishing 2 additional manufacturing facilities at Hyderabad and Uttar Pradesh. Why they are doing that? Because this commencement of production, while it starts during FY 26-27, it will help the organization to match the additional requirements, because they have 26,000 crores worth of order book. 15,000 crores additional orders in FY 26 and 27 anticipated as well. So keep that in mind. This is good news for Bharat Dynamics as well. Bad news for Power Mech. West Bengal State Electricity Board, I presume, has annulled a 250 megawatt battery energy storage systems tender, which results in a reduction of the order book by 1,563 crores. So keep an eye out for this. Now, the big news of the morning that has happened, and it could have multiple implications, it could move in multiple ways, is that the government has cut excise duty on fuel, petrol and diesel. First, let's get in Somit Sarkar, who understands this space so closely, to talk about what's happened and what could the possible ramifications be. Then we get in Parag Thakkar to talk about his view on the same. Somit, over to you first.
Sentimentally, definitely positive coming in for the oil marketing companies. This is a big news that has come in from the government side. They have cut excise duty on petrol to nil from 13 rupees per litre, which is the special additional excise duty that was being charged. And on diesel, this amount has come down to 3 rupees from 10 rupees. So a clear 13 rupees cut when it comes to petrol, and the overall excise duty will reduce from 21.9 rupees that was there earlier to by 13 rupees. And overall for diesel, if you look at the excise duty that government charges currently is close to 17.8, and that comes down by around 7 rupees per litre. Now this will definitely be positive for the oil marketing companies, given the fact that they are incurring huge losses on the marketing business, because Brent crude prices are on the higher level, above $105 per barrel, while the retail fuel prices, that is petrol and diesel prices, continue to remain unchanged. Because of this, there's a big marketing margin loss that is happening, and as per Nomura, the marketing margin loss is northwards of around 45 rupees. That is the blended loss that they are incurring on sale of every litre of petrol and diesel. So that comes down for the oil marketing companies. But if oil marketing companies pass on this benefit to the consumers, then it will be largely neutral for them. But most likely it seems that the oil marketing companies will not be passing it on to the consumers, and they will take this benefit on their books. But obviously this is a negative coming in for the government, given the fact that there will be a huge revenue loss that could come in for the government in financial year FY27. But at this moment, it's a positive news coming in for the oil marketing companies, given the fact that their losses on the marketing business reduces by around 13 rupees on petrol and by around 7 rupees on diesel.
Somit, since you track this so closely, I have a couple of follow-up questions. So one, when crude oil prices have risen very substantially, so 50% or thereabouts since February, right? So when crude oil prices were benign and the excise duty price was what it was, effectively they were still earning a little bit more than earlier, right? So the marketing margins were actually good. How much of buffer did they have, and what kind of impact will that see?
Well, it's difficult to say how much buffer they would have, but yes, you are right that when oil prices were at around $70 or lower than that level, oil marketing companies were incurring solid profit on the marketing business, given the fact that they were still selling petrol and diesel at around 90 to 100 rupees, and crude prices were much lower. So the marketing margins at that moment were very high for the oil marketing companies, but it's very difficult to quantify how much buffer they would have at this moment. But obviously the losses that they're incurring right now is much more than what they were earning even when crude prices were at the lower level, because at this moment for an oil marketing company, it's a double impact that is coming in, because rupee is also depreciating and crude prices are also increasing. So both these factors put double pressure on the marketing margins for an oil marketing company.
Any back of the envelope calculations on how much petrol and diesel prices would have to go up to completely pass on the increase in crude oil prices to above $100?
So at this moment, as per Nomura, they are having a blended marketing margin loss of close to around 44-45 rupees on sale of every liter of petrol and diesel. So simple math is that if you add that amount to petrol and diesel prices, that would make up for the losses that the oil marketing companies are incurring.
Okay, so I think the numbers over here become very important to watch out for. But thank you, Soumit, for that. I think a detailed investigation, I would say, Soumit will get for us a little later on in the day as well in terms of actual impact when you talk about financials. But thank you for that. Let's also get in Parag Thakkar and Kush Bora in the studios. Welcome and good morning. Parag bhai, my question to you is, we have seen the cut come in terms of excise duty on petrol and diesel. Yes, benefits the companies, not the consumers right now. How big a cushion, according to you, is this? And do you think this could also help re-rate your valuations? Parag bhai, I'm just going to take a moment before I take this question with you, because we have Mr. M.K. Surana, former CMD at HPCL, joining in. Mr. Surana, good morning and welcome to the show. The government has now cut, the excise duty, as we know. Your initial comments?
No, in the past also, when the crude prices were varying a lot, government has managed by varying the excise duty so that the consumer do not get affected. At the same time, the oil companies also do not bleed. So as you know, the crude prices have gone above $100, and definitely there will be under recoveries on the fuels for the oil marketing companies. So it will be a relief for them. And one more thing we should note, that when the crude prices are high and exchange rate is also high, and the oil business needs a lot of liquidity. So if you are paying for the crude and that much money you are not recovering from the market, then the liquidity also gets affected, and therefore there's a right way to manage it if you do not want to increase the pump prices.
Most certainly. More a macro hit for the central exchequer as opposed to OMCs. But one follow-up question, Mr. Surana, the gap between what the OMCs would be paying versus this cut, obviously the government can only do as much, but do you reckon that therefore the bleeding would continue? There is also this interesting angle wherein a private player has raised prices at the till, but the OMCs likely will not. Or the state-owned oil marketing companies likely will not.
The question is that for the private players, it is just a business, while for the PSUs, there is more than a business. And they need to ensure that the energy needs of the country are met in any situations. And therefore, a private player can afford to close the pump, but a PSU will never do that. And therefore, irrespective of whatever happens, the oil marketing companies have to continue their businesses.
Mr. Surana, good morning. And I'm just trying to understand, okay, this is a measure that has been taken by the government. Is there anything that can be done at the state level? Or would you say that the room is more difficult there?
No, definitely because these are not the products under GST. So there is a VAT applicable on these products, and state governments can reduce the VAT which is being charged. But the point is that in the past we have seen that many times the state government have increased the VAT when the central government reduced the excise duty. And then the consumer prices continue to be the same or even increased to that extent. So I think the end prices may not change for the pump. The pump prices may not change for the customer if the state governments do not change the VAT. But definitely the state governments can reduce the VAT, and in that case there may be more room for the oil marketing companies to ensure that they do not bleed.
Mr. Surana, a quick question when it comes to, we know the impact that we're talking about when it comes to OMCs, oil marketing companies. Any math that you have from the past which tells us what is the impact that the exchequer takes? Because I was just reading where back then when it was implemented in May 2022, 8 rupees cut on petrol and 6 on diesel at that time, the annualized impact to the government was close to 1 lakh crores. Is this the calculation that we should be going on with as well? Because the quantum of hit in terms of the fiscal side of it is something which needs to be taken into consideration as well.
Yeah, it will be something similar because it is proportionately you can work out on that. But the question is that it is a big step from the government also, and that is coming before 31st March. So a part of the impact may be there because the government operates not on accrual basis, on actual basis. So to that extent, yes, there may be impact on the government exchequer, but the overall somebody has to take a beating. So probably the part beating is being taken by the oil companies and the government right now.
Absolutely. And I think that there is precedent for that to take place as well. Mr. Surana, you know well how that pans out. Thank you so much for taking the time.
Thank you.
Right. Okay, let's go across to Parag Bhai to make out what he has to say. And the question I think was already asked, so let me just ask you what you think.
Yeah, so I think it is a relief for OMCs for sure. But it is like, as Samit pointed out of a big loss, you are reducing a loss. So you are just ensuring that they stay afloat. That is how I'll take it. And you are taking a very big hit on the fiscal side. So I think this entire situation, if this entire Strait of Hormuz thing or this Iran-Israel war thing continues, then it is going to be having a negative impact on various things. There is just one glimpse of it, right? That government is taking a hit on its chin. So basically, many such things will happen, many such industries will suffer. I hope this ends soon and we see lower oil prices soon.
So I think the trade-off, and very quickly, is whether you're going to sacrifice near-term revenue for the sake of controlling inflation, because once you let that genie out of the bottle, it's going to be very, very hard to control because you're not just affecting immediate inflation, but you're also setting inflation expectations, which the Reserve Bank of India has to control as well. So I think that really is the thinking right now, to not affect the customers, at least at this moment. We've got a lot to talk about in the way of individual trading strategies and stocks as well. So we'll do that after this very quick break. Stay tuned.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But
Welcome back to India Market Open. You clearly have your implied open, which is indicating cuts of nearly 152 points as we speak. So it's going to be an interesting day of trade today. But, one of the big stories that we're covering is the amendment to the Finance Bill 2026, where the government has introduced a flat 12% surcharge on buyback gains for individuals. Now, this could actually increase the tax burden for many investors, especially those in the lower income brackets. To discuss the tax math, let's get Amit Maheshwari, international tax expert, to join in. Amit, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. First up, for the clarification of all our viewers, there was an amendment that was made during the budget. So there is a lot of to and fro and confusion with regards to, does this surcharge come in over and above, or the slabs which were announced earlier are the ones which actually get nullified, and this will be a flat 12% surcharge that will be charged on the total income earned or on the total profit. Help the viewers understand what is this amendment actually meant to do in terms of their calculations.
So, hi, thanks for inviting me. So this particular amendment is only related to the tax on buybacks. It's not for other incomes. On the tax on buybacks, they have come out with the capping of the surcharge at 12%. And like you rightly said, it would impact the small and medium taxpayers. So individuals having income less than 1 crore, they are going to be impacted by this because that is higher than what the surcharge that was applicable to them. And for people who are earning more, there is a reduction. However, just yesterday, there was a post from the tax department on the social media handle saying that this particular capping is only for promoter entities and not for other individual shareholders. So that's the very latest news which has just come yesterday, and that's on the social media handle, not followed by a formal clarification or press release. So considering what they've said is correct, I think this is applicable only for promoter entities and the additional tax which promoter entities had to pay. So the individual shareholders can continue to be governed by the surcharges, what is applicable to them, as well as the companies which are non-promoter entities. But that is, as you rightly said, there was a confusion. There's a lot of to and fro, and as such, we also don't have a formal clarification on this. So there has been interpretations going around, and
interesting
seems to be causing a confusion.
Okay, Amit, so therefore from that perspective, just so that we're all on the same page, assuming that this is only to do with promoter entities, what is the extant rule that will come into play for individuals, for most individuals, because ultimately those are the people that are watching you right now. So for most individuals that participate in a buyback, what is the tax treatment and how will it work from the 1st of April?
So that would be taxed, buybacks would be taxed as capital gains. Earlier, what was happening was that buyback was getting taxed as dividends, and the capital loss and the cost of acquisition was allowed as a capital loss, which was carried forward. So that was clearly not in the benefit of individual shareholders. Now, the difference between the cost of acquisition as well as the buyback price, that would be taxed as capital gains, and the normal surcharges which are applicable on them would be applicable. And of course, we have the short-term and the long-term rates which are applicable for individuals. So that is again, but I just wanted to say that buyback still is lucrative, and obviously you have various reasons for doing a buyback. So you have it obviously, I mean, you can't really compare it with a dividend. That's what I wanted to say.
All right. Thanks so much for getting us those details, and we'll have to get some clarification as to what exactly this has meant, and perhaps we'll get that today. Thanks so much, Amit, for taking the time. Now, as rules change from the 1st of April, IT giants sitting on large cash piles and payouts already high, the question is, will IT companies rush back to do buybacks? And what Amit has just pointed out, it might still be lucrative, and Jasmeet joining in to tell you about what the context is. Jasmeet?
Well, Alex, very good morning and thank you for that. If you look at the overall IT as a pack, they have been heavily into buybacks. If you look at the past data, with the new change in the rule from April 1st, where the buybacks will be charged at a flat rate of 12.5 versus earlier as high as 35% depending on the tax slab, this will be a positive up move for the IT companies to go ahead and do more buybacks. If you look at the past buyback data, 2025 saw a drop of 79% in terms of buyback when compared to 2024. And the overall buybacks in 2025 were at 10 buybacks versus almost 47 in 2024. So 2025 was a year which saw like least buybacks coming in over last few years. In terms of IT, we do know that 2024 was the only year where no IT company has done any buyback. While 2025, we saw the major buyback coming in from the Infosys of 18,000 odd crore, the biggest one so far. Now, if you look at the overall IT giants, they generally return 80% of their PAT back to the shareholders in terms of dividends and buybacks. That's why the buyback option becomes more viable for IT giants. If we look at the historical data of buybacks of how ITs have done in the past, we do see that Infosys, TCS and Wipro have done nearly 5 buybacks in last 10 years. TCS returning highest amount, nearly 83,000 back to the shareholders, with Infosys nearly 57,000 odd crore, with Wipro at 45,000 odd crores. Now, if you look at the current cash balance as of Q3, which company has what cash and investment as of now and how much can they invest in buyback? If you look at the data, we do see that Infosys with the highest cash amount at 62,000 crore, followed by Wipro at 57,000 crore, and then comes the Infosys 35,000 odd crores. Well, as for analysts who might rush first in terms of the overall IT pack to do the buybacks, we have been like in Wipro, where the analysts flag Wipro can be the first company to go ahead and do buybacks in the coming time. Further, they also make a note that the Wipro's overall PAT return ratio remains healthy and the growth also remains stable for the company. So it's a wait and watch, followed by Wipro, which all companies can go ahead and take the buyback route to return back the additional cash back to the investors.
Got it. Okay, all right. Thanks so much for getting us those details. Now, let me go across to Parag Thakkar, because while we've been speaking about IT and buybacks, and by the way, that might be a storm in a teacup, because a clarification coming through from the tax department is indeed talking about this flat rate as something that is only applicable to promoter entities. So it would not really affect you as an individual. In fact, if anything, you will pay capital gains on it. And so for most people in the higher tax rates of 30% or thereabouts, or even 20%, it would be beneficial, because you're talking about 12.5% rate that applies for long-term capital gains. Going to you, Parag Bhai, on the math that you were talking about with regard to the oil marketing companies, it is pretty stark, isn't it?
Yeah. So basically, first of all, I have got the clarification that I think, and you can check, it is 10 rupees reduction in excise duty on both petrol and diesel. And this will, at current Brent price of above $100, this will allow OMCs to earn 0.9 rupees per litre in terms of gross margin, while the historical average is 12.5. So the historical, to go to historical average, Brent has to either come down or this excise duty reduction has to increase. Now for government, there is a hit of 14,000 crore per month. Okay. So till this excise duty lasts, there is a 14,000 crore hit per month. So if you annualize it, it becomes 1,70,000 crore. But I hope don't have to annualize. I hope that it remains for maximum 2 months or 3 months.
I mean, we're talking about weeks at this moment as being the optimistic idea, but no one knows how that is going to pan out.
So it is 14,000 crore hit for government.
Hit for the government is one thing, but Parag Bhai, the recoveries for the oil marketing companies are only scratching the surface, aren't they?
Yeah. So basically, it is just keeping them afloat. It is just providing them with the support, as you call it.
Interesting. Okay, so that's something.
But stocks have fallen, so they might go up a bit.
So you were in the camp, Kush, that said that you shouldn't maybe trade oil marketing companies, right? Because of the kind of volatility. Is that relevant today as well?
So first of all, very good morning.
Good morning. Sorry.
That's all right. I don't remember the last time I initiated a call on OMCs. And I mean that in a very, very long time. I haven't initiated one, precisely for this reason. If the domestic control and the regulations weren't enough, you add a layer of global crude volatility to it, and things just go haywire even more. Plus, in the long run, a lot of these names haven't really been big money spinners, right? So, because of these reasons, we can play the very near-term trends, but because I don't get a structural trend, I tend to avoid calls on these.
Okay, so that's with regards to where OMCs are concerned. Parag Bhai, any quick view when it comes to IT companies as well? We've spoken about the buybacks. We were initially thinking that there could be an impact when it comes to retail investors. And you have Infosys, which has gone and made acquisitions right now, which seem to be very interesting.
Yes.
Your view on an Infosys and the sector as a whole now?
So basically, I continue to maintain the view that on large cap IT names, I remain constructive. Given the dividend yields of about 4.5%, and now they are investing also. Like we saw that HCL Tech has invested in that Indian AI startup, right, Sarvam. and that was also good, and now Infosys. So they are doing what is required to do. They are investing in the business, doing acquisitions also, and at the same time they'll continue to give good payouts in my view, because the free cash flows are very strong, and current cash reserves are also very strong.
Okay, so that's with regards to IT companies and Infosys as well. Kush, your top picks at this hour.
Sure. Going with all longs, that's the kind of optimism I still have despite whatever GIFT Nifty is suggesting. So TD Power, Strides Pharma and Premier Energies is an update, by the way, and we'll come to that. TD Power for targets of 905, 930 and a stop loss at the 860 mark is a long call. Also Strides Pharma, this one's had a good run already but could well continue. 960, 990 are your targets. 899 is where you keep that stop loss. Premier Energies had a good run on Wednesday. We spoke about that as a call. An update on this, 930, 945 are your revised targets, and now you trail your stop losses higher to 900.
Okay, so those are the topics coming in from Kush as we speak. Two companies that we should be talking about from the defense pack is a Bharat Dynamics, and you have HAL. Now, HAL is on the back of the 500 crore order that they could be getting basis the new Udan scheme, and Bharat Dynamics as well on the back of the manufacturing tie-up that they've done. Let me head across to Parag Bhai to take a quick question. HAL, Bharat Dynamics, I mean, defense is not something which but basis the announcements that are coming so far, and where valuations stack up for them, what would you have to do?
So Bharat Dynamics I don't track, so that I don't have idea. HAL, of course, the stock price has fallen too much, so it is oversold. But this order value of 500 crore means actually nothing for HAL in my view. It's a very large entity, and it has already got one single order of 62,000 crore in the past. So 500 crore doesn't mean anything. And of course, within the defense pack, I have always maintained that BEL is the stock to go in my view. And of course, the BEL or stocks like Bharti Airtel, that will provide you good defense in current environment.
Yeah, fair call, Parag Bhai, but the idea of this question also was that while BEL is a great stock, can BDL also be one because of this
BDL I don't track, that's why I'm not giving my view on BDL.
I hear you, okay. But I wonder if there is a chart possibility out here. So Bharat Dynamics, very quickly, Kush Gora.
No, I'd avoid that. If anything, then MTAR Tech is something that you can consider from this pack.
Okay, our guests are not wanting to venture down onto a BDL right now, and fair, if they don't track it, they don't want to comment on it. But by the way, guys, just one clarification here. And as of now, what we as NDTV Profit are sticking to is that the prices on petrol have been cut to 0 and on diesel at 3 rupees. Because that is what the print of the PPAC government website says so. We are trying to confirm this from government sources as well, but as things stand, from what we have read on the government website, it is cut to 0 or nil for petrol and up to 3 rupees for diesel. So keep that at the back of your mind when you're trying to think of this math. But as Parag Bhai has already mentioned, that the hit is more to the exchequer. There is some positivity for OMCs. Remember, Naira had raised prices, and therefore the belief was that it will be a negative development for OMCs. This kind of becomes an antidote. It will be interesting to see on a bad day, what do the oil marketing companies do. Remember, crude uptick as well is also a negative. So it's a very difficult call to make on oil marketing companies today. Maybe what is easier to do is have a call on Sagility. Simply because there's yet another brokerage or set of brokerages which have come out with a positive view, because Sagility itself has reiterated the medium-term growth outlook guided by a shift towards platform-led and AI-driven services. Jasmeet has more details on this. Jasmeet.
Well, thank you for that. As rightly said, the stock was already buzzing in trade in the previous trading session on the back of that Nomura's note on the particular counter. If you look at the overall, management comes out and gives out their key takeaways from the analysts there. Now, what they say is they reiterate the guidance of low double-digit to mid-teens going ahead. While further, the management also sees the shift coming in from the employee-based revenue to more of a platform-based revenue going ahead. While they also see the overall AI being a structural shift for the management, and that's what they've been adopting, and they expect to deliver 70 to 80% back to the clients. While the company also sees the overall provider segment, which contributes nearly 10% of the revenue at the moment, to scale over time and see the growth. Further, the company also notes that the overall US pressure, which is being faced by the US insured companies on the clients of the companies, could lead to a tailwind for the company, given they would outsource more and would benefit the company going ahead. While further, they also state that the management focus remains on capability-led acquisitions going ahead. They lastly also spoke on the overall growth to come in the near term from client acquisitions as well as the mid-sized market expansions. So all in all, it's a wait and watch of how does the Q4 pans out for the company going ahead.
All right, Jasmeet, thanks so much for that. And Sagility is something that you should watch out for already. On Wednesday, it had run up quite substantially, close to 7%.
Was a stock of the day.
It was a stock of the day, yeah, it moved up quite dramatically. But moving to the pharmaceutical space, and this is a space that is happening, right? You have Dr. Reddy's Laboratories that is facing a legal setback in the booming weight loss drug market. The Delhi High Court has asked the company to pause the rollout of its new brand, and pay attention to this, Olimvic, after Novo Nordisk argued that the name sounds too close to its blockbuster drug Ozempic. My colleague Nimit is joining in to tell you about the two. Nimit, challenge for you first. Say the two drugs quickly 5 times.
Olimvic, Ozempic, Olimvic, Ozempic.
Okay, stop. I was joking. I was joking. What's this about?
No, but it's absolutely right. The rollout of these drugs was looking like it's going to be easy on March 20th when all the patents for Novo Nordisk expired, but it's not going to be as easy as it looks. All the legal hurdles that are coming through now, the latest being Dr. Reddy's, as you said, in court today over its generic version of the semaglutide drug Olimvic. Now, of course, this sounds similar to Ozempic, which the Delhi High Court also said that it sounds phonetically very similar to Ozempic, and it'll have to consider changing its name if it wants to avoid a permanent stay on all manufacturing, sale and distribution of its drugs. So it's coming to court today after taking instructions from its management to tell the court whether it's going to change the name or whether it's going to fight it out with the Olimvic name, which clearly the judge says, I'm going to definitely almost pass a stay. The judge's words were very harsh towards Dr. Reddy's here. What is also going to see is that this is separate from the patent case that is also going on between the same two companies, Novo Nordisk and Dr. Reddy's right now. That is also playing out separately. Novo Nordisk has also filed cases against Torrent Pharma. There's a case with Natco Pharma. So it's going to be a long time before we actually see the rollout of these generic semaglutide drugs for the market generally. Today, Dr. Reddy's is going to let us know whether they're going to continue with that Olimvic name.
All right, thanks so much, Nimit, for that. And let me go across to Parag Bhai on what he thinks about this. And we've asked you, Parag Bhai, on GLP-1 quite a few times, and specifically on Dr. Reddy's and the way that it's playing this, and not just GLP-1, it's other formulations as well. The issues that it has had with pricing in the US, all of those things put together, how does it look right now?
So basically, we don't own Dr. Reddy as of now. The only thing is that Revlimid was providing a very good cash flow and profitability, and now it is going away. What we saw is that at least 2 to 3 quarters it will take to fill this vacuum. Until then, market will lose its patience, and that's why stock is not doing anything, right? So we are waiting for one good product like Revlimid, which will replace Revlimid's revenue and profitability and cash flows. Otherwise, Dr. Reddy looks like a good buy at this price, good valuations, very good management, and strong balance sheet.
Yeah, it'll be very interesting to see how the rates start off. In fact, the pre-open rates are about to kick in. So let's just get those rates up before we get to the herd on the street conversation with Sumit. But the opening ticks and the Nifty 50 is independent. Let's get the OMCs because that's one big area which has got massive news flow this morning. Probably the highest news flow. Okay. Will it be 10% higher? Okay,
yes,
BPHP, IOC, all three look like 10% higher. I really doubt this will happen though.
Yeah, I'm sure they'll settle down.
Yeah, they should settle down. No, so yes, I'm going to Sumit in a minute. Just mark a couple of other stocks. So the BPHP IOC is one. Also, let's get Azad Engineering up on the screen and see what that one is doing in the morning because it's got a whiff of good news for itself. 6% higher for that one, keep an eye out. And Sagility had this big news flow, so keep an eye out for that one too. The analysts meet and whether there is an impact on that one. No, not really. Okay, Rupee breaches 94 and that's the other big news. And no, don't be surprised. I mean, the trajectory could well continue. Okay, before we move any further, let's get in Sumit with the chatter from the dealing room. Sumit, is the conversation and the nature of the chatter slightly more circumspect relative to Wednesday?
It's largely neutral because after a couple of days of gain, again we are seeing a downtick. So sell on rise continues to be the strategy, and it's not that conversations or chatter are not that optimistic as of now overall in the dealing room, but few stock specific action. Firstly, Granules and Shilpa Medicare. There are buy flows on large HNI desks. Dealers indicate that inspection will soon begin for Granules Gagillapur unit, which is one of the key plans for the company, and if a positive outcome comes in, then that could be beneficial for Shilpa Medicare as well. So keep an eye out for both the counters. For Voltas, the stock has been buzzing into it. Dealers are indicating that the company has implemented price hikes, and this will be effective from the 1st of April. Around 7.5 to 12% price hike in room AC, 4 to 5% in refrigerators, and 8 to 10% when it comes to washers and coolers. For Sun Pharma, there are some sell flows on the large HNI desk at higher levels. Dealers are expecting some negative news flow that could come in for this counter, so keep an eye out for Sun Pharma as well. And then there was SBI, IndusInd Bank and Jubilant Food. There are buy flows on institutional desk at lower levels, and delivery volumes were also on the higher side for these counters. And Shriram Finance was part of our segment on March 25th, where we did indicate that a CCI approval is expected. And yesterday, the company has announced that they have received the CCI approval for the acquisition that was announced earlier.
All right, thanks so much, Amit, for getting us those details. Now, India's plans and ambitions in the chip-making space is well known, and the latest, of course, is that the country plans to unveil a more than 1 trillion rupee fund aimed at bolstering domestic chip-making capability, advancing its ambitious bid to become a global manufacturing hub. To talk about the prospects that this presents to the industry, we're joined this morning by Jairam P. Sampath of Keynes Tech. Mr. Sampath, thanks so much for taking the time, and give us a sense of how important this is in the context of the other big measures that the government has taken in the very recent past.
Yeah, good morning to you, and thank you for having me on the show. Fundamentally, the total cost profile of any electronic product contains these kinds of, let's say, electronic circuits, which are microcircuits and called more popularly known as chips. About 20 to 30% of the cost is devoted towards these. And they are not only the cost movers, obviously, eventually the cost movers become strategic movers, but they also contain technology. In the entire product, the technology is contained in these kinds of products. And to that extent, both cost and technology is driven by how much control you have on this particular infrastructure. And I think Government of India has done a great job. Already, I think ISM 1.0 promoted 4 companies, and I think now they had done an ECMS 2, which kind of helped downstream products. And now I think they have announced some bold measures. I'm sure these will also feed into industries, and I think we can look forward to some good business too, because the business profile is going to, in the medium term, short to medium term, change towards defense, aerospace, some of the high-tech industrial, some of the railways and those kinds of IT, high-end IT and so on. So I think it's pretty good.
Sounds really good. Mr. Sampath, any initial thoughts on how it will impact your own financials and how much you're going to be able to participate?
Yeah, so as far as we are concerned, in fact, one of the boldest moves that this company had done, much more than our existing gross block, was in investment into the OSAT facility at Sanand. And I'm happy to tell you that this month end it will get inaugurated. And we have already started sample supplies from that particular plant. We have acquired 3 clients. So this is definitely going to help in terms of getting the plant up to capacity working quickly. And so largest amount of gross block becoming productive is a very good news for the company. And so that's why I think that this is a good, we'll also probably have to hasten, make sure that next year is really all of these customers are on board, and then we started doing some good production. So it will definitely help in terms of at least an uptick of business of close to about 500 crores next year compared to what it was if there was no push available from the government side. So next year we look forward to getting this business on track in terms of cash flows and in terms of profitability and in terms of overall contribution to our consolidated financials.
Yeah. Mr. Sampath, this sounds incredible. Unfortunately, even though I want to spend the next 10 minutes speaking about the various prospects and more details about this, we're in the middle of the pre-open session. So allow me to come back to you in a short while, in a few days perhaps, to get more details on this. Thank you so much for taking the time.
Thank you. Thank you so much.
Okay, now Naveen Mathur, Director Commodity, Currency and Gift City, IFSC at Anand Rathi, joining in to talk about the rupee. We have breached substantially 94 rupees on the downside. Naveen, thanks so much for taking the time. How low can you go is a question.
Good morning, and thank you for having me on the call this morning. Means it's anybody's guess, honestly. Means the way the markets are behaving. The news coming out on the conflict in Middle East, the Iran, Israel, and the U.S. conflict means we don't know. Actually, means they are very controversial. Means I would say very differential thoughts coming in from the countries, the U.S. administration, Israel, and even Iran. So I think that uncertainty still looms pretty large. And therefore, the equity markets are not doing well. And with that, the FPI outflows continues to be strong in this particular month. So I think up till unless we don't see any ray of hope, particular certainty with respect to the ceasefire, the plan, everything, anybody's guess where the rupee should hold in terms of the price against the dollar.
Okay. Anybody's guess, I think that probably sums it up. Naveen, thanks so much for joining and giving us that perspective. There is fair degree of FI outflow amongst other things, and the macro looking the way it is. Don't be surprised if this were to continue further. Okay. A lot of people have turned cautious on the Indian markets as well. In fact, if you heard saw the UBS note on Wednesday, they were cautious. Now we've heard of Goldman Sachs as well as HSBC having their views on the Indian equity markets. And Puneet Johnson, with those two views as a part of the big brokerage call for the morning. Puneet, over to you.
Well, thank you for that. HSBC largely pointing out that a 20% rise in crude oil prices has a 1.5% impact on earnings. And hence, that is one of the key takeaways from the report. They have preferring defensive names at this point of time in their portfolio and stocks that look attractive after the recent weakness. So they've named some of them: Sun Pharma, Reliance, Bharti Airtel, as well as NTPC feature in that particular list. While stocks like Hindalco, Adani Ports, Godrej Consumers have also been caught, in this particular fire, but largely they don't see any material risk to growth, at least for these set of companies. For Goldman Sachs, it's a slightly more bearish tone that they are taking with their note, because they've downgraded Indian equities to a market weight amid the higher risk and volatility that we are seeing, essentially, as well as the longer essentially energy prices as well. They've said that they have been cutting the earnings cut by almost 9 percentage points over the next 2 years, and specifically in terms of names, they have also lowered the target price to 25,900 for the Nifty from almost 29,300 previously. So a more bearish tone, as I mentioned. And in terms of stocks, they've specifically mentioned they're overweight banks, staples, as well as telecom, while downgrading cyclicals as well as sectors like the durables and auto sectors as well. So they see an impending risk to the cyclicals in the discretionary space, and hence a more bearish tone compared to HSBC at this point of time by Goldman Sachs.
Got it. All right. Thanks so much, Puneet, for getting us the details. We're joined this morning by Amardev Singh, Senior Vice President Research at Angel One. Amar, it's not looking like sharp cuts. And good morning. I'm glad to see that you're in Friday mood. But we're not seeing sharp cuts in the equity markets at the start, at least the pre-open session not suggesting that. But the breadth seems to be a tad bit weak. How would you trade this Friday?
Yeah, I would say that, one thing is very clear, that markets are definitely anticipating a resolution to the current ongoing conflict, because US is also caught on a, I would say, wrong footing this time, because none of its allies have come and none have really committed anything. So it's more of a war, and they have clearly underestimated Iran's tenacity and its resilience and capabilities. So that is something which is really markets are factoring in, that something should happen and negotiation should take place. But the stance that Iran has also taken, that and the points which they have put forth clearly shows that they are also in no mood to really relent and go out for everything in terms of acceptance. So I think that's where the markets are right now. But somewhere or the other, what we are seeing is on the downside. If you look at, there's definitely a buying interest coming in many of the stocks. As far as Nifty is concerned, Nifty is strongly supported around the 22,900, 23,000 level. That's a crucial short-term support for Nifty. But for Nifty, for any significant trend change, Nifty would have to sustain above the 23,400, 23,600 zone consistently. Then we could say that maybe the worst is over. One good and silver lining is that crude oil prices seem to have come off, and if they continue to trade lower, so that would be a big plus.
Yeah, but they're still well above $100 per barrel. Amar, I was surprised that you started the technical check with a check on geopolitics. But having said that, I guess everybody has to have an opinion today, right? But having said that, individual stocks that you're talking about this morning?
Yeah, so there are two stocks which I would like to talk about. One is from the NoSil. So this is one stock which has, I would say, defied some sort of correction. It did correct earlier, but then it has formed a very strong base. And despite the market correcting, this is one stock which has stood well and had gained significantly last week. And it seems to have formed a double bottom technically on the charts, on the longer term charts. So this is one stock one can look at a buying opportunity somewhere around the 155 levels or so for an upside target of 183 and a stop loss of 141. So this is one stock one can look at. And the other stock which I would like to talk about is from the medical space, and that is Thyrocare. So this again is one stock which seems to have formed a bottom, has corrected almost by 25-30%, is around very strong support zones. So there is a possibility that we could see the stock rallying towards the 400 mark. So for an upside target of 397, one can look at this stock with a stop loss of 341. So any pullback is a buying opportunity in these two stocks. But as I've been saying for quite some time, so it's more of a trading play, because some of these, except NoSil, which is very strongly on the intermediate term trend as well, Thyrocare is more of a pullback play. So one needs to keep that in mind.
Got it. All right. Coming to you, Kush, very quickly, we're just about a minute away. Last view on one key stock that you looked at after the pre-open session.
Yeah, let me give you two. I think Pharma's the flavor. So Strides and Ipca, these are the two stocks that should be on your radar.
Strides and Ipca should be on your radar. But Kush, you want to detail that out a bit? Any stop losses that people should keep?
Oh, yeah, sure.
I don't even know if they're long or short, by the way.
They're long, by the way. Strides was a call that we already made. 960, 990 are your targets. 899 is where you keep that stop loss. And on Ipca Labs, on the upside, you could see moves up until 1630 and about 1665. For stop losses, you have 1565. That's a good support zone.
Very interesting. Okay, viewers, keep in mind, we're starting off about 0.7% odd lower. So we will have a slow start. The question only is, do we drift lower as the weekend approaches, because the weekends are notorious? Or do we see value at circa this 23,000 level? A lot of brokerages have gone negative, by the way, because of the macro construct. So you got to bear that in mind as well. But here come the first rates. This Friday morning on Indian markets, very likely about 120 to 150 point downtick on the Nifty, and then we chart our course from there. 176 now, 198 now and counting. So about 1% lower or just about there. For the markets, the market breadth is weak, no surprises there. Mid caps and small caps would be starting off lower, 0.73% for the mid cap index. The small caps nearly 1% lower. So it's not started off well. Let's see what happens during the course of the day. Bring up the heat map and see what's happening to individual names. So, well, okay, IT, which was the big bugbear of Wednesday's start, is actually starting off well. TCS, Infosys, HCL, Tech, all three of them marginally in the green. Coal India in the green slightly, NTPC in the green too. Very defensive, the bent, and no surprise there. Now we are about 1% lower, by the way. What is correcting? Tata Motors PV, Bajaj Finance, L&T, Indigo yet again 1% lower. The risk of playing around with stocks like Interglobe Aviation and any of the crude sensitives around these days is that you do not know which way crude will move, and therefore the stock's fortunes. I fear for those who went long or trade long on Indigo, for example, on Wednesday, thinking that things were resolving, only to see this downtick today. I don't quite have the OMCs in the top 50 list, but I'm sure Alex, as he marks some of those names, will see some movements there. But guys, it is IT and a very defensive start on the morning.
And we've sold into that initial downtick that we saw, and you've pointed that out well. It's the breadth that is not looking particularly great this morning either, right? And you have the broader markets, the mid-cap index losing about 1%, the small-cap index also 1%, so it's red across the board. And if I look at the 500 stocks and that benchmark, then you have just about a tenth of the constituents that are trading in the green right now. And among the worst hit, you have Bank of Baroda, you have PCBL, which was one of the top gainers on Wednesday. I have to hesitate before I say Wednesday because it feels like it's been a weekend in the middle. Brainbees losing ground, Triveni Engineering, Minda Corporation all over 3% or thereabouts. Oracle Fin is doing okay. Brigade on the back of that real estate launch that it has done in Bengaluru, building on gains from Wednesday as well, doing particularly well in trade today. But it is the oil marketing companies that are up and about. They're not necessarily gaining 7-8% or 10% that was initially indicated in the pre-open session, but it's healthy, up 3% or thereabouts, more a relief than anything else from the kind of pain that they were likely incurring on the financials, and this is certainly something that is positive. HEG and Graphite, both the graphite manufacturers are up and about in trade today. Graphite, for example, is up as much as 4.6%, and I'm going to go to Kush in just a bit to find out if there's a trade here. Praj Industries, oil electric, also up about 1.8% or thereabouts. So there are a few stocks that are reacting to news, but it's broadly a sentimentally negative day where the benchmark is now trading with cuts of over 1%. Specifically on HEG and Graphite, would you trade these?
So, Alex, there is definitely momentum, can't be denied, and I don't mean that just today. You look at the last 3 sessions and these stocks have been doing rather well. Both of these stocks have given a breakout above a falling trend line, a falling channel rather. But there are some hurdles along the way. So for a Graphite, immediate resistances at the 635, 640 mark. HEG is already at the 200-day moving average, slight slip from the high point of the day, even if it's been just 3 minutes. So my suggestion, it's more of a hold rather than a buy now, because they've already had two sessions of moves and one big one today. So I would suggest a hold on Graphite. TSL, trailing stop loss on this one would be 605, and if you're holding HEG, then a stop loss at the 510, 515 zone.
Okay, so that's with regards to where the graphite companies go. What's interesting is the profit booking that's coming in on a Shriram Finance, Bajaj Finance, HDFC Bank today, Bajaj FinServ. All of these financials which were actually contributing to the kind of gains that we saw in the last couple of trading sessions are seeing profit booking in today's session as well. Indigo is another one which is down in trade. Apart from this, Sula Vineyards, now that is interesting. I mean, that stock has been beaten down, but they've signed a definitive agreement with Moe to acquire Chandon's wine production facility and estate in Dindori. Whether this can give it the kind of respite it needs is the key question. But on the charts, Kush, anything on a Sula Vineyards?
Interesting setup. I have to give it that, because there has been an uptick in the last few sessions, volume-backed uptick, and it is starting to now hit that 20-day moving average. If it closes above that, there's a good possibility that the massively favorable risk-reward ratio combined with the positive trigger could actually take the stock higher. So I'd be keen on this one. If anyone does enter, I suggest a stop loss at the 145 mark. But on the flip side, there's also GM Breweries consolidation on the verge of breakout within the same space, on the verge of breakout. So if you want to consider, that is also a trade that you can consider. Stop loss around the 1020 mark. A close above 1060 will actually give it a fillip for 1100 and higher levels.
We are now on the verge of breaking 23,000, by the way. Amar, I'm asking you because we are close to the weekend, and in the anticipation of people lightening up some of the longs that they may have had on Tuesday and Wednesday, would you go short on the Nifty at the current levels?
Going short in the Nifty at the current levels might not be a very good idea, because there could be some sort of maybe a discussion. If one needs to go short or wishes to go short, then ideally 23,200, 300 is a level to watch out for on the Nifty for the short side. And we've just started the day. We might see a pullback also. So I would say going short at the current levels might not have the risk-reward ratio in one's favor. But overall, the trend has been very weak and continues to remain weak. So for Nifty, it's been more or less a sell-on rallies only till the time we see consolidation and stock moving and Nifty moving above the 23,400 to 500.
Ola Electric has some gains today, so keep that in mind. But HEG Graphite, as Hiral pointed out rightly, the showstoppers of the morning. Brigade has a 9% uptick. Guys, any news that we missed on Brigade? Up about 9%?
They've signed 700 crore GDP.
I pointed it was in my list today. I'm so sorry, I missed it. Okay. In which case, the question to ask Parag Bhai is, Parag Bhai, any of these southern-based real estate players, because all of them, Parag Bhai, have come in and said that the GCCs are more than compensating for any kind of demand loss because of any potential IT slowdown.
Correct. So basically, real estate stocks have fallen significantly because real estate sales have also a little bit slowed down, definitely. At least in cities like Bombay, where you have an impact of portfolio value erosion boiling down to even real estate purchases. But of course, tier 2, tier 3 cities and many other cities which are not so much connected with stock markets will have some inherent demand, right? So I mean, the stocks have corrected significantly. It's a good space to start looking at. But when oil rises, there's an inflationary fear, and so there is a fear of increasing interest rates also, which on a macro basis is negative for real estate.
Having said that, from the entire real estate pack, would it be the South-based players or would you stick to your DLF?
DLF or Oberoi kind of names. Or Godrej Properties, I am looking at it very closely because it has corrected from 2,500 to 1,500.
Okay, and no, it is the Lone Ranger. See me, pull that chart up again. Brigade Enterprises, the Lone Ranger in the realty pack today. Look at it, everything else is losing ground and this one compensating for all of that, up about 10%. As we pointed out, as Parag Bhai also said, it is a stock that is corrected very sharply. So therefore, would you trade it on the basis of Wednesday's move and today's move?
Brigade?
Yeah.
Not really, because I think the breakouts already come today. There was the build-up that happened in the last two sessions, and then now today you're seeing that big move, that big breakout. This is more of a hold. In fact, if you did buy it at lower levels, I would suggest profit booking because the primary trend for a lot of these stocks, and Brigade included, remains negative. So I wouldn't be surprised to see if some kind of selling pressure comes in at higher levels. And as we've seen in the recent past, a lot of pockets of strength wherever anyone could find any kind of profits, that's been taken off the table. So there is a possibility that you could see some profit booking along the way on Brigade. So I wouldn't suggest a fresh entry.
Okay, specifically on IT, let's talk about all of the frontline counters, right? These are standing up from the front at for the Nifty 50. TCS, HCL Tech, Infi, Wipro, Techem. In the first 6 gainers, these are the standouts, right? The other one beyond that in the top 6 is currently ONGC. So Amardev Singh, if you were to trade the IT pack, would you trade the index? Would you trade individual names? And how would you trade?
I would look at Infosys from a trading perspective because the stock has corrected significantly, and there is a possibility that we could see the stock moving towards the 1330, 1340 levels, and the downside seems to be very strongly protected around the 1240, 1250 level. So I think the worst might be over for the IT, and the stocks could witness a bounce back from the current levels.
Okay, so Amardev Singh, on that note, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Just before we let our guests go and get a conversation going with an IT firm, Parag Thakkar, if people have to deploy cash, maybe it helps to deploy in the defensive names, though nobody is obliged to definitely, unlike a portfolio manager who has to put money to work.
Yeah.
So for example, unlike you, because you have a portfolio performance to show, a retail investor doesn't have to.
Correct.
Should you advise a retail investor to buy into any of the defensives? For example, let's say an Airtel.
So Bharti Airtel has been one of my large holdings. It is a very large holding, and I would like to say that, see, in a market where you earn just in India, for example, you are earning just $2.5 per month as a ARPU. And this company can make 60,000 crore free cash flow and 1,23,000 crore EBITDA out of that. And now Jio IPO can come for next 3 to 6 months, right? Now that is the valuation which is being talked about is 12 times EBITDA. And Bharti is right now trading at 9 times EBITDA. So there is a good, and plus Bharati's business is not affected by whatever is going on in the world. In fact, the use of mobile and the data is only going to increase, right? And plus they are gaining subscribers also. So I think this is a very, very efficient company, run very well in the, I would say, intense competition scenario also. They fought back and they've regained their market share. And free cash flow 60,000 crores. And I think, so I would say that this is a great defensive play. In fact, when HSBC and Goldman Sachs note was also highlighted, I saw that in both cases, Bharti Airtel was highlighted as a defensive name to go with. Because actually it is not affected by all this, whatever is going on. Diesel price increase, for industrial diesel, it has gone up by 22 rupees per litre, which will just have a 1% impact on its EBITDA.
Okay. So, well, Parag
apart
Thakkar
from
is
IT, of course, which we have spoken many times.
Got it. Yeah, sure. Okay. Gentlemen, both of you, thank you so much for taking the time out. Have a good Friday. Have a great weekend. Of course, we'll look forward to the IPL starting as well. So, I'm sure we'll get some quips about that on Monday morning. But in focus, as we move on from pure markets to, well, some corporate conversations as well, Mastek, certainly in focus. IT firm, it's also gotten a large UK government contract worth over 1,000 crore rupees, offering some support amidst the recent weaknesses as well. In news flow, before we get the management, Jasmeet Johnson with the key details. Jasmeet.
Well, thank you for that. The stock remains in focus on the back of that recent deal which we see in the company. In the past month, the company has nearly won 3 orders worth about 1,800 odd crores. While the first one is from the UK government, that's about the financial contract, about £15 million for 2 years. The second contract is from the Home Office at last. The value of this contract is about £85 million, and this is about 4,000 odd crores. While the third one is for 5 years. It's from Home Office biometric contract, about £49 million for the company. If we look at the stock performance, the stock is nearly down 50%. If we look at the 52-week high levels, at currently trading at 1,400 odd rupees. Now, in terms of the other key metric, Q3 did see a slight downtick in terms of the overall performance. They faced and pressure coming from the furloughs as well as the overall pending project ramp-ups. While secondly, the margins did improve in the Q3 on the back of that better AI operational efficiency as per the management. If we look at the order book, it remains healthy and sees an uptick of 6% in the previous quarter. While the key question remains by the management is how does the overall UK geography shift from here on given the win of the new contracts. Secondly, whenever there's a new contract win, it impacts the margin in terms of the ramp up done. So can we see any near-term pressure in the margin in the Q4? That's something to watch out for, which will be key question for the management.
Okay, thank you so much for that, Jasmeet. That sets up the context. But let's get in Umang Nahata, CEO at Mastek. Umang, good morning and welcome to the show. Always a pleasure to speak to you. The deal wins that we're seeing in terms of the quarter itself and the concentration coming in from the UK right now, the momentum seems to be pretty strong. What is the sense that you're picking up? Because everyone's eyes are on IT as a sector. When will deal wins actually materialize into execution, not only for a Mastek but for the industry as a whole? What's the feeler that you're getting?
So I think the deal momentum, especially with UK, continues to be very active. We've been stating this consistently that the demand cycle in UK is very positive, very optimistic. If you look at these deals that we've currently won, one is a renewal of an existing contract. It's a public sector business that we have has a very long-term stable view. So again, we've renewed them for another 3+2 years. And that gives us quite a good long runway with them. The other deal that we had was a net new deal. It's a new financial conduct authority. It's our the second large deal that we have had in the financial services area. In general, I would say the deal momentum is pretty active across all geographies, other than Middle East, where it's a little deferred. It was active, I would say, a few weeks back. But while the discussions are very active, people are, I think, deferring the decision making for a few more days or weeks. So we'll see how it pans out in the next few days. Execution is where the whole focus is. Next few months and quarters is going to be really head down execution of the backlog, as well as continued execution on trying to find net new business. So I think deal momentum and general market demand seems to be quite positive.
Morning, Umang. Alex here. I'm going to ask you a slightly broader question, and this is from the perspective of how you are executing and whether over the course of the last 3 to 6 months things have changed. Your financials suggested that there was AI-led productivity benefits that have improved margins. But I'm trying to understand, I'm asking whether you can describe what is actually happening right now. For example, if you take these 3 large UK deals, how would you execute it differently now compared with how you might have executed it 2 or 3 years back in terms of the manpower that you require or the resources that you're going to be utilizing?
Yeah, Alex, it's a great question. So the execution approach for IT in general, and of course for our businesses in UK and globally, has a lot of AI assisted execution today. So a lot of the execution that we do has AI assisted. It is across all areas, whether it is application modernization or testing or managed services or implementation services across the board. So a lot of that delivery continues to be AI assisted. And as you do AI assisted delivery, either the resource requirement comes down or the time frame in which you execute starts to come down. And both of them definitely allow for more efficiency gains. So that's what is really pushing some of this benefit to our bottom line and a lot more to the efficiency that our clients are starting to gain. Specifically on these contracts that we have in the UK that we are looking at, most of them are time and material or contracts where we are working in rainbow teams with the client and our resources working together. Here, what is going to change is the kind of composition of team that we would have had. So there's more like bottle-shaped pyramid is what is emerging, where you have a top architecture layer and then a young team who's supporting a lot of the coding and execution. So that kind of pyramid change is what we are seeing in terms of the teams that go out and execute this. There's a lot more of innovation thinking that is also going on. So many of these programs are also framework engineering programs, which basically set the roadmap for the future projects or technology landscape that the client would have. And these projects are already discussing of how would the client utilize AI in future. So is there data readiness there? Is there architecture readiness there? Have they built up the right compliances systems in place and so on? So a lot of the work that we are doing is also around preparing the organizations from a readiness for executing large-scale AI.
Yeah.
And the way we execute is also using AI-assisted technology today.
I understand. So then a follow-up to that then, Umang, because what I've gotten from that answer, and you've described it very well, is that there are 2 levers that you can use or 2 outcomes are possible, right? On the one hand, you're going to be able to take up more deals, and so there is a tailwind for revenue growth. On the other hand, you can do it more productively, so you will earn more per deal. So how is that going to affect, will it affect first of all fourth quarter, and will that be ramped up over the course of FY27? What will we see in the numbers, Umang?
So generally the direction is going to be positive in terms of growth for us, sequential growth as we look at from where we are heading. That's where we believe the whole momentum is. Having said that, there continues to be surprises that we keep getting on. So for example, we were really heading for a decent quarter for Q4, but now with the developments in the geopolitics over the last few weeks, some of our Middle East momentum has definitely seen some slowness in execution as well as slowness in signing up of some of the deals. But in general, if you look at a trend, we see decent tailwind in terms of net new order booking. And there's also good balance between the efficiency gain share, what we are giving to our clients versus what we are able to retain for ourselves. Having said that, the amount of investments that we have to make now to continuously evolve, I mean, it's a very disruptive time period, right? So you will have to significantly change your offerings, your approach, the assets that you have. It's a great time to really level up the differentiation that mid-tier companies like us had with the larger players. And a lot of time and energy is being spent on trying to create those differentiations, especially the domain-led differentiations that could allow us to really catch up in terms of the vertical capabilities that we have as compared to some of the other larger or other domain-focused players in the market. So it's an interesting market. I think it will continue to grow, not very fast, but steady growth with steady bottom line.
Umang, you are almost saying that all of the recent developments give you a seat at a table which you probably previously didn't have. Would that be the right way to look at it? And therefore, if so, what are the upsides in a steady growth environment to something like this?
Oh, so very much, I think you've pointed on the right area. A lot of the discussions today, the technical differentiation that we had between us and some of the larger players, those are almost marginalized. There's hardly any capability difference because AI allows us to deliver it with the same speed, with the similar degree of quality and efficiency that, based on whatever tools that some of our other peers had built over years. So that technical differentiation is gone. It's a lot more about cultural being, available, flexibility that we are able to deliver. Also a lot more about innovation. So clearly there is the opportunities that we get are much higher. The Financial Conduct Authority is a good example. It's a new foray for us in banking and financial services. This is the second large deal that we have secured after Bank of England. And it's a new vertical area. Usually BFSI was dominated by some of the larger players. But with the kind of innovation and capability differentiation going out, more flexible, agile players are now, customers are really liking to participate with them. And that's definitely giving us the room to do more business with them. I think there are interesting upsides that we are discussing. A lot of our US business and EMEA business had a lot of fundamental corrections that we were going through last year. We believe we've made all the corrections that we had to. We've got the business back in shape in terms of people, in terms of approach, in terms of capability. And we are looking forward to some interesting upsides as we go forward in the year.
Okay. Umang, the last question from my side is, we've spoken about the dependency in terms of UK and how big that market is. I want to talk to you about where the US growth and leadership goes, because that's where we've seen a churn that has happened. North America as a region has seen a decline for you, but now with the leadership restructuring, appointment from an ex-Google techie coming in there, are you expecting to see US again reignite specifically from the healthcare growth perspective?
Yeah, I think we've spent a lot of the last few quarters in resetting our US business, right from the team structure to our GTM to the capability structure, as well as getting right people onboarded from the leadership to the people on our board. Mark, who has joined us on our North America board. So I would feel we have reset the fundamentals extremely well. And healthcare and life sciences continues to be a prime focus area for us. And we look forward, we're already actually engaging with a lot new enterprise clients in that space already. So the number of engagements or the initial indicators are clearly starting to show some right direction and momentum. We had a healthy order book last quarter. We're looking for a healthy order book even in this quarter in US. And I think once we do a few quarters of healthy order book, that will really set the direction for good turnaround of the North America business.
Got it. On that note, Umang, thanks so much for taking the time and pleasure speaking with you. Wish you all the best heading into the end of the financial year as well. Yeah. All right, let's get you a few comments that have come through from the oil minister. And this is a post that he sent out on social media on the platform X. And he said a few things, right? He said international crude prices are going through the roof right now, and I mean, that's, if anything, that's a bit of an understatement. It's well over $100 per barrel. Prime Minister has decided to take a hit on India's finances again. The government had two choices: either raise fuel prices or bear the brunt on finances. And he said that Indians should be insulated from international volatility. And the government has, in fact, taken a huge hit on tax revenues. They've levied export tax as international fuel prices surge. So this is a considered decision that has been taken by the government. I was referring to it earlier. From an economic standpoint, remember that the Reserve Bank of India is an inflation targeting central bank. And so as soon as you have prices at the till, as Neeraj likes to say, going up, you will have a very sudden, a very sharp bleed through on inflation across the board. Not just the fact that it has a significant component in the CPI basket, but everything that is transport oriented or even power generation oriented that will have diesel gensets, etc., will start showing an increase as soon as the next month reading, right? So this is something that the government is very cognizant of. Ultimately, you will have a spike in inflation and you'll have the Reserve Bank of India that has to react very, very quickly.
and the Reserve Bank of India might have to react very, very quickly, even to the currency. Though, I mean, will we have to spend precious reserves defending the currency as well as reacting to inflationary pressures? Keep in mind, I mean, a lot of people believe rate hikes will not defend the rupee unless the real rates are negative. And for now, we don't have that. So maybe the Reserve Bank will be thinking that rate hikes will not be used to defend the rupee, but used at a point of time when inflationary pressures come in. And from the looks of it, we're bang in the midst of seeing inflation spike up.
And the other thing is also liquidity. Sorry, Hiral, one last point, right? Because in the situation where the RBI is not defending the rupee rate, that's what they say constantly, but if they step in to curtail volatility, they're doing it by selling dollars. And you're selling dollars, you're sucking out rupee from the system. And so that pulls out liquidity at a time when you were hoping that credit growth in the system would pick up. And you had several banks that came through, State Bank of India that came through and said it's growing faster than was earlier anticipated. I wonder whether that argument now gets dissipated.
I'm guessing the natural demand will come off a little bit for liquidity as well because of all that's happening right now.
Perhaps.
And to add to that, we're talking about the pressure, and we just have the numbers where the cut in terms of excise is translating into a 1.7 lakh crore hit to the government revenue. So you know what you're talking about. It's a 5% gross revenue impact to the government. And that's a big number to talk about as well. But moving on. Nazara Technologies is set to consider a fresh capital raise at its board meet to evaluate fundraising options. Now, before we speak to Nitish Mitrasen of Nazara Technologies, let's get in Parth to give us a bit more details, because recently they've announced an acquisition as well. Parth, good morning. What do you have for us?
Good morning, Hiral. So the board of directors of Nazara are going to meet on 30th of March 2026, and they will be considering raising capital via preferential allotment. They will be planning to issue either new equity shares or other convertible instruments, and this follows a series of recent global acquisitions. Recently, Nazara acquired 50% stake in Blue Tile Games and Best Play Systems, and this deal was valued at around 920 crores. Apart from this 50% acquisition, Nazara also has retains an option to acquire the additional 50% stake in both of these companies as well. So these kind of continuing acquisitions are causing significant outflows for the company. According to CLSA, the potential outflows for these kind of deals stand at around 2,800 crores. So these kind of it will be interesting to see how Nazara will be able to fund these kind of outflows, and because these frequent capital raises also puts in the risk of equity dilution for the existing shareholders.
So much for that. That puts things into perspective. Parth, let's get in Nitish. Nitish, good morning. Welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. You know, I know the fundraise is still slated right now. My question is the fundraise to actually meet your acquisition commitments?
Yes, sure. I think since Nazara is a cash flow generating company, most of our fundraisers are likely for funding partly or fully of our acquisitions. But I think the important point here to really understand is that the trajectory that Nazara is to really create a very large global gaming platform out of India. And our M&A playbook is working very well. We've been at it for many years and proven success. And I think this is a once in a lifetime opportunity for an Indian gaming company to, become a very respected global gaming giant. And this is why we continue to double down. There may be some dilution, but we are very mindful that any dilution that we do is highly cash accretive on an operating cash flow perspective on a per share basis. So I believe that we are on a very good trajectory and very excited with how things are playing out.
Okay, so Nitish, how much are you looking to raise in terms of the preferential allotment and an amount that is going to be comfortable for the future commitments then?
Yeah, I think our board will review that number in the meeting and then take a call. So I don't want to put a number out right now.
Okay, and with regards to the kind of growth that you're looking at with the acquisition, is it going to be constantly inorganic growth that you will look at as a strategy versus the potential risk you're seeing with regards to equity dilution for the existing shareholders?
Yeah, let's just take a step back on this acquisition that we just announced of Blue Tile Games and Best Play Games. This company has done about 1,400 crores of revenue in 2025, which equals Nazara's own 9 months revenue for FY 2026. Even on a EBITDA level, the company that we are buying generated nearly 250 crores of EBITDA in 2025. Similar to, we did 177 crores for the 9 months of FY26. So as you can see, this is a business almost as big as the company, as big as Nazara, and will, on a pro forma basis, double our revenues and EBITDA going forward into FY27. So I think this is a very large move. It's a transformational move and a milestone moment for not only Nazara, but for the Indian gaming ecosystem. So yeah, I think we remain very excited, and let's see how it plays out.
Nitish, hi, good morning, Alex here. So this, the company that you're acquiring, and you've pointed out the kind of potential and the nature of the deal as well. I'm just trying to understand what you worked out on with regard to the trajectory that they've been describing and what you see it taking through in FY27 as well. How will it change the dynamics for Nazara in FY27 and heading into FY28? So if you look forward, not probably counting some of the acquisitions that you'll do along the way, and if you look 3 years down the line, what is the kind of trajectory that you see?
Yeah, so this company is a very interesting AI-driven, business. And AI is not just a buzzword or a story here, but really can be demonstrated in the numbers. The company has grown from $50 million revenue 3 years back to $150 million in FY25. So 3x growth in 3 years. And the beauty of it is they're doing 1,400 crores of revenue with only 45 people team, right? That really shows the power of AI. And the technology and know-how that they have on AI will also be absorbed into all the other studios and games that Nazara runs, benefiting us across the group. So I think that's a very important factor for us. There was a question earlier on organic versus inorganic. For us, it's always been, after an acquisition, the organic growth should happen. In the past, we've proven it multiple times, whether you take it from Kiddopia, when we acquired it was 15 crores revenue business. It became a 200 crore revenue business in about less than 3 years, and many other such examples. So I think we are very focused on driving organic growth, even on companies that we acquire. And we're seeing many other opportunities. So I think this is really that large platform. Coming to that FY27 number, if you do simple maths on a pro forma basis, our revenues and EBITDA will double. We will, of course, try and push harder. And 3 years out, I think Nazara is, again, I'll say, on a very strong trajectory to become a respected global gaming platform.
So, Nitish, I'll come back to my question with regards to dilution versus accretion. You mentioned some bit of it already.
Yes.
You focused earlier as well that you're going to look at cash flow per share from here on, right? How much equity dilution is expected from the current preferential issue, and how would this actually look like as compared to the projected cash flow accretion that you're looking at from the $100 million Spanish deal?
Yeah. So the way we are looking at funding transactions is, one is Nazara is already cash flow generating across all our businesses. So one is obviously cash that is accrued internally. That is our first priority to deploy. We've also generally been a zero debt company or an extremely low debt company, which means that we have potential to unlock low leverage debt. We will continue to be conservative on debt, but at the same time, there's still significant headroom for us to, unlock that aspect to fund some of our transactions. And our last resort, of course, is to do some equity dilution. In terms of cash flow accretive, I don't have, specific maths to share right now, but in principle, every transaction that we do, we have a high focus on seeing that the accretion of value to the shareholder is multiples of the level of dilution that they may face.
Quick follow-up. Do you have a target debt to equity ratio that the board is comfortable with? Because you are looking at faster M&As right now. Your recent one of the filings did mention that internal accruals and debt is what you would probably use in terms of capex, but
Yes.
you're a debt-free company. So is there a number that you would want to share?
I think at this point of time, we would look at a 1.5, 2 times EBITDA, not more than that. So continue to remain conservative in our approach. Our growth in Nazara over the years has really come by running a very stable platform. When others get disrupted, we have always taken advantage of it due to our stability, and that's something we're not willing to forego.
So that's the number we should be watching out for in terms of the debt structure as well. But thank you, Nitish, so much. Always a pleasure to speak to you on NDTV Profit. But moving on, let's just quickly address the flashes at the bottom of your screens, where the finance minister is coming out and giving details in terms of the excise duty cut on petrol and diesel. She says that they've reduced the central excise duty on petrol and diesel, and this is mainly to shield the consumer from rising prices. This actually gives comfort to the OMCs, and that's the reason why the consumers will not see any price hike, though the cut is coming in wherein nothing will happen, nothing changes for the consumer from a cuts perspective, but a comfort level coming in for the OMCs, and that's the reason why she's talking about the comfort level when it comes to consumers as well. So interesting point coming in there from the finance minister. But let's quickly slip into a short break. On the other side, lots more lined up. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially raising funds.
Welcome back. We're more or less at the low point of the day, and we're barely an hour in to the start of trade today. It's not a pretty picture at the end of the trading week. 1.25% lower for the benchmark Nifty 50, and the broader market's not doing better. In fact, the mid-cap index and small-cap index trading with cuts of well over 1%. Let's pull up the small-cap index as well, 1.3%. So cuts across the board. And the fact is that even the small positive news that led to the OMCs doing reasonably well has been sold into. So the IOC, BPCL, HPCL, stocks were up and about at the start of trade, but they've lost ground right now. They're trading in the red. BPCL down about 0.4%, IOC well over 1.7% or so. Statements coming through, of course, after the government cut the excise duty on both petrol as well as diesel. Hardeep Singh Puri talking about the fact that this was a considered decision, but Finance Minister very clearly stating that they've reduced the central excise duty on petrol as well as diesel. Spoke about the reason why. This is in order to shield consumers from rising prices. Remember, the price at the till, at the fuel pump, has not gone up, despite the fact that crude oil prices are well above $100 per barrel. Hardeep Singh Puri speaking about that. Just over the last 1 month, Brent crude is up, 50% or thereabouts, close to that, has been hovering around that mark. The government had two choices, either raise fuel prices or in fact reduce its revenue, and it's taken that decision to cut its revenue, hopefully for the short while, in order to shield consumers and prevent inflation from rising. But what are the implications and for oil marketing companies in particular? Somit joining in to tell you about the math and the key numbers to watch out for here. Somit.
Despite this positive announcement that has come in, the oil marketing companies have slipped in trade, and this is largely because even this 10 rupees reduction in the excise duty that has been mentioned for both petrol and diesel will lower the losses, but losses continue to be on the higher side, at least 35 rupees plus, as per what the analyst estimates are suggesting. And despite this lower excise duty, losses will continue to remain high, and that could be the reason why oil marketing companies have slipped in trade despite this positive news announcement that has come in. Now, post this news announcement, the excise duty, overall excise duty on petrol reduces from 21.9 rupees per litre to 11.9 rupees per litre, and on diesel it reduces from 17.8 rupees per litre to 7.8 rupees per litre. Now, it is important to note that there are four different components to excise duty. That is basic excise duty, special additional excise duty, agriculture, infrastructure and development cess, and additional excise duty. Now, out of these four components, only one component is where the excise duty has been reduced by around 10 rupees per litre, and that is what is reflecting in the table that is shown on on the screen right now. Now, as per Nomura, the blended marketing margin loss before this excise duty cut stood at close to 48.8 rupees per litre. Now, given that diesel prices and petrol and diesel excise duty has been cut by 10 rupees, these losses would also likely come down by 10 rupees per litre for the oil marketing companies. Now, every 1 rupee per litre reduction in the losses lifts EPS EPS of IOCL, BPCL and HPCL by anywhere between 14 to 24%. But do remember that despite this loss that is coming, despite this reduction in excise duty that is coming in, all the three oil marketing companies continue to incur losses on sale of every litre of petrol and diesel. Now, the impact of this lower excise duty will be much more when it comes to the books of government, because India consumes around 170 billion litre of petrol and diesel on an annual basis, and this 10 rupees reduction on both petrol and diesel excise duty reduction reduces the income for the government by around 1.7 lakh crore, which is nearly 5% of the government's gross revenue on an annual basis. Now, it completely depends on whether this continues for the full financial year or for the half financial year, but as of this moment, the loss for the annual basis is expected to be around 1.7 lakh crore for the government. This is the rough calculation as per analyst.
All right, Somit, thanks so much for getting us those details. Now, we've went on the ground to speak to Tenneco, and Tenneco is a 20,000 plus crore company, and my colleague Puneet actually went to one of their facilities to speak to the management, Arvind Chandra, whole-time Director and Chief Executive Officer of the company, at its newly launched Da Vinci DCX damper. This is something that Tenneco believes could be a real game changer for the OEM space. Listen in.
Well, what do you think? If you buy a new Mahindra 7XO, you might be feeling the suspension or the back gets a lot of support. Now, that's because of one company that's manufacturing the Da Vinci suspension system for Mahindra and Mahindra. And I have the opportunity here to speak to the man who's made it possible to have a better suspension product in your car and for your back as well. I'm now being joined by the one and only CEO of Tenneco India as well, Arvind Chandrasekhar. Arvind, thanks so much for joining in today and inviting us to Hosur. It's my first time here. It's a compelling experience to say the least. the noise, the energy, and what you bring to the table has been one of the biggest aspects of the success of Tenneco over the last few months, very, very notably in that sense. Talk to us about the Da Vinci system as well, because a game changer for the Indian roads at this point of time. What went into those products, and how is the success that now that you see it replicable with other companies as well?
Yeah. So first of all, thank you for having me. So the Da Vinci technology, but before that, let me just kind of, we just had a recent IPO. You forgot to ask me about the IPO. So we were subscribed 62 times. It was very successful. And I think the reason is because we had a very compelling equity story. And I think the fact that on shock absorbers overall, our market share is 52%, which means 1 in every 2 passenger vehicles has a Tenneco shock absorber. That's a great place to start, right? And why is that? Because we are a technology company, right? Every time there's technology, complexity and disruption involved, Tenneco actually leads the way. And the Da Vinci is yet another example of that, right? What it does is it's a good marriage. I call it a good marriage of high technology and affordability. In India, everything has to be affordable to the end consumer. And the challenge given to us by Mahindra, we accepted that to say, okay, what is the world's best mechanical suspension that is non-linear damping? So today, most of the solutions that you have in the field are the conventional one tune kind of ride, which means you are never comfortable in any road. Yeah. Not in a regular road or an uneven road or on a speed breaker or on a bumpy road or a pothole, right? But non-linear damping through mechanical suspension gives us the ability to take it to the next level, where we have these hydraulic valves that interact with the shim stack. And depending on the forces, the shim stack allows selective hydraulic flow. So that's what I would call mechanical ingenuity. And we do that without using electronics, without using software, without using sensors, without using motors. So that's a brilliant idea that has now come into the market. And we're very excited about it because obviously we thank Mahindra for their support and giving us the challenge. But this also finds much broader use across other OEMs, across the entire passenger vehicle space. We think it's going to become a big disruptor in the Indian market.
All right. So, and you will hear more of this conversation on all of our social media handles. It's great to go to the facility and see what the thing on the ground is, right? But what is not great to see on the ground is the energy infrastructure getting hit in the Middle East across various geographies. And somebody who looks at this very closely and the economic impact of something like this as well is Zaki Zaidi, foreign affairs expert, Iran affairs expert, and former researcher of Institute of Defense Studies and Analysis. Mr. Zaidi, thank you so much for taking the time out and being with us. And I hope I'm getting your name pronunciation correct. But at the onset, this is Neeraj here. At the onset, I'd love to know what is the timeline of the conflict that you are giving to the current piece that is on right now, and can the damage to energy infrastructure get worse before it stabilizes?
Hi, thank you for having me on your show. I'll see the Trump being in charge. It's very difficult for us analysts and the experts to actually gauge that what is in the mind. Okay, but going on, seeing that how things are moving in the past couple of days, and Trump has given 10-day extension because he threatened to strike all the energy infrastructure. Like today, this Friday, that deadline expires. Okay, and he has given 10-day extension. And this is only happened. Maybe he has given excuse that okay, negotiations are going well, even though while Iran is denying that negotiations are going on. The 10-day extension, they have taken the threat very seriously that if any of the energy infrastructure in Iran is hit, or the Kharg island is hit or invaded, they are going to burn all across, like all the Middle East, like be it Qatar, Bahrain, Saudi Arabia, UAE. So the global energy ecosystem is going to take a big hit, and it will take years to recover if they go ahead with the Kharg island invasion. And we see that Netanyahu has been very much pushing for that because
here we see that like how Trump and Netanyahu are diverging from their war objectives. Netanyahu wants an endless war because of his political survival back at home, but the Trump is very desperate to climb down and end this war. Claiming that okay, Iran is they've agreed for a ceasefire. We are just going to wrap up this war in one. So we are yet to see that what happens today, like on Saturday and Sunday, what military moves are gonna happen. So we are yet to see that.
Zaki, good. I don't know whether I should call you Zaki or Mr. Zaidi. I think I'll go with the latter. Mr. Zaidi, so let me ask you about this, right? You've spoken about how you have a situation of economic siege being employed, and this is I think a good way to describe the situation, because if you look at the 15-point plan that was sent by the US to Iran and a 5-point rebuttal that was reportedly sent back to the US, the Iran administration is at this juncture talking about ownership of the strait, of the Hormuz Strait. So in a situation where the Trump administration is looking for an off-ramp, how likely do you think that this is with the kind of demands that are being floated across both sides?
Both sides, especially the US, they are having a maximalist position. And under maximalist positions, you can't have a common ground that, Iran seems to be in a stronger position because they prefer a war of attrition. The longer they stretch this war and the larger the economic pain the region and the world is going to face. At the same time, Trump had this quick like a surgical operation and get out of it. However, that doesn't seem happening, and US and Iran, US asking like limit its Iran's missile program. It is definitely out of the question. It is only the last line of defense for Iran. Iran is never going to see that. They are asking for abandonment of giving that 400 kg uranium. They are never going to do that. Maybe when they signed a nuclear deal last time, it was a different environment. So Iran, under no circumstances at this point of time, is ready. They're like under threat, under pressure. What they want is that they have always said, they want the negotiations under dignity, not under threat. And they should acknowledge the reality of the region, their basic right, their basic right of, having a peaceful nuclear energy program. But US is not ready for, anything nuclear that touches it, or even the missile program. So I'm not sure that where it is going until unless, there some sense come on the both sides that, okay, you both cannot have a maximalist position, you cede something, they cede something, and have a common ground. And because countries are pushing, India is feeling the brunt. You have the Southeast Asian countries, you have Arab world. They're all feeling the economic brunt. And I think that these countries are going to put pressure on the US that, okay, they have to find a solution. The war has to stop, so that because the world economy cannot bear this for too long.
Mr. Zaidi, your point taken. My question to you now is, we have a minute and a half. How is the regional spillover looking like? Because the threat against energy infrastructure when it comes to Kuwait, Qatar, the impact it could have on the broader GCC strategy when you talk about neutrality, number one. And two, the role that India could play as a mediator. Do you think there is a possibility?
First of all, GCC is all not united. Okay, Oman has taken a much sort of a neutral stance. Okay, when we talk about these two states, Saudi Arabia, UAE plus Bahrain is like largely dependent on Saudi Arabia. So they have taken a very clear-cut pro-American and pro-Israeli position. And one day before all these, according to Trump, negotiations started, Saudi Arabia's crown prince and UAE's foreign minister, they said that like they should finish off Iran, their military threat, their nuclear threat, military threat, and war should not end prematurely. That's one point. On the very question that like how India could play a role, I wish that India being a big power, a big responsible power from global south, and we have always been because of our way values and principles a very trusted partner for mediation in such kind of conflict. We have been trusted, all people across the board. However, the recent position, whatsoever the government thought, but the recent position taken by government, like very much, which appeared like in favor of US and Israel by not uh, condoling the death of supreme leader or condemning the attack on the INS Dena, that the warship that was shot and sunk off coast like our waters and off coast of Sri Lanka. So these things, our silence on those things appear more likely aligned towards the US and Israel. So I don't think like India as of now is in a very strong position, or the parties would like to involve India in negotiation. But India has always, remained. We have our image, we have our that perception. But the things are a bit improving. Let's see how it happens.
Yeah, that's all we can do at this stage. Thanks so much, Mr. Zaidi, for taking the time. Pleasure speaking with you.
Thank you. Thank you. Thank you for having me.
All right, now it's time for Talking Point, and it is my privilege to introduce you to one of the speakers that we really enjoy speaking to whenever he does come along to speak to NDTV Profit. Samit Vartak, the CIO of Sage One Investment Managers, joining us today. Good morning, Samit, and thanks so much for taking the time. It's one step forward and 3 steps back at this stage for the Indian equity markets because of the kind of pressure and the sensitivity with regard to oil prices. The latest move by the government is something that people were anticipating would take place with regard to the excise duty cuts. Do you think that it will put a salve on what could be a longer term economic impact and company impact as well?
I think, I think right now what the actions the government probably is taking, these are all short term, maybe just trying to heal the small wounds. I think the longer term, it's more of taking away the pain from the oil marketing companies and, having that transferred to the consumer, to its own balance sheet, right? But, someone has to pay for it. So, it will definitely impact the fiscal, the trade deficit, and will have some impact on the currency. But in the long run, I don't think it will have too much of an impact on the companies on ground. These are very short term things, just to maybe calm down the sentiments a bit. Nothing really game changing.
Yeah. So then from that perspective, if you're looking at the kind of situation right now, nobody can tell, as much as practically everybody has become an armchair geopolitical expert, nobody can tell how long this conflict is going to last. So Samit, how do you react with this lack of knowledge on how quickly this is going to end? And nobody even knows how long it'll take for oil prices to settle down. So how are you setting your investment thesis right now?
I mean, see, the problem with the markets and the sentiments is that, it always keeps on focusing on the most recent issue, right? And, it was tariff a couple of months ago. Now it just keeps on shifting the focus. Now, now it's the war, right? But a lot of these short-term things only gives you opportunities. So, these are the times. I mean, in my recent memo, I focused on how these are the times, especially February and March, is one of the most difficult period for the Indian market, mainly because of the liquidity issues, a lot of advanced taxes. And so across the board, if you look at the last 16 years, there are 8 or 9 years when the bottoms have happened in March. Add to that this kind of an event, right? So these kind of events, do create short-term opportunities. As an investor, my job is to find bottom of opportunity. And if I try to look at macros, it's extremely difficult to predict. I mean, it depends on the events, and absolutely not a prophet, to predict how it will evolve. But when I look at the company level, there are tremendous companies which are emerging. I mean, one of the biggest advantage that India has right now is that almost the entire corporate world is deleveraged. We are not facing at a corporate level any kind of a stress on the balance sheet. The cash flow position is extremely high. I mean, that's the reason. I mean, imagine that in the last couple of months, small caps and mid caps have outperformed the large caps. I mean, these are extremely rare scenarios. Even in the last 1 year, if you see, the Nifty is flat, small caps are flat, mid caps are up 7-8%, right? So even in this mayhem, there are opportunities which you are able to find bottoms up. So if the index is doing that well, and if you have the ability to find really good emerging companies, I think there are really, really attractive opportunities. At the index level, you'll find, valuations which are 20 times or 25 times. But once you go down, there are so many hundreds of companies which are available at 1 year forward multiple of single digits. That's where the opportunity is. I mean, we do manage an AIF, which is more of, small cap oriented. Until end of February, it was still up 32%, right? And maybe in this month we would have given, but there are opportunities which you are able to find, and that should be the investor's focus. If you keep on focusing on the macros, it will just scare you away. I mean, as Elon Musk said, I would rather be optimistic and wrong, versus pessimistic and right, because economies and investor portfolio, the wealth will only be built by investors who are optimistic and look at, which are the companies you should bet on, rather than focusing on these geopolitics, which is completely unpredictable and not in your hand at all.
No, I think that's well said. It is beyond our hands. But what is in our hands, Samit? Good morning. Great having you, of course. Is trying to gauge which way the wind is blowing, right? And I wonder if, because of the macro issues that India has, and if capital is therefore going to be diverted from this whole focus that India had on capex as a nation to meeting some exigencies. And therefore, let's say if you were constructive capex oriented plays and manufacturing, would you shift your sight to some other pockets? Because right now everything has been punished.
Right. Yeah, I mean, yes, again, I would say that it's again short term, versus long term, because you may think that, okay, yes, the capex would take a hit because government's focus would be changing more towards, reducing the blow on oil, and the money would be more diverted towards that. But again, these are the times when probably the chances of reforms happening increases. Government probably would ease, maybe foreign capital coming in. We don't know. I mean, we have seen the similar movie during COVID times, right? That, markets try to exaggerate things. And by end of March, markets had exaggerated the movement so much that even though things got worse after March 2020, markets kept on going up. Similar thing will happen even now, right? So government focus may change in the short run, but in the long run, I think there is no alternative to capex. The capex can go into, the themes may change. Now maybe the focus will move more towards renewables. It may move more towards defense, but and maybe after war there will be so much of reconstruction which will be needed, in the Middle East, that a lot of our building materials or capex-oriented companies will be benefited out of that. It may not just be, rebuilding of what's destructed, but a lot of countries will try to find alternatives. Maybe there will be huge infrastructure which would be constructed to move away from the Strait of Hormuz. There are a lot of, things which will emerge over a period of time. And if the government's intentions are right, I think we can take advantage of that. So as an investor, my job is to see, where sort of the macros are moving towards, and try to find companies which are there. I mean, the good thing about India is that there are so many new emerging entrepreneurs who are so smart and so hungry. And I believe that with, these opportunities coming up, and with the AI, if they are loaded with AI tool, they can match the best in the world. And that's what my job is to find those entrepreneurs who can build world class companies. And I think we are at that juncture where the technological difference between the global entrepreneurs who could spend billions of dollars will heavily reduce, mainly because of the AI, capabilities, which a lot of our entrepreneurs will be able to leverage, and the kind of applications and businesses they will be able to build on top of that. I think that's where the opportunities will emerge, and these can be humongous opportunities.
Okay, so Samit, good morning. Hiral here. You're saying opportunities will emerge. Let's combine all of this into this last answer that I want from you for the investors. One, sentiment's extremely negative. Technically, investors are being forced to sell. There is underperformance. This is a period when usually you see liquidity coming back into the system from the month of April onwards, as you just mentioned in your first answer. And then the fear which is already there. And you're saying that probably one should start looking at investment opportunities. With all of this said and done, would you advise investors to start nibbling in now? And if so, which will those pockets be categorically which one should look at?
Right. I mean, it's important where to look at, I think, the pockets, because, there are two things, right? One is opportunities which everyone is known, everyone knows about. So for example, defense, right? So most of the defense companies which are, listed in India, especially the ones which are a little larger, I mean, they are sort of incorporating a lot of positives, so as an investor, I don't really have much of, attractiveness in those, because they're trading at 50, 60, 70 kind of a multiple, which is of no interest to me. As you go down, there are many smaller companies, there are companies, in the smaller space, which are building, electronics, which will confuse the radar to detect an aeroplane. There are companies which are making these M155 huge, shells, which are in demand in lakhs and millions of units. There are companies in managed spaces, which are corrected so much that I think their opportunities actually are increasing, whereas the valuations are taking a hit. There are smaller engineering companies which are emerging, which will be able to benefit out of India moving more towards renewable. There are power related infrastructure companies or renewables companies which have corrected a lot from the top, which are becoming extremely attractive. Right. So it's all about, even within a sector, there are companies which already are incorporating the positiveness, but there are companies which are completely neglected in the space. So even within the same sector, you'll find companies who are trading at 15 times, but some companies are trading at 60 times. So, but it's Samit, my job to find those kind of companies.
But Samit, I'll still ask you the last question before we wrap up the show. Which themes? So I agree that it is very bottom up, but still there might be some themes, right? So you just mentioned one or two. Can you just tell us that if you have within your portfolio, where is the highest concentration in terms of sectors, if not stocks?
Right. So I think the newer one, after especially this, is one is renewables, more geared towards solar for sure. There are chemicals which will be used in battery storage, because battery storage is becoming one of the most important aspect today. If you want to sort of de-risk ourselves from the oil shocks, right? So there are chemicals. So electric vehicle batteries, was a very small component, but the battery storage system is, multiple times of that. So there will be more and more indigenization of manufacturing of those, and hence local companies who are basically catering to that is extremely going to be positive for them. There is third spaces, the managed spaces, which are decimated. I mean, there are 4 or 5 listed players, but a couple of them are really good, huge cash flow generation, even though they don't show P&L profits, mainly because of the way the accounting works in that spaces. But if you look at the cash flow from operations, it's pretty humongous. There are building materials still, I would say that, which are building materials which are used, like cables, like pipes, which will still be in demand, not just for India, but also for the global. Everyone would want to de-risk themselves from oil after this shock. So we need to find out the sectors which will basically be benefiting out of the alternatives and people trying to react to the shock that's there, right?
So
and
well put.
I think even in defense, and as I said, there are a lot of smaller companies which are emerging, which are completely neglected. No one cares about them, and everyone is focused on the top ones, like data centers of the world, or which are super expensive. You're not going to really make that kind of money in there.
Makes complete sense. No, but this is fabulous. Good to get those thought processes. And Samit, I think this will lead a lot of people to try and examine themselves what is it that could work and what may not. But thank you so much for joining today. I do hope what you wrote in your memo and what you said in this interview today, that typically bottoms are made around Feb and March. Let's hope that the bottom is made, even if the pushback or a pullback is not very sharp in the month of April. We need a bottom soon. Thank you so much for joining in today.
My pleasure. Thank you so much. Thanks.
All right. Well, that's about the time that we have on India Market Open. Keep in mind, a lot of stocks are doing actually very well. Graftech increases prices yesterday, and HEG Graphite India are doing well. Some individual defense names are doing okay. So on that positive note, in an otherwise dull market, from all three of us and the team that put this show together, thank you so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Thomas Sarkar. And over the next hour or so, we'll try and solve all the stock-related queries that you might have. So do start sending them on the numbers that are flashing on the top of your screen. You can also call us, talk to us directly for stock-related queries as well. The landline number for that is on the top of your screen as well. But before we do that, a very quick check of how the markets are doing, because yet again today started off with what the GIFT Nifty was indicating, a downtick of almost 150 odd points, but then we have cascaded into a much larger pullback today, so almost down 270 points as we speak. We've also seen that there has been a lot of news flow since the morning on what's happening in the oil and gas space, and hence the increase or reduction essentially on exports of the excise duty on petrol and diesel has been something that's been considerably highlighted on the channel that you're watching, but no relief as on date for the markets. Let's look at the heat map also very quickly. In the morning, you did see some key stocks like Tata Motors PV continuing to be on the downtick. There are media reports speculating that there could be an impact of a couple of weeks on production for JLR. Stocks down 3.6%, but Shriram Finance has slipped back into the red and the top Nifty loser for today. Also seen Bajaj Finance continuing their downward momentum, and so is Indico, while the IT space, some selective defensive pharma companies continue to do well, and ONGC continuing to be the top gainer. In terms of the sectoral heat map though, we have been looking at a rather bleak picture, and that has continued with the PSU Bank Index yet again the biggest loser, and the Nifty Realty in the top three of the biggest losers today. Nifty Realty has continued and overtaken the IT index in the bearish sense, but there is no relent, at least at this point of time. The advanced decline ratio though, very quickly before I move on to our guest, shows you the broader market picture has been another key factor on a day like this. You are seeing almost a 9:1 ratio in terms of the declines, and the mid cap and the small cap also reflect that pain in the markets today. Down 1.7% now for the mid cap 150, small cap also down with a very similar percentage points. Let's quickly look at the BSE 500 though in terms of the gainers and the losers. While the electrode stocks, HEG, Graphite, both the biggest gainers for today, you are seeing some big moves on Brigade as well. That 700 crore land parcel boosting the stock today. But on the losing side though, you're seeing Minda Corp, Sterling and Wilson Solar, AB Real Estate amongst the ones that are down and out today. So hopefully over the next 2 to 3 hours of the trading session, hopefully some momentum comes back into the market, but seems to be a bleak picture for now. Let me welcome in CA Tapan Doshi, research analyst at CATapan.in, as well as Saumil Mehta, the head alternate of research at Mirae Asset, Sher Khan on the technical side. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first stock-related query for today. It's on Larsen and Toubro. Our viewer is holding shares at 3,230, and this is Mayur. He is asking though, what's a very long-term view, a 10 to 15-year view that he wants on the stock, Tapan, and he's asking, given the current uncertainty, what's a target that he could expect for the long term? What would your view be? Should he continue to hold?
Yeah, hi Puneet. Yeah, of course. See, Larsen Turbo is actually facing a tough time currently, as more than 35% their order is coming from Middle East. But I think if things get settled down in 1 month or 2 months, I think they are going to get more orders also from there. Of course, for 1 or 2 quarter, no, they'll have a cash problem, maybe working capital problem will be there, and margin pressure will be there. But as the already the viewer is for the long term, I don't think long term there is a problem. So I think he's getting a good opportunity to invest more. If he wants, he can start investing. For long term, I think much better return will be available for this stock from here.
Next query is coming in from Raghuram from Bhubaneswar, and it's on Eternal. He's holding few shares, bought at a price of 270 rupees. Somil, any medium-term view on this counter?
Yeah, at this point of time in the medium term, I think the trend is still down. I'll not be expecting too much from this at this point of time. I'll be expecting a downside target of 200 levels in the medium term outlook. In the short term, yes, we've seen a good bounce towards the 20 and 40 daily moving average. Bounce could have a hurdle of around 250 levels or 252 levels. So that's a very crucial resistance for the stock. In the short term, a little positive, but in the medium term, I'll stay away from it.
Got the view, Somil, and welcome to the show. Let's go across, take our next caller from Hyderabad. And Anita has a stock query for us. Anita, good morning. Welcome to the show. What's your query?
Yeah, good morning, sir. I'm having HBL Engineering shares for 900 rupees, average of 400 shares. So what is the medium and short-term target for this, and shall I average?
So your buying price is 900, right, Anita?
Yes, sir.
Okay, got it. And you said you want a short-term view or a long-term view?
Short and mid-term view, sir.
Okay, got it. Let me go across to Somil then. Somil, she's bought HBL at roughly 900, stocks trading at 655. Would you recommend averaging down at this point of time? Is there enough evidence to support that?
Yeah, see, I don't believe in averaging on your losing trades, right? That's the first thing. But in the medium term outlook, I think the stock looks good to me. And in the very short term, there is a little bit of negativity, a little bit of downtrend. It may retest 580 levels, 590 levels. However, in the medium term outlook, I think looks good to me. Buy on decline should be the strategy if you want to buy fresh. My targets would be around 825. If it sustains above 825, then the next target would be 980, 985 levels.
The next query is coming in from Ikambarai from Hyderabad. He is holding 50 shares of Anantraj, bought at a price of 558. He wants to know whether should he sell this counter and invest the same amount in BEL or Reliance Industries for the next 1 year. Tapan, any view on this? Should he sell Anantraj and invest in BEL or RIL?
I think Anantraj at this level better to wait for some time now, because I think stock has fallen a lot, and I think BL also having a rich valuation, even Reliance. I think this will bounce back much better from here. So just wait. I think once the war situation will, I think it will easily give you 10-15% return easily. So better to wait and in this stock only.
Got that view, Tapan. But the next query, and continuing with a similar theme, is from Sushila Beleri. Now, she wants to know a view on MRPL. What would a short-term target be here? Somil is her question. She's bought shares at roughly around 179, almost close to 5,200 shares. What would your view be?
See, my view right now is very sideways to negative. I'm not expecting the stock to go below 170, 175 levels. However, I'm not even expecting this entire consolidation of last 1.5 months to break out on the upside now very in the very short term. The breakout levels would be above 192, 193 levels. So it's sideways to bearish at this point of time, but buy on decline should be the strategy. Around 170 has a very strong support. That would be the right time to buy. Hold on to it. I think once the correction or the sideways correction has completed, it will break on the upside, but it will be in the medium term outlook.
Okay. The next query is coming in Okay. Next query is coming in on BLS International from Venkatesh. He's from Hyderabad. He has around 100 shares of this counter, bought at a price of 320. He wants to know whether should he average at the current price for long term. Tapan, any view on this?
No, currently don't average it. I think currently the company is facing some issues also. The last result was not so convincing. So I think I'm better to wait for one more quarter. Again, the situation is not so great geopolitically. So better to wait, and after one quarter you can decide.
Let's go across to our second caller for today. It's from Amchi, Mumbai itself. Vinod has a stock query for us. Vinod, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning. I'm a long-term investor, about 5 to 7 years horizon. I'm looking for a suggestion on 3-4 stocks which I can do daily SIP over next couple of months.
Okay.
Which could be predominantly from mid and small cap.
Okay, got that question, Vinod. Let me go across to Tapan then. Tapan, is there a space or a few companies that are on your radar, given the current correction, that you would recommend for the next 5 to 7 years? I know it's a very volatile time period, so there could be a lot of changes in that aspect, but given that, is there something that you would recommend for Vinod?
Yeah, I think he can invest, like the banks are coming down, so some of the banks like Karur Vysya Bank, you can think about it. Even if you want a federal bank also, NBFC also, there are some stocks, like Aadhar Housing Finance, and also if you want some of the hotel stocks also coming down. So there also I think Sami Hotel is one of them, and Lemon Tree is another thing. So plus EMS like Sirma, that is also a good stock. So these are some of the stocks which he can add it for small cap, mid cap for the little longer time.
Yet another live caller coming in from Vijayawada. Anjali, you can go ahead and ask your query.
Yeah. Hi, ma'am, and hi, sir. I'm having Vimta Lab shares of 700 average of 900 shares. So, what is the short-term and long-term target for this?
Okay, long-term target. Let's get in Tapan. Tapan, any target, any view on Vimta Labs?
Well, I think if I see the fundamental and all that, last year has been much better. I think, but the stock has fallen a lot from the top. So better to wait for some time. I think things will recover. If I see at least 20% upside, I can see at least in 1 year from here. So better to wait in this stock.
Wait on Vimta Labs, what Tapan suggests. But the next question, Tapan, also coming to you from K. Parthasati. He's a senior citizen from Chennai, holding EIH in his portfolio roughly at 390 rupees per share. So stocks down almost 100 rupees from that mark. Tapan, he's holding 50 shares. Would you recommend him averaging at this point of time? Because the hotel space as a whole has seen a lot of correction. What would be your view?
Yeah, he can average. I think this hotel stock is good, and you see the demand will be there again in the summer. No, I think people are not going to overseas like Middle East and all that. They are coming to the domestic places only. So I think that is where this company will be benefited. I think the stock is good. He can average at this level also.
Right. The next query is coming in from Nitish, and he wants to know which defense stock to enter for short term. Saumil, any defense counter that looks attractive on charts?
Defense counter, I've been tracking BEL and HAL, but in the very short term, I would not suggest. Let it start forming hard tops, hard bottom, and then we can enter these stocks because it has already been falling now in the very short term. So let's wait for the breakouts on the upside or if it sustains about 20-40 daily moving average, and then probably it would be a good buying opportunity in the short term.
Got that view and fair point there as well, Saumil. But the next question coming in, it's on a beaten down stock in that sense. Blue Jet is what I'm talking about. Let's pull up today's chart. Stock's down almost 4% as well as the 1 year chart, and you'll know what I'm talking about if you haven't tracked this counter. Our viewer Sabu from Kochi actually holds 60 shares, bought at 691. So he is sitting on a considerable amount of loss at this point of time. Let's look at the 1 year chart very quickly as well. He wants a 1 year view, Tapan, on this counter. There you go, almost down 22%, been very volatile over the last few months as well, and bless you, Somit. But largely, Tapan, what would be your view on Blue Jet? Would you recommend Sabu to continue holding or exit this underperforming counter?
better to hold it. The stock has already fallen a lot, and hopefully the management told from next quarter the company prospects will be good. Of course, the results are not been so great from last 1 or 2 quarters, but this sector is quite good. It will recover, and at this level, I think already much more is priced in. So better to wait for 1 or 2 quarter more. I think things will recover from that.
Okay. The next query is coming in from Sudha from Hyderabad, and she wants to know the fundamental outlook on Shakti pumps. Are valuations reasonable at this moment, and should she buy for long term, Tapan?
Yeah, see, recently what government declared Jal Yojana, that if you see, we thought that for all these pumps and all that, it will be a good news. But the problem is all these companies are facing lot of cash crunch and working capital issues. And if you see the last 1 year results of this company is not so great. So I will not suggest this company to buy. If he wants to buy and he wants to get enrolled to this government, whatever they propose, I think Wabag and all that will be a better option rather than going to this company.
Got that view, Tapan. But the next query that's coming in now, it's on Tata Motors passenger vehicles. A stock that's down today in trade, and largely the story being that media reports speculating a 2-week suspension in terms of production till April 8th. Now, the story goes that they have informed the suppliers about the same, but largely FY26 has seen a couple of times hits on its production, right? One was because of the tariffs by the US in April 2025, and then a month's production lost in the month of August and September, largely because of a cyber attack. So stock's been down and out in that sense. Now, Tapan, Sanjay actually holds shares at 506. Now, his question is, it is a good time to average this counter now. Would you recommend that, given that JLR is almost 70% of his revenues? Do you think it's a wise decision to average now?
Basically, the stock is down and out, and if you see in automobiles, I think this is having the lowest valuation. Of course, the issues are much bigger here, but I think at this price, much more is already priced in, and I know that 2-week production stop is also a problem, but better to wait. And if he is there for long term, at least for 2-3 years, I think 300 is a good level to enter. I think things will recover for Tata Motors. Already stock is down and out.
Okay, a live caller coming in from Andhra Pradesh. Venkat, you can go ahead and ask your query.
Yes, sir. I hold Geo Finance 100 shares at the rate of 326.
Okay.
Shall I purchase at this rate one more 100 for long term?
Okay. Tapan, should Venkat buy more 100 shares of Geo Finance at the current levels to average it out?
Yeah, he can. And it's available at a good valuation. Again, yesterday news came that they already had an alliance with Bajaj Alliance. The collaboration with Bajaj Alliance. I think most of the department will be coming into profitability in next 1 or 2 years. So yes, I think he can hold the stock. From here, recovery will be there.
Siddharth Chaturvedi from Jaipur actually has a very interesting question. Yet again, from a long-term perspective. He's asking between 4 hospital stocks, Global Health, Yatharth, KIMS, as well as Narayana, Tapan. Which one is a preferred pick according to you? If you like multiple names also within this list, what would those be?
I will give all 4 names actually. Overall the basket is quite good, and all this 4 stock has done well. So I think then also if he wants to go, Narayana is good, even Yatharth is good. But honestly, I'm positive on all the 4. So he can take as a basket. Hospital as a basket will do well from here. So anyone he can choose, not a problem.
Next query is coming in from Vinaiti from Bangalore, and 100 office shares is what they're holding at a price of 380 rupees. Should average now, or any long-term view on this, Tapan? Office?
Sorry, can you just embassy office you are talking about?
Office space.
Office space. Okay, office space. I think if I see here, the problem is recently the quarterly results was not great, and I think this again the real estate is in a problem. Better not to average at this level. I think he can wait maybe 1 or 2 quarters, then only he can take these. Not at this level, of course.
Got the view, Tapan. But time now, viewers, to look at the BSE FNO setup now, because you've largely seen a day where it's been a tough one for the markets as we discussed. So when you look at the Sensex heat map, You've seen stocks like Indigo, HDFC Bank, Reliance continuing to be in the downtick today for the Sensex. Some IT names trying to pull up strength, but largely almost 27 stocks of the Sensex down today, almost down 1,000 points, more than 1,000 points now as we speak. As well, when you look at the banking also, that's been the other key factor where you have seen consolidation at the 53,000 mark, but failing to hold it yet again today. Consistently seeing pressure on that aspect for the Bank Nifty today. But when you look at the stocks which are in focus today as well, as part of longs as well as shorts, let's pull up that list very quickly. Of course, these are some active contracts for the Sensex, but look at the key stocks that are on our radar today in terms of short unwinding, the longs as well very quickly. Individual stocks that continue to be on our radar at this point of time. TCS as well as Sammaan Capital are some which are seeing long build up in trade today. TCS just a tad about 2,400 in terms of the other key in terms of short coverings. You're also seeing the IT pack. So both longs being longs as well as shorts covering seeing for the IT pack. ONGC also continues to see that pack, but in terms of longs being unwinded, Growth Properties is under pressure today, down 3.4%, while Hutco is the other counter, as well as a short build-up yet again being built on Tata Motors PV. We just discussed the reasons. And Shriram Finance, it's an interesting pick, this one, because just started to get momentum on Tuesday for the first time after that consistent pressure on this particular counter, and yet again losing that momentum very, very quickly as well. So these are some of the key stocks which are in our focus today as well. But let me go across, take the next stock related query now that's coming in from Srikanta from Bengaluru. Wants to enter the pharma space, Granules or Laurus Labs, Tapan, for the next 3 years. Would either be on your radar?
Yeah, I think Laurus Lab is quite a good option. Now, if your CDMO business is doing well overall, and I think the demand will be there. Again, rupee depreciation is happening. That is also actually helping Laurus, and the fundamentals are good, and their overall commentary is also quite means you can progressive. So I think yes, Laurus Lab we can buy at every dips for long term.
Query is coming in from Pramod from Bangalore, and Saumil, he wants to know the technical view on Reliance Industries. Is it a good time to enter?
Reliance Industries have been very resilient. It's been trading around 200 daily exponential moving average, which is a very good sign for the stock. However, in the very, very short term, it has been in a very tight range between 1300 and 1400. So that 100 points range has been there. Now, today, it has broken the previous swing low. So I'll be expecting in the very short term, I'll be expecting the stock to go down till 1330. And the next level on the downside would be 1305. These are very crucial levels to watch out for. If it does not sustain, around those levels, then the next level would be around 1270 and 1280. So in the short to medium term outlook, I think there is a little bit of pain. But however, the structure, the medium term and the long term structure still remains positive. So I'll be looking to buy around 1270, 1300 levels.
Saumil, but let's go across, take our next caller from Vijayawada, and Shri has a stock related query for us. Shri, good morning, welcome to the show. What's your query?
Sir, I bought India at the rate of 29,600, sir, 10 shares, sir. I want to know the long-term and the medium outlook of the stock, sir.
Got it. What would your view be, Tapan? Stocks trading at 26,000 now, and Shri's bought at 29,600. Should he continue to hold this counter, and if possible, is it a good time to average?
Yeah, I can hold the stock. The stock is already beaten out, and I think the future looks much more brighter from here. And the valuation is quite conducive. I think he can hold the stock. But yes, some of the other stocks also there in pharma which are doing well. So once it comes up on above 28,000, he can move it to like Sun Pharma, Cipla. They are also quite good if he wants to diversify a little bit on the pharma sector.
Time now for the rapid fire round in this edition of Ask Profit. Tapan as well as Saumil request you to keep your answers on buy, sell or hold, so we can take as many in the next few minutes. The first question is coming from Mohit. He's holding 200 shares of HDFC Life at 599. Can he continue to hold for the next 2 years, Tapan?
Yeah, hold.
Karthik from Hyderabad is holding 175 shares of ITC, bought at a price of 404, currently sitting on a loss. Should he average or sell? Tapan, any view?
Sell on rise.
Tata Motors PV, we took the fundamental view. Sawmill, our viewer is holding shares at 399. I know it's a very short-term chart, but any view that you have on the stock now?
I think I'll hold to it for a long term, but short term, definitely there's pain.
Sunita from Hyderabad wants to know whether should she buy Ellenberry Industrial Gases at the current level. Tapan, any view?
No.
Muralidharan is holding 150 shares of HEG, bought at 505 Sawmill. He's asking if he should continue to hold or sell out on this particular move.
The book profit for short term. However, my view is positive. I'll be expecting the stock to continue the trend.
Arvind from Mumbai is holding 2,000 shares of Canara Bank, bought at a price of 160. Should he continue to hold or sell? Any view on this, Sawmill?
Sell.
Oracle Financial, Tapan, a viewer has bought it. Ishwar has bought it at 6645. That's the only IT play in his portfolio. Should he add more now?
No.
Sankalp from Goa is holding Persistent System. Should he continue to hold for long term, Tapan?
Sell on rise.
Madrasan, 300 shares bought at 65 for the long term. Should he continue to hold, Tapan?
Yeah, hold and buy on dips.
Kaushik from Vadodara wants to know whether is it a good time to buy HDFC Bank for short term. Sawmill, any view?
I will hold.
Prashant holds Dixon at 12,240 Sawmill. He's holding a considerable quantity of 126 shares. What's your view on the stock now?
Hold.
Santosha Babu from Bangalore is holding 500 shares of Capri Global, bought at an average price of 178. Should he hold for the next 2 to 3 years, Tapan?
Hold.
Sawmill Tejas Networks bought by Ram at 516, a very volatile counter. Should he continue to hold?
No, book profits.
Mayur is holding 500 shares of Graphite India, bought at a price of 520. Wants to know whether should he sell at the current level. Sawmill, any view?
Hold.
Lemon Tree bought by Zakir at 125. Tapan, he's holding a 1500 shares. Can he continue to do so for the next 1 year?
Yes, hold.
Kamlesh from Delhi is holding 2000 shares of Patel Engineering, bought at a price of 35. Can he hold for long term, Tapan?
Yeah, hold it.
Happiest Minds bought at 445 Sawmill by our viewer Lavanya. Should she continue to hold or sell out at any pullback?
Sell on rise, but the targets in the short term would be 500, 490, 500.
Got it. Well, that's the end of this round of the Rapid Fire in this edition of Fast Profit. But Sawmill, thanks so much for helping us solve the queries over the last half an hour. Tapan, stay on. A lot more stock-related queries, viewers on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple D.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home and the responsibility to protect it.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do start sending in your queries on WhatsApp. You can also call us, talk to us, as well as our guests on or your stock-related queries as well. We still have Tapan Doshi with us. Let me welcome in Rajesh Bhosle. He's the equity technical and derivative analyst at Angel One. Rajesh, very good morning to you. Before I come to you, let me just take the next query very quickly. It's on JBM Auto, bought by Lalita from Bangalore, who is a regular viewer, at 259. So she is sitting on a considerable amount of profits, asking what she should do now with this counter. Rajesh, it's been a volatile one very recently. Would you recommend Lalita to exit, book the profits, go home with 100% gains?
As of now, I would suggest to hold on to it because if we see the weekly charts, it has precisely taken support on last year's swing low, and last week we saw a strong bullish engulfing pattern. So this week it's witnessing price correction, but overall chart seems to be forming a structural bottom. So hold on to it somewhere around 500 level. The stock has a strong support, and once it breaks above 600, the stock can have a strong move towards the levels of around 750 levels. So hold on to it.
The next query is coming in from Kishore from Hyderabad. He's holding 400 shares of JG Chemical, bought at a price of 375. He's a long-term investor. Should he continue to hold this? Tapan, any view on JG Chemical?
Well, this company, if you see, it's the problem is with the profitability. There is a big pressure on the margin, and again the chemical business is overall not doing well. And I think lot of issues will be there on the demand side also. So my suggestion is better to move out from the stock and go to better sector like defense or banking, which are available at a lower level.
The view, Tapan. The next query that's coming in right now. It's on United Spirits. Now, stock has been focused, over the last couple of days, based off them selling across, the RCB franchise, netting in a good profit for that as well. And if you see, this week has been very volatile in that sense. It's down 2%, but a lot of analysts put in a value to that entity of almost between 100 to 150. Hema Deepak actually holds shares at 1,380 rupees per share. Now, she's already bought 100 shares, Tapan. Ask if it's a good time to add 100 more. What would your view be on the stock now?
Well, the stock is okay, and as you told, no, RCB sold, so I think that benefit will be available on the net worth part. But if you see the consumption pattern also, I think it will be conducive for the spirits and all that for the next few quarters also. At this level, if he is getting, yes, he can not 100, but maybe 20, 30 shares. He can, in part way, he can add it till 1150 if it goes down till that. But yes, he can start adding it, no problem.
Caller query coming in from Andhra Pradesh. Bharat, you can go ahead and ask your query.
Good morning, sir. I am holding 500 shares of Happiest Minds at the price of 445.
Okay.
So, actually, yesterday, Happiest Mind partnership with Unify app to accelerate the enterprise of AI adoption. Now, what is the immediate target and long-term view?
Okay. Any long-term view on this, Tapan? Happiest Mind?
Well, honestly, long term, I am not too much bullish on this stock. Already, if you see the margins are in pressure, of course, some news are there. But I think in future, I think a lot of tough challenges are there in part of AI for this company. So my take will be, I think on rise, better to sell.
To sell Happiest Minds is what Tapan recommends. But the next question is coming in from Karthik now. He's holding BEML, but bought at 2494. He's currently sitting on a loss, a considerable one to add the least. But would you recommend, Rajesh, for him to add more at this point is what his question is. Stock's down 22% this year. What would your view be?
Definitely an underperformer, but now if we see the chart structure are moving towards its long-term support. If we see on the weekly chart, prices are now hovering around its 200 weekly moving average. And also last year during the March month, there was a rally from this level. So I would suggest to wait for now. If it dips further towards 1300 levels, that is the origin point of the last year's rally. So add some more around 1300 levels.
Okay. The next query is coming in from Satyan. He's holding few shares of BBTC, that is Bombay Burma, at a price of 1,450. He wants to know whether should he add more or exit this counter. Tapan, any view?
Well, don't add more. You can hold the stock. I think because the market is falling, this stock is also falling. Overall, I think the stock has already come down a lot. But my suggestion is, because it's a holding company, many challenges will be there in the future. So just hold. And once it comes up, maybe 20-30% up from here, he can sell if he wants.
Got that view, Tapan. Right now, the market definitely not appreciating the value that it holds in Britannia at this point of time. And continuing to be on our viewers' radars definitely at this point. But you're seeing yet again that the Nifty is broken that 23,000 mark. We broke that earlier in today's trading session, but yet again under pressure for the Nifty 50. The next question coming is from Anthony. He's a long-term investor. Has an interesting question. He's looking to enter Interact Building Products or Jyoti CNC. Would you recommend, Tapan, either of those counters that look good for the long term?
Can you spell the name again?
One's Interact Building Solutions in the prefab building space. The other one's Jyoti CNC, Tapan.
I think Jyoti CMC looks much better. If you see their overall quarterly results are okay, and again the counter is already down. But I think in auto ancillary company sector also, they are in the aerospace and defense. I think this looks much more interesting. So if he wants, he can add this stock at this level also.
Next query is coming in from Vishy, and it's on eMudra. He has bought 500 shares at a price of 490, saying that the current share prices are at 390. He's is sitting on a loss. Should he continue to hold this counter or exit? Is there any chance of the share prices moving back to 500 level? Tapan, any view on eMudra?
No, Mundra, I'm not too much positive. Lot much depending on the government policies. If any change in government policy, it will hurt a lot. So my take will be, if it goes up, now better to get out from this stock and go to better stocks.
Got the view, Tapan, but Piramal Pharma is the other counter, Rajesh, that's Venkat Ramani has on her radar. 1,000 shares bought at 201. So, currently sitting on the loss. What would you recommend, Rajesh? Is there any upside momentum to what we're seeing in today's move as well? Should she continue to hold? Any chance of getting back to their buying price?
So I would suggest definitely hold. If we see the pharma space are showing relative strength, and even if we see PPL Pharma, it's forming an engulfing pattern on the weekly charts. It's on a strong support. So yes, definitely expecting a bounce back. Possibly 160, 165 levels can be retested. Around those levels, we need to revisit the chart. But as of now, it's on a strong support, expecting a strong up move.
Next is a caller query coming in from Bareilly. Arvind, you can go ahead and ask your query.
गुड मॉर्निंग सर. मेरा सर क्वेरी था बिल्डिंग मटेरियल की कौन सी कंपनी फंडामेंटली स्ट्रांग है, मैं ये जानना चाह रहा था.
ओके.
कंपनी जो फंडामेंटली स्ट्रांग हो बिल्डिंग मटेरियल की.
तपन, बिल्डिंग मटेरियल स्पेस में आपको कौन सी कंपनी फंडामेंटली ज्यादा स्ट्रांग लग रही है जिसमें अरविंद जी पैसा लगा सकते हैं?
देखो, सिरामिक कंपनीज में बहुत बड़ा प्रेशर रहा है क्योंकि एलएनजी का प्रॉब्लम है, गैस का प्रॉब्लम है, तो काफ़ी सारी सिरामिक कंपनी डाउन आ रही है. उसमें एक कजारिया सिरामिक है, लीडर है, अभी थोड़ा नीचे आया है और आई थिंक थोड़ा वेट करके लेना. बट वो एक है कि अगर आप रखोगे इस लेवल पे, क्योंकि कभी ना कभी गैस के प्रॉब्लम सॉल्व होंगे और बाद में बिल्डिंग मटेरियल की डिमांड बढ़ेगी, तो कुछ साल में ये यहाँ से अच्छा रिटर्न देंगे. तो ये कजारिया सिरामिक आप लॉन्ग टर्म के लिए इन्वेस्ट कर सकते हो.
होपफुली अरविंद जी आपकी क्वेरी सॉल्व हो जाए तपन के व्यू से. बट नेक्स्ट वन क्वेरी कमिंग इन ऑन ICICI Pro AMC. नाउ राजेश, a viewer actually, Puneet from Ghaziabad, holds shares at 2853. I know it's a very limited time frame, but he's asking a short-term view of what could be your opinion on the stock. Any view here?
So after listing, it has been under pressure, but this week there is some strength and there is a positive chart structure. So as of now, we are seeing a higher bottom with whatever limited data we have, expecting a further traction possibly towards the levels of around 3100. So hold on to it. On the downside, if we see somewhere around 2750 to 2800, there's a base. Hold on to it for a near-term targets of around 3100.
Shankar Mali is holding 2,000 shares of Praj Industries, bought at an average price of 400 rupees. Rajesh, short-term view on this counter?
So if you see, definitely there is a base formation since last few weeks. Immediately there is a resistance around 335. Once that is taken out, we can expect further up move towards the levels of around 365 to 370, which is its 200 EMA. As of now, definitely there is a base formation. Hold on to it with a stop loss around 290 levels.
Got that view, Rajesh. Praj Industries is another very, very volatile counter in the last 1 year as well. But next caller dialing in from Bengaluru, Venkat, has a stock query for us. Venkat, good morning. Welcome to Ask Profit. What's your query?
Very good morning to you. Very good morning to you. I have got a query regarding NTPC Green. Okay, I have got 300 stock at the rate of 101. That is the average price.
Okay.
And is this the right time to average it out, or I can hold it for about 1 year plus? And is this a good stock to hold on for a long term of more than 1 year, or no? Can I average it out at this price? Because it has been falling down only. I would like to know your opinion.
Got it, Venkat. Tapan, NTPC Green, it's not been in favor too much in terms of even brokerages as well. Largely, they do prefer a lot of companies apart from NTPC Green in the pure play space like Vari. Is that your view also? Would you recommend Venkat to exit NTPC Green, buy something else, or should he continue to hold?
Now, my take will be, as you told Puneet, better to exit from this. Already valuation is on a higher side. Actually, when they brought the IPO, at that time only valuation was quite high and the stock is not performing. I think still reasonable problem will be there for NTPC Green in the coming future also. My suggestion is, if he wants to that, I think better to switch from NTPC Green to NTPC. I think NTPC will give a much better return from here. So switch to NTPC rather than NTPC Green.
Okay. The next query is from Krishna and it's on Natco Pharma. He is holding 370 shares, bought at a price of 1100 rupees. He wants to know whether can he hold the counter for the next 3 to 5 years. Any view on this, Tapan, Natco Pharma?
Yeah, good stock, and I think good recovery coming. Again, you see from last few quarters things are doing well. Of course, last quarter there was a problem, but I think management is quite optimistic. So at this level, I'm quite positive. You can buy at dips for long term.
But Canara Bank, Rajesh is the other counter I want to put your view on. Ramesh from Bengaluru actually wants a short-term view on this particular counter. What would your view be?
I would say so. Day before yesterday, there was strong positive momentum in the PSU banking space. But today, along with the broader market, it has slipped again. But if we see, the stock is hovering around 200-day moving average. So some kind of positive traction is there. Hold on to it somewhere around 125, 124. There is a strong support. And once the prices crosses above 137, expect a strong move towards the levels of 148 to 155. So I hold on to it for now with a stop loss of 124.
Okay. Rajani wants to know whether is it a right time to invest in Coforge for long term, Tapan?
No, I don't think so, no, because still we don't know where the AI impact will go. I think still I'll wait for 1.5 year. Out of this, all these IT companies who are the leader in AI enabled software. Of course, Coforge is good, but again, the valuation is on our side compared to other large cap also. So my take is better to avoid and go to other good sectors.
Got that view, Tapan. But another caller dialing in from Hyderabad. Mansi has a stock query for us. Mansi, good morning. Welcome to the show. What's your query?
I want to invest 3 lakhs in this market correction.
Okay.
So, what any 3 to 4 stocks where the valuations are attractive, and this is for long term, from mid cap and small cap sector.
And Mansi, do you have any equity exposure right now? Is this you are entering the market now?
No, I have already exposure.
Okay, you have already some exposure. Got it. Tapan, mid cap, small caps both been very volatile across sectors and spaces. But anything on your radar for Mansi?
Yeah, as I told earlier, then I think banking may do well. So banking and NBFC, these are the two sectors where you can go for NBFC housing, like LIC housing or Aadhar housing. Then banking, Federal Bank, Karur Vysya or DCB Bank. Then I think EMS sector, where I told Sirma and maybe Dixon. Dixon, of course, is the large cap, so I'll not tell about that. And other sectors, I think hotels and hospitals. These are also the hospital you told Yatharth. And I think global health, this is also good. In hotels, I think Lemon Tree, that is also good. So these are some of the sectors she can think about it for long term.
Raghu from Hyderabad is holding 89 shares of NHPC, bought at a price of 75 rupees. Should he accumulate or exit? Rajesh, any view on this NHPC?
So I would suggest to add more, but hold on to the current position because since last 1 year, not much has happened in this stock, but somewhere some base formation is happening around 70 levels. Once the stocks move above 80 levels and sustain about, then we can expect some momentum back towards 95 to 100 levels. As of now, not much is happening, so hold on to your current positions.
Got that view, Rajesh. The next question coming in on IDBI Bank, bought by Suresh at 99. Now, Rajesh, we've seen that the stake sale might be off the table, and hence we've seen a correction on the stock. Should Suresh exit now at this point of time? Would that be your view?
So just to exit because the buying is of higher levels. And somewhere the prices are now reaching oversold zone and approaching its long-term support levels. So as of now, hold on to it. If we see the rally that started earlier, started from the levels of around 60 levels. And it's now approaching those levels. So possibly we can expect a rebound from the 60 levels. So hold on to it. And when it bounces back towards 75 to 78 levels, we need to recheck the charts.
Rajiv Saha from Calcutta is holding 300 shares of Bajaj Housing Finance, bought at a price of 100 rupees. He wants to know whether should he sell, hold or average. Tapan, any view on this?
Well, I think he can average. The stock has already fallen a lot, and if you see it is having a very good credit growth. If you see that overall the guidance is also good, and of course, the valuation was on a higher side, but now I think it is much more reasonable compared to earlier. So yes, please add at this level. I have no issues.
Got your view, Tapan, but next caller actually dialing in from Hyderabad, and Puneet has a stock query for us. Good morning, welcome to the show. What's your query?
Very good morning. I'm holding 750 ONGC shares, which I bought at 275 rupees. I would like to know whether to hold or sell, and what would be the short-term target price.
Okay, you want a short-term target price. Got it. Rajesh, on ONGC, yet again, even in the short term, it has been driven by a lot of news flow happening in the Middle East. But on the charts, what would you recommend?
This counter is mainly driven by the news flows, but overall chart structure remains positive on the higher time frame, and high top, high bottom is still intact. The kind of positive momentum is they're expecting a further move towards 290 levels. So hold on to it. Keep a trailing stop loss of around 265, and 295 to 300 would be the immediate targets.
Well, Rajesh as well as Tapan and our viewers, it's time now for the rapid fire round in this edition of Fast Profit. You both know the drill. Let me go across to the first query on Lodha Developers. Kotresh from Hubli actually wants to know what could be, if he can buy into this counter now and a target to watch. Rajesh, your view?
Avoid it. It's an underperforming counter.
Raghuram from Trichy is holding 150 shares of JSW Energy at a price of 487.5. Should he hold or sell, Tapan?
Hold.
Tata Power, Fortis or Canara on a target stock for the next 1 year, Tapan?
Canara.
Rohan from Calcutta is holding 15 shares of Mahanagar Gas, bought at a price of 1,030 for the last 3 years. Tapan, should he sell or hold for long term?
Sell on rise.
Jindal Stainless is a good buy for Narayana at this point of time, Rajesh?
At around 670 levels.
Sagar from Bangalore wants to know whether it's a good time to enter RR Cable for the next 2 to 3 years, Tapan?
Yeah, good stock.
The next query that's coming in, it's on ITC, bought at 410. What would you recommend, Tapan, for the medium term?
Sell on rise.
Okay, Vishy wants to know the target for the Leela Palace Hotel for less than 1 year. Rajesh, any view?
I'm not tracking this counter.
Okay.
Any view that you might have, Tapan, on Leela Hotels, Leela Palaces?
Yeah, he can add at lower levels.
The next one's on Glottis. I know, Rajesh, it's again a very volatile counter. Do you track it firstly, is what Piyush is asking, and what should he do with this counter?
Avoid.
Okay, Sayan from Kolkata wants to know whether is it a right time to buy KPIT Tech for long term, Tapan?
No.
Chennai Petro, Rajesh, bought by a viewer at 845. This is Souvik from Kolkata. Should he continue to hold his 50 shares?
Let's hold on to it.
The next query is coming in from Srinivas, and he wants to know Polyplex Corp is holding 100 shares at a price of 2,200. Should he hold or exit? Any view on this, Tapan?
Hold.
A DLF stocks at a 52-week low, Tapan, is what Mahalakshmi suggests. Should she buy now?
Yeah, she can add.
The next query is from Kunal from Indore. He is holding 100 shares of BL at a price of 440. Short to medium term target on this, Rajesh?
Hold on to it. I expect a bounce towards 440 levels.
Our viewer holds BEL. Shankar from Delhi holds BEL. He wants to add another stock, Tapan, from the defense pack. What would that be?
HL.
Karthik from Chennai is holding 1,000 shares of IFCI at a price of 53. Should he average at the current level, Tapan?
No, just hold.
Bajaj Finance or Shriram Finance? What's a good investment right now? What would you suggest, Rajesh?
Shriram Finance.
Well, that's the end of the rapid fire as well as this edition of Fast Profit. But Tapan as well as Rajesh, thanks so much for helping us solve all these queries. But viewers, before we wrap, let's quickly listen into FM Nirmala Sitharaman talking about the government's recent announcement as well as on petrol and diesel this morning and the excise duty cut. Let's listen into what she has to say.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का, माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में, अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Tonight is about the people who built the places where we spent most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
To understand the Tamil Nadu twist, Join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship.
Hello and welcome back to NDTV Profit. You're watching KYC, that's Know Your Company, and today I'm not going to let you go through the hoops of guessing the company because it's a very interesting one in Veranda Learning. Now, the EdTech space has been very, very active. You've seen on the private side, Upgrad acquiring an academy, and the things start to look a very bit interesting for Veranda at this point of time, given that they've done a QIP just about 9 to 10 months ago, as well as the demerger that's expected very soon, and we'll get to that in just a bit. But an integrated online to offline edtech company, meaning that they made an acquisition of JK Shah classes, which give them access to a lot more on the offline side of things. Now, of course, they serve the learners preparing for competitive as well as professional examinations, something that's not new to India at this point of time, but a very lucrative opportunity for all those that are present in this space. Now, they operate across some key examinations of the government, CA, higher education, as well as the vocational segment, which is a very interesting one. Also, given the current context, what's happening with IT amongst others, they also largely continue to acquire 14 companies in the last 2 to 3 financial years, and hence building their scale across key verticals. Now, the revenue model for the company is very interesting because, of course, a fee-based admission as well as course enrollment program. The course enrollment also, of course, needs a little bit of marketing expenses, and we'll question that to the management. But when you move on and look at the other key aspects, which is, of course, the hybrid model that the company continues to operate in. When you also see that, the company's FY25 revenue grew by almost 30% to 470 crores, has been a decent growth, but profitability has taken a hit, and we'll get to that in just a bit. NCLT has cleared the next step in the company's demerger of the high margin commerce vertical, almost 50% of the company's revenue. Why is that? Is that needed at this point of time? We'll quiz the company about that as well. And JK Shah classes, as I mentioned, that the company had acquired, will be listed as a separate entity with that brand name. So you will have access to the high margin business separately, but does it make sense for the current shareholders is something that's important to note. Also, the shareholders, of course, are scheduled to meet on April 24, 2026, which makes it very, very timely at this point of time to speak to the management just before the meeting as well as before Q4 results. They have specifically mentioned now that they are aiming to simplify the structure, sharpen the company's commerce focus, and build the growth for their next vertical. And we'll continue to look if that makes sense for the future. Now, they have also mentioned that Professor JK Shah himself will be the chairman of the new entity, and hence gets that reputed brand name as well as the person behind the reputed brand name. Now, amongst others, the government coaching exam institution has looking to cross almost 100 crores of revenue as well. So this will be another growth vertical that we'll speak to about with the company, as well as the other aspect that South India focused test preparation for the government exams is a key growth vertical for the company at this point of time. They've also recorded the highest ever annual intake of 50,000 learners in the history of the company. And this, of course, has been a company that's listed for the last 3 to 4 years. And we'll show you the street cred as well as part of our KYC's 8 parameters. But largely, a strong growth driven by the offline, the online, as well as the residential formats for the company today. In terms of what we've seen in terms of the rating parameters, something that you viewers are familiar with, income statement will be something that we'll start with as well and continue to look at the other ones as well, like balance sheet, cash flow, as well as the company's shareholding as well. Continue to look at the other key parameters as we speak about. Of course, the operational highlights is something that you have to focus on for this company. But move on, look at the other parameters. Shareholding is one. We've changed a little bit in terms of the return ratios because it is a loss-making entity on an annualized basis. So we will be looking at the valuations as well as focus on the important outlook for the company also. But let's look at the first parameter now, which is income statement. Been a strong growth in the last year, FY25. Even when you look at the 3-year CAGR of 84% has been one of the major positives about this company. But when you look at the margins, largely been very subdued and has actually halved from the FY24 levels. Profitability has also taken a big knock in FY25, but this has improved in FY26. So there is some more resilience shown in this year. But because of what's happened, we've given the company a neutral rating at this point of time. But look at the FY26 performance. This is, of course, the latest quarter. Gone from a loss-making entity to a profit one. Look at the margins, though 32% is quite decent. But revenue growth will be something that we'll focus on with the company. If the growth 30%, which wasn't maintained in Q3, if can be maintained in the whole year. Also look at the margin trajectory. Shows you the perspective we showed about that FY25 was a dip. You also saw the challenges because of Baiju as well as what happened with that space, putting some pressure on the margins. But Q3 was a positive picture nonetheless. A neutral rating for now for the first parameter. When you look at the balance sheet though, that's the other key aspect. Because it's a loss-making entity, additions from profits don't go into the reserves. But still then, the reserves have actually increased in FY24, dipped again in the FY25 to 183 crores. So has been a bit volatile. In terms of the total equity, you've seen roughly a 250 to 350 crore range. But right now at the lower end of that, in terms of borrowings also, that has steadily increased. Now this was, of course, to fund the acquisition also. They've done plenty of them, but 2022 is when they acquired JK Shah. But largely the cash also has been depleted, and hence we've given the company a neutral rating because this position has improved in FY26, but neutral for now, even on the balance sheet. Let's look at the cash flow aspect of things now, because this is very important for a younger startup, younger platform company, and shows you that focus. Now from operations, you've seen an improvement, almost doubling in that sense from FY24 levels, FY23 levels as well. Profitability though has been a kicker in terms of weakness shown in FY25, and hence net cash flow has also been largely very stable, very, very volatile. Hence, we've given this again a very neutral rating. Being a little bit conservative, I have to mention, because of what we see in volatility as well. But pardon me, look at the operational highlights now. Continues to be a very important parameter for the company because the net enrollments have actually been quite positive at this point of time. So when you look at the FY23 levels, that has been increased. Or look at the last 2 years also, has steadily increased from 150,000 to almost 250,000 in FY25, and a huge jump of 328,000 in 9 months of FY26. So Q4 becomes yet again very important for the company. Shareholding again. So this is, of course, a thumbs up. Shareholding, because of the QIP done in this year, shows a dip in terms of the promoter shareholding. So let's go across, look at the next parameter now, and shows you the big dip of almost 20% for this company at this point of time. The shareholding, has largely been very, very volatile yet again as well. But look at the next parameter, that is street cred. It has been the other very, very volatile period because the company's earnings have also taken a knock. The last 1 month, because of the Israel-Iran war, has been seen an impact across a bunch of companies, so down 23%. But look at the year-to-date returns also. It's steadily been very volatile, 26% downtick in the last 1 year. And very importantly, stocks trading at the same level of roughly around the 130 rupees that it debuted at back in 2021. So roughly 5 years of no returns for investors. the people who invested in the QIP in July of 2025 was at 236 rupees. So you saw 100 rupee downtick for the company even from those levels roughly 9 months ago, and hence we've given this, of course, a thumbs down at this point of time. When you look at the next parameter though, valuations gets very interesting yet again, because you have now a listed peer in PhysicsWallah for the company. Now PhysicsWallah, a known brand as well, had a decent listing, but since then also the momentum has faded for this counter. So when you look at the price to sales multiple, because they both are at this point of time not profitable, you look at a clear comparison and a clear win in that terms of Veranda. But we are investors, we look at multiple sectors, multiple opportunities, and hence you have to take into careful consideration the other opportunities available, especially in the platform in the new age startup space, the likes of the Eternal, likes of Swiggy. You are looking at PB FinTech, so the opportunity, while large, if it's lucrative on relative valuation, becomes the key question, and hence for more certainty, we've given this a neutral rating for now. Finally, in terms of what could we expect, essentially in terms of the outlook for the company, multiple key aspects to look at. We saw the new learner additions have been quite strong. 1,000 crores in revenue is what they are targeting essentially at this point of time for FY30. Currently, roughly around 470 to 500 crores is what they did in the last year. 8 lakh plus enrollments by FY30 as well. Enrollment numbers have been quite strong, so this would be a very interesting to watch. And sorry, pardon me again. But the next one also, when you look at the key other outlook, has been on the EBITDA margin profile. Now, 32% that they did in Q3 could lend some more confidence to the company at this point of time, and hence becomes a very interesting aspect for them. But I spoke about the edtech opportunity being very frenzy in terms of multiple players that entered post the pandemic, and hence you saw the competition widening. Price structure is what everybody fought for, but now over the last 5 years we've seen competition waning away in terms of what has been a very highly competitive space. Users, students, all of them have also likely gone to a more set formula in that sense and gone back to look at the established names because of the serviceability track record as well. So when you look at the final ratings for the company, let's pull those up for all those 8 parameters that we've put at as well, and continue to look at this point of time. So in terms of the income statement, balance sheet and cash flow, we've given the company a neutral rating. Operational highlights have been positive, so we've given this a thumbs up. Shareholding, given the QIP has depleted below the 50% mark, is something that we here at KYC like the company in terms of having more than 50% ownership. Street cred is a downtake because of the underperformance of the shares, while valuation and outlook are 2 key aspects, and we will be honest here, given it a little bit of stringency in that sense. But overall, company comes up to a 4 out of 8, and we come at a very interesting time now to talk to the company. Suresh Kalpati, the Executive Director and Chairman of Veranda Learning, is now joining in at this point of time. Mr. Kalpati, thanks so much for firstly joining in, and a very good morning to you. You come at a very interesting time, right? Because on 24th April, the board is expected to meet a very key crucial meeting at this point of time. How are you looking at the company's performance over FY26 leading into that meeting as we look forward to what's the expectation from Veranda in FY27?
So for FY26, I think we are quite on target. Q4 has been a fairly strong quarter for us, especially going into the last month. We expect to be on target to cross in a combined basis over 500 crores of revenue and about 160 to 170 crores of EBITDA. So we are continuing to have strong performance across all our businesses, whether it's K-12, government test prep, or the commerce vertical under the branding of J.K. classes. And of course, our occasional business, which is now combined with SNVA Veranda.
Mr. Kalpati, also the one big crucial aspect has been the demerger of the commerce vertical. Now, a very high margin business, and you've spoken to us previously about it, but the rationale of demerging that business, and you've given a target of almost 1,000 crores in revenue by FY30. Does that include the commerce vertical, or will that be the non-commerce vertical which will be continuing to house under Veranda Learning?
So what we had projected is for our commerce vertical. And there are three key reasons why we are considering and we have been pushing forward on the demerger. The first is to create a very focused business which is focused on commerce. No better branding with a pedigree like J.K. Shah Commerce Education Limited. Professor J.K. Shah himself would be the chairman and CEO of the newly listed company. We expect that to happen sometime in June. With the projected EBITDA for that business alone at about 180 crores to 200 crores for FY27, we expect it to have a very strong listing. It's expected to achieve growth of about 35%. So it's expected to be a very strong listing. We expect that sometime in June. One of the key reasons that we had looked at for the demerger is of course, as I mentioned, was a very focused business in commerce. Also from a fact that it is a space in which we have very few competitors, if you will. With even the last exams where we had over 190 ranks, which possibly is about 85-90% of the ranks in the CA exams, with a pedigree of a brand which is over 40 years old, and alumni who are today the who is who in the financial services space, with a high level of profitability, significant EBITDA margins, we truly have no competitor as far as the commerce space is concerned. There is significant investments that is being planned purely coming from internal accruals to continue to build out. And as I internally keep discussing over the next 4 years, 5 years, make this the undisputed leader in the commerce space. We have always looked at the other spaces where people choose careers, whether it's in terms of the medical profession through need or government test prep for people wanting to become government bureaucrats, or for IIT JEE for people who want to become engineers. Those are spaces which, in a sense, we feel is fairly crowded with very strong players who are already there. In the commerce space, J.K. Shah Commerce Education would be sort of like an undisputed leader.
Fair
with
point.
Pedigree and testimonial.
Fair point, Mr. Kalpathy. So do you feel at this point of time, the valuation that you're getting for Veranda Learning for both the commerce and the non-commerce vertical doesn't justify the moat of the J.K. Shah brand which you've acquired roughly in 2022? Do you feel that the valuation for the commerce business should be 3x, 4x of what you're getting currently in the markets?
I wouldn't use as strong a word as you mentioned as unjustified. But I think given the growth that we are projecting for commerce at about 30-35%, I would expect it to be a very strong listing. Now, whether it would be 3 times or 4 times the current entire market cap of Veranda Learning, including the commerce business, one has to see. But from initial conversations I have had with very seasoned and institutional investors, I think there is a lot of expectation and people are waiting for this vehicle to invest into. But it's, the market has their own ways of behaving. But given just the profitability and the growth, I think it should be a very strong listing.
When we see the current revenue profile, Mr. Kalpathy, has been there almost 50% of your revenue coming from the commerce vertical, and then academic, vocational, all other contribute the rest 50. So almost 200-220 crores comes from the commerce vertical. That you're expecting to go to 1,000 crores with EBITDA of 50%. Is that correct?
That is right.
And for the other part of the business, because you also within the vocational business has seen strong growth, but the EBITDA profile isn't quite visible there yet. What do you expect the revenue targets for that business, for all those other non-commerce business, the expectations till FY30? Could you give us some projection?
So for FY27, we expect a non-commerce business, which is essentially our K-12 managed school business and the government test prep business, to contribute possibly about 50 crores in terms of EBITDA for FY27. I think one of the key drivers that we are very focused on at this stage is the occasional business that was one of the verticals of Veranda. We have put it together along with SNVA to form SNVA Veranda, in which Veranda has a substantial stake. It is headed by the promoters of SNVA, Vivek and Alok Singh. And one of the things that it does is it's a global university model with multiple universities in multiple geographies with multiple faculty. That combines very well with our occasional business. That business is looking at a significant growth path. Currently, that stock is held as a treasury stock in the non-commerce veranda business, and that is expected to grow strong growth in terms of valuation over the next 12 to 18 months. There are multiple options that are currently actively being discussed and closed. So we will talk about it over the next 6-8 months when they actually happen. So the non-commerce business as a K-12 and a government test prep, which are operating businesses, and as a holding in SNVA veranda, which is going to create substantial value.
Got it. But Mr. Kalpathy, you are giving projections for a business that's growing very well and the expectation of growth is very sharp. But for the other business that's already in the listed entity, the government side, the vocational side, I get about the SMVA business, but at least for the other two, could you give us some projections? Do you expect that revenue should double for both of them from the current 100 crores that we are seeing by FY30? Should that be the base minimum expectations that investors can have?
So these two businesses currently for FY27 is expected to deliver close to about 150 crores of revenue. I think over FY27, 28, sort of to look at an FY30 yardstick, we would at least expect this business to grow by about 150 to 175% in the same period.
Got it. And if you can give us some perspective on what's the current, in terms of growth projections, because you've done almost 14 acquisitions, JK Shah, of course, being one of the bigger ones, but in the commerce vertical also, you've had other acquisitions in this time. Do you feel that's a strategy that you're comfortable with and that will continue over the next 3 to 4 years as we go into FY30? Or is it that the market opportunity now doesn't allow so much competition? Because we've seen a consolidation in this space also, right? And recently that big acquisition in the private space of an academy shows the significance and the toughness of companies who've survived. So do you think that acquisitions will limit now and essentially the current businesses will have to grow and show those projections?
I think the acquisitions that have been done predominantly has been to create these 4 verticals, which we have done. As far as going forward, I think we are very clear that we are not looking at any more acquisitions. We got everything that we need to organically grow. We have created enough moat in terms of competing advantages in all of these verticals. So we're really not looking at any more acquisitions. We're not looking at any further dilution, nor are we looking at taking on any further debt for scaling our business, given our strong internal cash flows. So the first 3 years of Veranda was acquiring, consolidating, and now the next couple of years will be to unlock value for all the shareholders who've been with us for the last 3 years.
Got it. And that's a big statement coming in, Mr. Kalpathy, that you do recognize that, there has been a lot of investors who got into the QIP as well at a much higher price. So you are giving that confirmation of debt being manageable and equity raise also being limited to what has been. So got that point. The other aspect has been the enrollments. That's been very positive, especially since FY24, the 25 and 26 year to date. What has led to that growth? And is that largely been through the commerce vertical? Would that be a statement that would be right to make?
Commerce has definitely been on a very strong growth trajectory, both in terms of registrations of students and in terms of revenue and EBITDA. Having said that, very recently we put out that our government test prep business, which is spearheaded by Veranda Race as a brand, went doubling its revenue in the last 3 years. When we came in, it was about 50 crores. Very recently, a couple of days ago, we crossed a revenue of 100 crores. So even the non-commerce businesses are now on a strong trajectory of revenue and enrollment growth, largely because we have been through a path of acquiring, ensuring they are regulatorily compliant because they have been unlisted before they came into our fold, and then setting up an integration pathway. Having all of that completed in the last 1 to 2 years, they've been on an organic growth. And that's where you are really seeing the results coming. The integration and efficiencies already now in place is driving the growth going forward.
Well, Mr. Kalpati, thanks so much for firstly joining in, because I know Q3 was a tough one for you. You are giving in some major projections for the next few years, but a key meeting happening on 24th April. So we'll touch base with you yet again for the second listing to happen, which is the more lucrative business, as you've highlighted. But thanks so much for joining and giving us time here at NDTV Profit.
Thank you so much.
Well, that was Veranda Learning, a very, very interesting opportunity right now for a space that's been hot in terms of consolidation. Will Veranda go on and survive this turmoil? The second listing very soon in FY27 will be something to watch out for. But that's all the time we have on KYC. Thanks so much for watching. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called it's triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition from surgical iron play.
Uncertainty of US-Iran peace deal continues to loom over the Indian markets. Nifty slumps over 1.5%, while Sensex slips over 1,200 points, all sectors in the red, barring Nifty IT and Pharma. PSU banks and media cracked the most, down over 3%. The rupee continues to fall, slips past a fresh psychological mark, hitting 94 against the US dollar for the first time. The move underscores sustained pressure from global dollar strength and risk-off sentiment, keeping currency markets on edge. The government has revised its fuel duty structure, cutting the special additional excise duty on petrol to rupee 3 per litre and scrapping it entirely on diesel as Middle East war concerns continue to rock oil prices. Tata Motors passenger vehicles under pressure today after Jaguar and Land Rover temporarily shuts the production at its Solihull plant in the UK. The shutdown is due to a part supply issue impacting production of key models at the facility. While the halt is expected to be temporary, the development has raised concerns around near-term production, visibility and earnings impact. Brigade Enterprises, that jumps nearly 10% today after the company announces 2 new residential projects in Bengaluru, amounting to over 1,800 crore rupees in potential revenue. The surge stands out amid a broader market decline, highlighting investor optimism around the company's strong execution and entry into high-potential premium housing corridors. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar and let's take it straight to the markets. And yes, all's not good, or should I say oil's not good? Because for the Indian markets, it's the crude which is really playing truant as the single biggest impact really coming in when it comes to the crude oil prices. And because of the flip-flop in terms of the US-Iran negotiations and de-escalation of the Middle East war, crude prices remain elevated, and therefore the Indian market is also seeing that kind of a pressure really building because of the crude oil prices. Also remember, rupee is hitting a newer low for the past many days. In fact, a little bit of recovery in the last trading session has also been taken in, and 94 past has been the kind of rate that rupee has got against the dollar. So it's coming in as a worry. All sectoral indices are in the red at the moment, barring a few with minor gains. Let's focus on one particular counter because of the news developments we are tracking here. Biocon, which has announced a top management reshuffle with changes at both the CEO and CFO levels. Siddharth Mittal has resigned as the CEO and MD and will move on to a new role within the group. Varsha is here with all the details of the top brass changes at Biocon. Varsha, tell us.
Well, yes. So if you see Siddharth Mittal, who is the CEO and Managing Director at Biocon, has resigned, but he'll be with the Biocon and will, have some other leadership role, which is undefined as of now. And also one important thing is Shrihas Pradeep Tambe, who is has been appointed as the additional director of the company, and he currently, if you see, he is the Chief Executive Officer and Managing Director of the subsidiary company that is Biocon Biologics, and he has been appointed, or rather for 5 years, effective from 1st April 2026, subject to the approved of the shareholders of the company. So this is in all a positive news, considering that Shrihas Tambe is the backbone when it comes to Biocon Biologics, and will also shape the future of Biocon overall, considering the company going into biosimilars, which is the next leg of growth for the company. So overall, if you see, Biocon will be defined as a biosimilar company, and Shrihas Tambe is the main guy behind that.
All right, Varsha, thank you so much for getting us those important details coming in on the top management changes at Biocon, and that particular stock is down close to 2% in trade. Let's take it straight across to the market, and how should one trade in a highly volatile and today a weak market. Nishal Maheshwari, market expert, joins in now. Nishal, it's one day up, one day down. It's volatility, I would say, instead of relief that came in for 2 days in the middle.
Yes, I think it's a global situation basically, which is also up and down every day, and that's why I think it's getting reflected in the market.
That's right, Nishal. Yes, but how does one really now understand the crude play? The way the de-escalation efforts are going on, and it looks like a one-sided affair from the US, because Iran has rejected their last proposal. So how should one really take cognizance of the kind of uncertainty that's there in the market, and what happens to the ones who bought in hordes, considering there was a relief in the last trading session and now the markets are down again?
So I think it's a volatile market. If you are a long-term investor, then maybe the valuations are interesting at these levels. And every down price from here, basically one can keep on accumulating in smaller batches. But if you are a trader, I think this is the best market to be avoided. There is no point on doing unless you are a short-term, you are on the short side. Then one can continue to keep on shorting this market because there is too much uncertainty. But I think the best thing is to avoid the market for the moment.
All right, so you're saying avoid the market for the moment, but what all factors are getting baked in or already baked in into this market, Nishal? And are we prepared for a much worse condition? And second, also how now RBI will take this particular situation where inflation is going up really on the ground level because of the various energy supplies being constrained.
So I think as far as inflation is concerned, I see the number maybe going up to 4.5%. I think which is okay basically given the current situation. I'm talking about at the current market price of oil, until it takes off big time. Then we have to take a relook at it. At the moment, I don't believe that RBI is going to be looking at any rate hikes for the moment. Given the inflation is sort of okay basically on a long-term trajectory of 4%. I think that's where I think maybe it will go up 4.5% is what most of the economists are projecting. So that is as far as inflation is concerned.
Right. So, Nishal, there is one more aspect, which is that a lot of global brokerages have really downgraded India's expectation and potential for growth, backed by the kind of uncertainty that's taking place, and also that India is the worst affected market when it comes to the oil supplies, when it comes to the Strait of Hormuz being constrained. Now, how does one read into it, and how worried should the investors be of this kind of downgrades really coming in and lowering the earnings potential as well as the overall outlook?
So I think market is always ahead, and market has gone ahead and already discounted quite a bit of that, basically that the GDP is going to get downgraded. I think the worst I saw was from Goldman Sachs, which came with around 5.9% downgrading from 7.5%. So already I think 150, 160 basis points they have shaved off. That is the worst kind of a situation, worst case. But I think 60 to 80 basis point is most of the other economists are putting out. So maybe from a 7.5, you may go down to 6.7, 6.8. But that's also a pretty decent number, basically, given this kind of volatility in the world. Now, in this background, we have to see that market is already down or almost 10% from the top. So I think quite a bit of it is baked in. At the moment, I see that the market is now talking about maybe 5-6% kind of earnings growth down from 15-16. That is what the market is baking in for FY27. And I think that's a fair number, basically. That's why I was saying, if you are a long-term investor, it could be a good time to actually start accumulating from the market.
Yes, but Nishal, also the question is, for how long and how much cash should you put in right now? What if this particular situation really persists for longer than we really expected? So that is one question. And how much more downside on Nifty 50 are you penciling in, considering that the de-escalation doesn't happen in the given 10 days?
So nobody knows whether it's going to happen in the 10 days, 20 days. So it's a difficult call one has to make, basically. So if you are a long-term investor, you are saying invest for next 6 months, 1 year. And I'm very sure basically this cannot last for that long. So that is a time frame basically which I'm talking about. Basically, if you are an investor for more than 6 months, a year, that's a long-term investing, and that's where you should be. And from here onwards, maybe there is another 5% downside in the market, maybe 7%. But I think 20,000 Nifty is a very, very strong. Any way we calculate it, I think it's after even taking consideration saying that India is going to get even diluted as far as PE is concerned. In that scenario also, I don't think so Nifty should go below that. So I'm saying we are only around maybe 5-7% away from there. So every fall of maybe 200, 300 points, one can keep on accumulating. So maybe one can form batches of 15% each. If one has to spend 100 rupees, every 15 rupees one can do with the 250, 300 point fall from here.
All right. That's a good suggestion, Nishal. So thanks so much for joining us with your insights on the market, and also a strategic suggestion for the investors to really put in money in a very uncertain time. All right, let's focus on one IT bellwether. We are talking about Infosys, which has announced 2 acquisitions worth about $500 million. And those 2 are Optimum Healthcare for $465 million, or over 4,300 odd crore rupees, and Stratus Global for about 890 odd crore rupees. But stock is slightly depressed, but it's an otherwise very weak market as well. Amit Khanna, who's a partner of digital and AI at Grant Thornton Bharat, joins in now to discuss what it really brings to the table for Infosys. Amit, with these 2 acquisitions, you have a good view on what these companies really bring to the table. How do you see this acquisition and the benefits for Infosys?
Yeah, thank you, and good afternoon, everyone. I think these acquisitions are going to give Infosys a positioning from a mid-tier IT services company to end-to-end digital transformation player, particularly in the healthcare area. The market is moving for more verticalized sector-specific solutions. Optimum is very, very strong in that space. It is very strong in the provider area, which is where the gap exists for Infosys. And this will give a lot of solutions in the portfolio of Infosys, where Infosys can do end-to-end from a mid-tier to a large value-accredited solutions, particularly in US market, which is perhaps the largest for healthcare.
Right.
From the insurance one, I think the same analogy, though I will say the Optimum is more strategic acquisition in my mind compared to Stratus.
That's right. And it's also quite a large amount as well. $465 million that have been spent. So Amit, what does the Optimum Healthcare IT really bring to the table? And when we talk about the AI thrust amongst the big tech companies, how does Infosys now position with these acquisitions?
Yeah, so let's talk about Optimum for a second. So Optimum is very, very strong player when it comes to provider market in the healthcare space. It's been doing the digital transformation in that space very well. Ideally speaking, the healthcare is one of the sector which is very specialized in the nature. So if you see the large player, they have very strong vertical presence in the sector, not the horizontal presence. So look at Accenture Health or a Cognizant, who are big in the healthcare space. They are very, very verticalized when it comes to the healthcare. Also, the client tend to buy end-to-end at one go. So they don't go to IT service provider for providing a small horizontal layer of IT services. So in that sense, this will give a very good strength to Infosys to actually pitch for those kind of a player. And it will be an emerging consulting digital transformation player specifically in the healthcare. Now, looking at how does it help them against their players, I think one, they can pitch for the larger margin game. They can play the whole AI game very well because the optimum positioning is AI-driven digital transformation rather than the classical way of in the digital transformation. So that will also help Infosys to up the game in that market.
Right. So, Amit, when we talk about the similar capabilities being there for other competing companies in the IT sector in India, who would rank first? And with this particular acquisition, how does Infosys really figure on that pecking table?
It's difficult to put in exactly the ranking here, but I will say that Accenture, Cognizant, they are way ahead if I look at the larger player. But also there are large specialized players in this market who are doing very, very well, including players like the Optums, the Philips Healthcare, the specialized players like IQVIAs of the world and all. They're all doing fairly well. Now, Infosys, I don't think anything will change overnight, but now it has large onshore capability to support the whole healthcare piece. Another thing I want to highlight, both the acquisition which Infosys did does not have a very large delivery setup in India. So Infosys also has a way to leverage the complementing skill, because Infosys is strong in doing large scale delivery from India for a player where they have only the small front-ending team. Now it's got a very large front-ending team there, which is a consulting team, and also a very large tech capability sitting in India. So together they can make a lot out of it, and the time will tell what they make out of it.
That's right. But Amit, a lot of action is really taking place in the AI capabilities of the Indian IT companies, or at least the top 5 ones, and the mid caps like Coforge are also taking a stride. What are the trends really picking up when it comes to the AI capabilities, and how good is the pivot for the IT sector? Because a lot is being seen in the market where there is a divided house in terms of those who really believe in the IT companies and the ones who think that it will perish.
So in my view, I think a lot of Indian IT services players still do a lot of commoditized work. Now that part of the work will be taken over by AI very soon. It does not mean the number of people required to work will reduce drastically, but the nature of work will change drastically. So they genuinely need to move closer to the client, closer to the solution, and application of AI to bring in the value to the client. I think, and all of them, all the top 5 players and some of the small players are trying to move to that direction as much as they can over the last few years. I think the trend will continue, and we will see a decent amount of displacement of the positioning. The companies which will be able to do this successfully will actually succeed. I genuinely feel that India will give few more large IT players over the next few years purely because of this displacement and opportunity which is getting created.
That's right. That's the right word, Amit. It's an opportunity for many other players to become bigger as well, besides the pivot of the already existing IT companies. Thank you so much for joining us with your insights on the AI thrust of the IT companies, and especially what Infosys really brings to the table with 2 acquisitions that it has announced overseas. Thank you so much, Amit, for joining us.
Thank you.
All right, next we will chat about something which has really been the hot topic of discussion, especially with the IPL's season really starting in April, and ahead of that, two big bang acquisitions, two teams getting sold at over $1.5 billion. We are talking about RR and RCB. There have been a lot of talk about the steep valuations and also the earning potential of the IPL teams, and also how does IPL really now look as an asset class, and will it deliver the returns after being bought at these valuations? Let me take all these questions and analysis to Jayavardhan, who's the co-founder and CEO of N-Tracker. He's joining us right now live. Jay, always a pleasure speaking to you on NDTV Profit. My first question to you, in terms of the profits, there has been a decline for majority of the IPL teams on a YOY basis when we compare 2024 and 2025. Your analysis on that, and what are the factors really driving the earning potential?
So if you look at, revenue and profit, both have declined for most of the IPL teams in the last fiscal year, that is FY25. And the major reason is, a decline in central broadcasting right. So this is this comprises almost 50% of income for most of the IPL team, and the rest of the income, comes from sponsorship, merchandise, and ticketing business. So clearly, stress at the profit is being guided by, decline in the revenue. That is the answer to your first question. And second, what's driving the valuation of, the two IPL teams which got sold out recently, RCB and Rajasthan Royal. So the first reason is, it's a very limited access. IPL has only 10 teams. So you get very rare opportunity to buy a team, and the brand value attached to IPL, I think that's the reason for driving the valuation. It's intangible, but I think there are only 10 teams, so limited access, and access to the room where you can sit with the businessman and tycoons and conglomerates. So I think the access is the major reason behind driving the valuation.
So Jayavardhan, when you say access, yes, scarcity premium is there, but it is a huge amount. And the kind of valuations that have been really commanded by the two two teams, RR as well as RCB, are in line with the consumption companies' deal valuations. They are akin to that. So, and also Aryaman has made a statement, Aryaman Birla has made a statement recently saying that IPL is quasi-consumption. How do you assess this particular aspect?
So, of course, apart from the brand value and brand affiliation, there is a, future opportunities in sponsorships and merchandise business. So if you look at RCB balance sheet, apart from central broadcasting, IPL valuation are rising because of three things. Guaranteed central revenues, scarcity of teams, and massive brand monetization potential. But 25x revenue multiple, this is clearly a long-term strategic bet. And it looks irrational to us, but I think in a long term, we have seen Vijay Mallya, tweeting and tweeting around and saying that 500 crore investment translated into 16,000 or 18,000 crore business. So, over the next 10 years, this is going to rise multifold.
Right. What are the reasons for this to rise multifold, and what are the monetization aspects very quickly, Jayavardhan?
So, you look at the expansion. Apart from the men's IPL team, women IPL team is also coming. So that is the, major driver. Apart from that, all these teams are also playing different sort of leagues globally. So, if you look at Kolkata Knight Riders, they play around 4 leagues globally, apart from IPL. So there is a clear headwinds there. And, the sponsorship deals are also going to be, fat and big in the coming time, although the central broadcasting, income will come down.
Right. Jayavardhan, it's always a pleasure to speak to you. And many aspects covered there. The profits have reduced on a year-on-year basis, and these valuations have been steep, but it's also the scarcity premium that is really driving it, and it's become a quasi-consumption play with a huge brand being created as IPL as a franchise. Thank you so much, Jayavardhan, for joining in with all the details and your insights on that. All right, let's take a quick look at the market at this particular point, and no let up in sight for Nifty 50. In fact, it has dropped slightly further, 1.6% down on Nifty 50. Keep an eye out on the market. There is no relief coming in, and the weakness really persists. With that, it's a wrap on Markets at 12, but keep it with NDTV Profit.
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and today we have Alex Matthews standing at the NDTV Profit Market Pit with all the action. Alex, lots happening in terms of markets, and welcome to Trending Stocks as well today. What are you picking up in terms of all the action?
Well, Hira, it's an absolute pleasure joining you on this show, and it's a happening show. I've been looking from the sidelines, and today I get to participate. But it's not a pretty picture. Of course, we're off the low point of the day, but we're very close, about 1.5% off. And there are a few factors that are playing out. It's a global risk-off sentiment towards the end of the trading week. And you saw that in the overnight handover from the US. This is something that is playing out in India and across the board in the Asia-Pacific region as well. And I wouldn't be surprised to see the European markets move in the same manner. So global risk-off sentiment currently playing. You have the Nifty 50 that trades near the low point of the day, close to 400 points in fact at this juncture, 359, 360 or thereabouts, but it has reached that 400 point mark earlier on in the session. India VIX, this is very crucial, has spiked as much as 8% to about 26.5, 26.6. So it's as high as it has been in the recent past. You have a situation where the broader markets are underperforming, or have come off even in the span of the last 5 to 7 minutes or so, down about 1.8% or thereabouts. So the breadth is not very pretty at this moment. And you're also seeing uncertainty that persists globally, because you have a 15-point message that was sent out by the US to Iran in these so-called negotiations that are taking place, and Iran has responded with its own set of demands, 5 of them. And there is no seemingly end to the conflict at this point. And so that uncertainty is playing out in energy prices, crude prices, as well as in the risk of sentiment that is currently playing out. And finally, and most importantly, in today's context, is the fact that the India rupee has crashed quite significantly. It hit a low of 94.65 earlier on in the session. It still hovers very close to that 94.6 mark. And so it's important to see what the Reserve Bank of India's response in this context is going to be. We've already seen the big story of the day, Hiral, which has to do with the excise duty cut on both petrol and diesel, at least to a certain extent. That's relief to the consumer as well as to the OMCs.
Yeah, I mean, but not for the government, Alex. That's the key from here on, and how they manage this dilemma is the key question, and that's going to be a focus point at our 1 p.m. special today as well. But let's quickly look at the watch list. ONGC, the gains in terms of crude prices are auguring well for the company, and that stock is trading in the positive. OMCs, however, are continuing to see losses, and that's the reason why the pressure continues. However, a relief coming in the form of excise duty cut.
Infosys has acquired 2 US companies, and that's the reason why we're talking about it, along with Tata Motors PV, where JLR has halted production once again in the UK. HDFC Bank has snapped the 2-day gaining streak. In fact, what has happened is CLSA has removed HDFC Bank from their portfolio and replaced it by HSBC. HEG Graphite India, both of these counters are buzzing in trade because graphite electrode prices are expected to rise. And you have Acme Solar, which has gone ahead and commissioned an additional capacity. The Bangalore residential project launch, which has a GDV of around 700 crores, is what is keeping Brigade Enterprises in focus and up in trade. And you have a OFSS, that's Oracle Financial, on the back of a mega deal, seeing some good boost. Lloyd's Engineering was gaining in trade, and today it snapped the 2-day gaining streak, so some bit of profit booking coming in on that counter. And Sagility, a lot of brokerages which are turning positive, and they've reiterated their midterm growth targets. So all of this and more on trending stocks today. But let me go back to Alex to take the rapid fire with Akshay Bhagwat of JM Financial.
Absolutely, Hiral. Well, let's keep it rolling. Akshay Bhagwat joining us. Good afternoon, Akshay, and thanks so much for taking the time. Let's start things off rapid fire. And let me first ask you about HDFC Bank. We've seen it plumb lower lows practically every other day. What's the trend on this one?
No, Alex, the trend is negative for HDFC Bank. 780 is the resistance, and possibly 720 is where the short-term downside is possibly opening up for HDFC Bank.
Okay, what about HEG and graphite? Because these are reacting to news-based events and the possibility of an increase in graphite electrode prices.
So positive momentum, 600 can be the possible target for HEG, and for Graphite India, the upside can be till 690 to 700.
Another stock in the news, Acme Solar. You heard about the commissioning of that new facility. What is the view on the chart though?
Positive view, 250 is the short-term trading support, 295 can be the possible upside.
Brigade Enterprise from the real estate pack did particularly well in the early part of the session but cooled off a tad bit. Can it still be bought for the potential upside from this point?
Volumes are strong, but better to avoid. Technical trend is negative. 750 is a strong resistance.
Oracle Financial Services was one of the top gainers, but then again it's cooled off from the high point of the day. Would you buy at this point?
Avoid strong resistance at 7,000. Better to avoid.
What about Lloyd Engineering?
Lloyd Engineering, that it's more sideways, give it a miss.
Give it a miss. So most of the stocks here are a miss because you're not certain about the volatility for the market as a whole, and certainly not for these individual names.
Absolutely. Let's in fact see what's trending on Google, Alex, and if Akshay has any picks coming in from that end as well, because some of the stocks which are trending on Google are very interesting to see. From a Bajaj Housing to a BEL, ITC, RVNL and Tata Steel are the ones that, you know, are trending on Google. Let's pick up a Bajaj Housing first. Akshay, anything that you have in terms of strategy for a Bajaj Housing which has been trading under pressure today?
Still it's negative, it's an avoid. Possibly 70 is the downside I foresee in Bajaj Housing for short term.
Okay, what about BEL, ITC, RVNL or Tata Steel? Anything that you like from these names?
ITC and Tata Steel, these two stocks can be considered. ITC is more of a bottom fishing candidate. Downside possibly looks capped. 290 to 85 is a strong support, and if market supports a rebound, can see 315 to 320 in the making. Tata Steel is another buy candidate from a short-term trading perspective. 185 is a strong support, and once the 200 resistance is overcome, we are looking at targets of 210.
Right. All right. So interesting names. But one of the stocks that stands out after an analyst meet that was done a short while back is Sagility. And you've had quite a bit that has been said about the prospects in the space that it operates in, particularly in the US, and the fact that there is potential for strong EPS growth, close to 20% actually, I read in some brokerage notes. But let's find out what exactly the takeaways are from the various brokerage notes that have come through, and quite a few are positive as well. Jasmeet is joining me to tell you just that. Jasmeet, one of the stocks of the week actually, because of the way that it moved on Wednesday, why is it still in focus today?
Well, Alex, thank you for that. If you look at Sagility as a company, it was in focus after Nomura's note where it saw a stock of 7%. But today it remains in focus on the back of that analyst meet. So here are the key takeaways from the analyst day. Firstly, the management retains their guidance for low double-digit to mid-teens going ahead. Further, they also see the overall shift coming in from the employee-based model and moving into project-based model, where they see that employee-based earning will be lesser and company will move into the project-based model where they'll start earning based on the projects they do than the fixed price projects. Secondly, they also restates that going ahead, the AI will play a very structural role for the management, and they also want to increase their stakes when it comes to provider segment. And given the overall US pressure which they're facing in the insurance company, that would act as a tailwind for the company going ahead, and that would help the company grow further. And that's the reason the stock is buzzing in trade and remains the focus.
Yeah, absolutely. So it's up about 0.4% in trade today, but it was one of the big gainers on Wednesday. We've got Mr. Chokalingam joining us right now. Mr. Chokalingam, as always, a pleasure speaking with you. Let me start with a question on Sagility and whether or not you think that there is significant potential upside. There are brokerages that have given it a thumbs up. They have buy recommendations. But what's your view on the stock?
Yeah, it looks good. I analyzed it. Whether you take a year-on-year basis for quarterly result or annual result, the growth seems to be quite impressive. Stock also corrected, and PE also corrected to a decent level of around 21. So therefore, one can consider buying the stock.
So that's the view on Sagility. Let's talk about the graphite electrode pair, which is HEG and graphite. Now, remember, in case you don't know, these are companies that produce graphite electrodes, which is used in production of steel. They're used specifically in electric arc furnaces, but they're also quite a bit dependent on what plays out around the globe, particularly in China and in the US. So let's go across to Parth, who's joining in and who's got the details on why these two stocks are reacting sharply today. Parth.
Thanks a lot, Alex. So, with the weaker markets today, we have two companies standing out, which he rightly mentioned are HEG and Graphite. And the reason why these two are up today is because the US-based industry leader, which is Graftech, they have increased their per metric ton prices of graphite by around 600 to 1200 per metric ton. And this translates to a rise of around 15 to 30% from the recent levels. So now this gives our domestic players a good enough pricing power that the global prices are increasing, so it should impact their profit margins as well as EBITDA as well. So that is something that we need to track moving forward. And the reason why the industry leader has increased their prices is because the raw material, which is needle coke, that is mainly used in graphite, has gone up due to the geopolitical tensions and the soaring crude prices.
Yeah, absolutely. So quite a few supply chains around the world are getting impacted. You heard just a short while back how the lack of helium supply is affecting chip manufacturers as well, because Qatar accounts for 1/3 of the production of helium around the world. But specifically on graphite electrodes and HEG and graphite, Mr. Chokalingam, I don't know what you think about the fundamentals, because they're yet to actually announce that they too have taken price increases. Would you say that they're adequately poised right now, valuation-wise, to buy into?
I would not chase, after this rise, because user industry is steel industry, and because of this war, already this morning, if you see the global institutions have, revised downward the global GDP growth, and steel industry is highly sensitive to the global growth. So unless it corrects 5-10%, I would not buy them at these levels.
So that's with regards to where graphite companies go. But moving on, one of the biggest talking points right now is what's happened in terms of the excise duty cut that the government has given out. Now, to be noted that this is not something that will be passed on to the consumers. This does come in as a benefit to your OMCs because of the rising prices. The other way to look at this would have been that they would have to pass on the price hikes and give it to the consumers. So instead of the consumers facing a price hike, here they will be at a status quo. But this does become an issue when it comes to the government's revenue stream. But let's listen in to what Finance Minister Nirmala Sitharaman had to say about the government's recent announcement on petrol and diesel excise duty cut.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
So that's an absolutely critical trade-off. The government choosing to sacrifice on revenue to prevent the rise in inflation. And that's a very important talking point heading into the end of trade today as well. But one of the stocks that is bearing the brunt of selling, and this is again on the back of supply chain issues, it's Tata Motors passenger vehicle. And this is because Jaguar Land Rover has announced that one of their key plants, that is the plant in Solihull, is going to be shut for a period of at least 2 weeks. Let's find out from Puneet why this is significant. Puneet, for Tata Motors PV and JLR in particular, the problems don't seem to be going away, right?
Well, it seems to be a continuing downward spiral. Essentially, which started in last April of 2025 with the tariffs for Donald Trump, and then post that you've seen the cyber attack come on in the month of September. So you've already seen production losses in FY26. That will be how the company ends in FY27 and also starts the next year as well, because you are seeing consistent pressure on production, as you rightly mentioned, in the plant in UK. Period of this is a pre-scheduled shutdown also for Easter holiday, so there's some bit of overlap in that sense, but the company is yet to confirm the story, at least via an exchange filing. This is of course media reports putting out this information first, but the important part is that it's been one of the years where Tata Motors might find it difficult to even cross 3 lakh mark for JLR, which generally operates at 4 lakh in terms of sales performance per year. But just in the first year itself, post the demerger, management change going from Mr. PV Balaji, the CFO is now the CEO of the company, there seems to be a big challenge for the company going ahead.
Okay. Well, so that's the picture on Tata Motors. Mr. Chokalingam, specific question on Tata Motors PV, which is that between the pairing of Tata Motors PV and CV, a lot of people were preferring CV because of the upcycle in India. Would you also have a similar opinion, and would you stay away from Tata Motors PV, or does it become attractive when it has fallen as much, and does this actually capture all of the negatives? Is that in the price?
I would avoid Tata Motor passenger. In fact, on this same channel, I've been consistently saying for the last 4 to 6 months that Tata Motor commercial vehicle business is far superior for 2 reasons. Tata Motor PV has a lot of volatilities in the financial performance, business operations we have been seeing for many years, and its investee company also play on the global theme. Whereas Tata Motor CV, the commercial vehicle is a play on domestic demand, and its investee company Tata Capital also is a play on domestic demand. So that is why I consistently prefer Tata Motors CV to Tata passenger vehicle.
With regards to where Tata Motors PV and CV goes, and Mr. Chokalingam gives his pick out of the two. Another stock that's buzzing in trade today, Infosys, on the back of the acquisitions it has been making. The stock now from the day's highest levels has cooled off, trading absolutely flat. Jasmeet is with us to tell us more as to what these acquisitions could mean for an Infosys and what brokerages make out of it as well. Jasmeet, over to you.
Well, Hiral, thank you for that. Infosys is on a spree to acquire companies. Well, they have done 2 acquisitions in the US territory of roughly 5,200 odd crores. The first one is in healthcare space, Optimum Healthcare, acquired for nearly 4,300 odd crores with a valuation of 1.7 times the price to sales, which seems reasonable. The second one is Stratus, which is in the insurance segment space, where they have acquired this entity for 900 odd crores for a valuation of 2.2 times on the price to sales ratio. Well, if you look at the other key aspect, with this particular acquisition, company extends their strong holding in the US in healthcare and insurance space, which they see growing, and they also wish to leverage the overall AI platform that's Topaz to increase their client traction going ahead. Further, with this, the company marks 3 acquisitions which are still in pending stage and expected to close by Q1 of FY27 going ahead. Well, we also have brokerage notes which have come up and given their opinions and what they feel of how much of growth will this acquisition add to the company going ahead. We have Morgan Stanley on the overall counter which says they maintain equivalent target price of rupees 1760, while they say that the overall impact by this deal in FY27 could be a 1.2% add-on to the revenue going ahead. Further, we also have something like a Citi which says that they maintain neutral stance with the target price of 1395, and they note that they see overall 1.6% of increase in Infosys revenue going ahead in FY27 with this particular add-on. While they say that three things to watch out would be the overall commentary in the Q4 of how much will the revenue add up from these acquired entities to the Infosys going ahead. Secondly, they also make a note that the overall deal closure timeline is a very crucial thing to watch out for. While thirdly, they also state that with this, we can expect a lot of other IT companies to move ahead with merger and acquisition to acquire more entities and increase in inorganic growth, given the organic growth has been flattish over the last few quarters for the companies.
Thank you so much for that. In fact, Mr. Chokalingam, a quick view when it comes to Infosys.
Certainly, it's a buy. I strongly believe 10 to 15% return possible for 4 reasons. Stock has corrected, 18 PE. These acquisitions would help. The company has started integrating AI into its operations, and also the rupee depreciation, which would be favorable to a company like Infosys.
That's with regards to where Infosys go. Moving on, recent listing, which is Tenneco, that's another stock which has been in focus as well. In fact, let's hear out what the management had to say. My colleague Puneet had a conversation with Arvind Chandra, the whole-time director and CEO.
Every time there's technology, complexity and disruption involved, Tenneco actually leads the way. And the Da Vinci is yet another example of that, right? What it does is it's a good marriage. I call it a good marriage of high technology and affordability. In India, everything has to be affordable to the end consumer. And the challenge given to us by Mahindra, we accepted that to say, okay, what is the world's best mechanical suspension that is non-linear damping? So today, most of the solutions that we have in the field are the conventional one-tune kind of ride, which means you are never comfortable in any road. Not in a regular road or an uneven road or on a speed breaker or on a bumpy road or a pothole, right? But non-linear damping through mechanical suspension gives us the ability to take it to the next level, where we have these hydraulic valves that interact with a shim stack. And depending on the forces, the shim stack allows selective hydraulic flow. So that's what I would call mechanical ingenuity. And we do that without using electronics, without using software, without using sensors, without using motors. So that's a brilliant idea that has now come into the market. And we're very excited about it because obviously we thank Mahindra for their support and giving us the challenge. But this also finds a much broader use across other OEMs, across the entire passenger vehicle space. We think it's going to become a big disruptor in the Indian market.
Well, that's a very big point that you make, that it comes without the electronics part. So you won't just see it in the high-end market, you will see that across the board. And with the 7XO, you have got it in place. Now, of course, a lot of processes that you are seeing around is regarding that product. So you are seeing that continuous demand being there as well. And as you rightly said, listed in November, had a bumper listing, bumper subscription as well. If you talk about the two key products, right, one has been, of course, the clean air systems. That is where you manufacture the exhaust, and then the suspensions which come in the ART system, as you mentioned.
Yeah.
In terms of your capacity, you are operating at a very high utilization. Do you feel that there will be a need for a lot of capex now that we've seen the GST rate kicker come in as well for demand? Do you think that a lot more capex for both these are on the anvil now?
Absolutely. So right now we are in the Hosur plant near Bangalore. So this plant makes 7 million shocks a year. And we're running up to here in capacity. So obviously, we will need to add more capacity in new plants. We haven't made any official announcements yet, but it's just a matter of time that that happens, because our order book, we said that in our Q3 as well, that our order book has been very strong. The 2028 revenues are already 100% booked. That's great, which gives us a nice double-digit growth. And that means that we need to add more capacity. Now, we just announced a new plant for the clean air business, which is the exhaust systems, in Kharkhoda in Haryana. But it's just a matter of time that we will be adding more capacity here as well, because the order book has been very solid. Our capacity utilization rate has been very high, and that explains why our ROC has been very high. We're close to 60% ROC. That's what we reported at the end of FY25, because we got a very unique, standardized and modular approach to manufacturing. And you might have seen that over here, where we call it the Lego brick model, right? So our basic component is the same across multiple segments, our multiple vehicle variants. but we run that at very high capacity utilization. And because of that, we have this unique strategy that allows us to have high capital efficiency, and that's why the ROC is so high. And of course, as we move up the technology evolution curve, our margins will also improve.
So that's the management of Tenneco. In fact, very quickly, any view, Mr. Chokalingam, when it comes to Tenneco?
Hold in case it declines hard. Business looks too good. Return ratios are very good. I'm giving only hold because 25 revenue growth was not missing, but because of the margin improvement, it has done well. So therefore, I'm giving hold. But on decline, one can consider buying it.
So that's with regards to where Tenneco goes. But thank you so much, Mr. Chokalingam, for joining in. Always a pleasure to speak to you as well. But completely out of time, it's a wrap on this edition of Trending Stocks from Alex, the team that put the show together, and myself. Lots more lineup on the other side. Please stay tuned to NDTV Profit.
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that "Bhaiya gaadi laga do," and he would say that "Ki bhaiya main aa raha hu 15 minutes." And he would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job. Got a couple of great jobs and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift an house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Kutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am. NDTV DP World PGTI Golf Pro-Am. The course of champions. The conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table
Hello and welcome. You're watching NDTV Profit with me, Hiral Dahadia, and my colleague Somit Sarkar. And this is a special conversation when it comes to the excise duty cut, the implications when it comes to OMCs, the implications when it comes to the government, the exchequer. And that's the big question from here on. Now, fuel prices are firmly back at the center of the policy debate, and in a decisive move, the government has cut the excise duty on petrol to ₹3 per litre and reduced diesel excise duty to nil, which is zero. While the stated objective is to temper inflation, the real question is transmission. Will the transmission translate into lower pump prices? No, the answer is no to this one. Or simply it is the ease of the balance sheet stress of oil marketing companies. That's what we're talking about, Samit, right?
Exactly. So there are two things that have happened. Firstly, they have reduced the excise duty that they used to charge, the government used to charge on petrol and diesel. And the second thing is they have made it sure that this will not be passed on to the consumers. So it's clearly a beneficial point coming in for the oil marketing companies who have been currently suffering a huge loss that we are seeing. And the Finance Minister Nirmala Sitharaman also said that the move aims to ensure uninterrupted fuel supply and protect consumers from global price shocks. Listen into what the Finance Minister had to add on this excise duty cut.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारे जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में, अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
So let's get into the details of this. Firstly, the government has cut excise duty on petrol to ₹3 per litre from ₹13 per litre. Now, do remember that there are 4 components when it comes to excise duty. There is basic excise duty, special additional excise duty, agriculture, infrastructure and development cess, and then there is additional excise duty. Now, out of these 4 components, the component that has been cut is special additional excise duty. Here, petrol has come down to 3 rupees from 13 rupees and diesel has come down to 0 from 10 rupees earlier. So a 10 rupees reduction on both the retail fuels, that is petrol and diesel. And this brings down the total excise duty which the government charges on petrol from 21.9 rupees per litre to 11.9 rupees per litre, and on diesel from 17.8 rupees per litre to 7.8 rupees per litre. Now, as per Nomura, the blended marketing margin. So what does this do for the oil marketing companies? This lowers the marketing margin losses that the oil marketing companies have so far been incurring on sale of every litre of petrol and diesel. Now, as per Nomura, the blended marketing loss that oil marketing companies are were incurring was close to 48.8 rupees on sale of every litre of petrol and diesel, and this now comes down to 38.8 rupees given the fact that excise duty has been cut by a similar amount, and this will not be passed on to consumers. Oil marketing companies will be keeping it to themselves to protect their balance sheet. Now, this will reduce the losses for the oil marketing companies, and change of every 1 rupee per litre on the margins increases the EPS of IOCL, BPCL and HPCL by anywhere between 14 to 24%. But do remember that even after this reduction in excise duty which benefits the oil marketing companies, all the 3 of them are still selling petrol and diesel at a loss. Now, what will be the impact of this on the government? Now, India consumes close to 170 billion litre of petrol and diesel on an annual basis. Now, this is as per analyst estimates, and this cut will translate into an annual loss for the government of close to 1.7 lakh crore rupees, now which is nearly 5% of the central government's gross revenue. So a big hit coming in for the government if on an annual basis, if this excise duty cut continues to prevail throughout FY27. So that is one thing that we need to watch out for. And to discuss the same, let's get in Gaurav Gupta, Chief Economist of IDFC First Bank. So a loss of close to 1.7 lakh crore is what is expected. A loss of close to 1.7 lakh crore rupees is expected for the government. So ma'am, how do you expect the government to make up for the shortfall firstly?
So the net actual impact will be lower. It's around 950 billion rupees, which is around 0.2% of GDP. And that's because they have also increased the windfall tax on export of diesel as well as ATF. So on one hand, there will be extra revenue generation on the export of these 2 petroleum products, which will balance out the loss of revenue from the excise duty cut on petrol and diesel. So net for the government on a 12-month basis, the revenue loss will be actually lower, somewhere around 950 billion rupees. Our expectation is that given the extent, it's a much bigger cut. We were expecting a lesser cut than this, but it's a bigger, significant cut. It also shows that in the Government of India assessment, how serious this sort of West Asia crisis is and how they are looking at it. We assume that, it's not necessary that the excise duty cut will be there for the full 12-month period. It can also happen that if, let's say, the West Asia crisis de-escalates, and the second half of the year, there's a sharp drop in crude oil prices, then it's more or let's say a half year impact. Then instead of a 950 billion rupee revenue loss for the center, it can actually come down to around 440 billion rupees. If let's say you just take 6 months of these excise duty cuts on petrol and diesel.
Okay, but just wanted to check with you on this. Obviously, yes, the government has increased export tax on diesel and ATF, but what channel checks are now indicating is the fact that refiners have anyways stopped exporting most of the petroleum products. They are trying to store the same into the domestic market, given the fact that there is still uncertainty on crude availability that could happen going forward. So the impact, don't you think, could be on the higher side?
So if that's the case, then definitely the impact becomes the higher side. In our case, what we have done, we have taken, assuming for the 950 billion, if you take that estimate, that assumes that the quantity of diesel and ATF exports are at par with what we saw last year. And last year also was quite a weak year for both diesel exports as well as ATF because of the Russia-Ukraine and plus the sanctions on the Russian crude. So anyone using Russian crude to create refined products was also getting targeted. For example, we actually saw a sharp drop in Indian exports in FY26 of diesel as well as ATF. ATF, I think, was down by 21% in the year, and diesel also saw a significant decline. So, taking the export pattern of FY26, that's how we're getting the net of impact. But yes, suppose if there is a standstill in our exports, which is still not the case, officially the government of India India remains one of the few countries which is not curtailing its exports of refined petroleum products. But if there is a slowdown and it stays for a large period of FY27, then the net cost impact will definitely go up. It can go easily above 1 trillion plus, 1.5 trillion plus. But just to give you a sense of the revenue loss, if let's say the government had not increased ATF and diesel windfall gain tax, and you had only the duty cut, then the revenue loss is around 1.8 trillion for 12 months. So it can't be higher than that. So at max, at max, let's say if our exports get impaired, it will be around 1.3, around that margin. So not too much of a risk to our 950 billion estimate.
Gaura, good afternoon. This is Hiral here. You're talking about the export side of it. Now, there are reports suggesting in terms of brokerage notes where the government has increased the excise duty by 21%, and this is when it comes to domestically sold ATF, right? Is that something that you've taken into consideration as well? And if not, and if you have to, does anything change?
We have taken into account the windfall tax that they have done for exports as per the notification that we saw from the gazetted notification. So that, as per our interpretation, was limited on export side, not for the domestic consumer. As per our understanding, there is no hike for the domestic consumption of these ATFs, because that will be counterproductive from the government. Is what they're trying to do is they're trying to protect the OMCs as well as the consumer. So our interpretation is that this windfall gain tax is on the export side.
Stay with us, Gaura. We have Mr. M.K. Surana, former CMD at HPCL as well. Mr. Surana, pleasure to speak to you as well. I know we've been talking about this in terms of the excise duty cut that has come in. Let's break this up into two parts. First up, in terms of the impact when it comes to oil marketing companies. Yes, it will help reduce losses on sale of petrol and diesel. And this is if benefits are not passed on to the consumers. And that's where we're sitting on right now. Your back of the envelope calculation, how are you looking at this to benefit, OMCs, and to what extent?
Good afternoon to you and to Gaura. What the excise duty reduction is there, to my understanding, it is not to be passed on to the consumers. And it will reduce the losses which the oil companies are bearing or the under recoveries which the oil companies are having because of increase in the crude prices in the current situation. There is one more angle, that because it is a high volume business and there is a lot of liquidity required on the part of OMCs also. So to reduce the burden of the excise helps in reducing the liquidity. Otherwise, you can't be buying crude at a higher price and selling the product at a lesser price with such a high volume, which may lead to the liquidity problem otherwise. So as far as the exact quantum is concerned, I would not like to guess right now, because it will differ from companies to companies depending on what is their share of marketing and the refinery volumes and how much they are buying from outside. And also at what price they have tied up the crude, because that item is slightly sensitive in the current situation, that who is buying from whom at what price. So I would like to comment on the exact quantum, but definitely it will help in reducing the losses which are under recoveries which they are having.
Right. Just as per your understanding and analysis at this point of time, what we are hearing from our channel checks is that though government has increased the export tax on ATF and diesel, but at this moment refineries are anyways refraining from exporting these products. So this move will technically not benefit the government much, right?
No, basically the purpose of putting the export duty is to ensure that some of the people do not export because the international prices are high at the cost of the domestic consumption, where the prices are a bit curtailed or static.
Right.
And otherwise, what will happen is that the private players will be exporting and making the profit, and all those volume will shift to the public sector oil companies, and their losses will increase. So it is a sort of balancing act which the government has done, wherein there is a discouragement to export, and at the same time there is a reduction in the excise duty on so that the oil marketing companies at least have a lesser burden than what it is supposed to be. At the same time, the consumers are not required to bear the burden of the higher prices, which will have the macroeconomic impact in terms of inflation, etc. So the similar thing has been adopted earlier also, where the government has tried to manage the increase and decrease in the crude prices by varying the taxation without impacting the market price.
Right. Yes, sir. The oil marketing company, in fact, the PSU OMCs are not taking any price hikes to offset the impact. But private players, on the other hand, have already taken a price hike. Naira, for example, has increased, I believe, diesel prices by around 5.3 rupees and petrol prices by 5.3 rupees and diesel prices by 3 rupees per litre. So, do you think this will lead to a market share shift towards oil marketing companies, and that could also at this point of time be negative for them, given the fact that they're already incurring losses on sale of every litre of petrol and diesel?
Recoveries will be more than this 5 rupees and 3 rupees currently, and therefore the volume is already shifting to the public sector OMCs who have not increased the price. Rather, there would have been the private players would have been discouraging the sale currently, as has been done in the past. So one of the reasons why you see some of the crowd at some of the OMC petrol pumps is because of those volume shifting from private sector to the public sector companies.
Mr. Surana, we're talking about under recoveries. As Soumit mentioned, a very conservative number, but a couple of brokerage notes are of the opinion that they're somewhere in that range of, say, 30, 35. That is the kind of number that we're picking up from a brokerage note. And post all of this, expectation is it could actually come down to what, 40. How do you read this kind of a print coming in from a brokerage note like a Nomura?
So I would not like to comment on that. I will leave it to the analyst and the people who comment on the stock market to guess on that. But only thing I can say is that it is not as straight as the people understand, because they must be doing the daily crude price and daily product prices. But actually, the time when you buy the crude process, it comes to the market, there is a time lag. That's number one. Second, the companies follow different strategies to price the crude when they make their contracts. And therefore, rather than a straightway trying to jump to a conclusion, I would probably refrain from commenting on it right now. And especially not so close to the year end.
Okay, stay with us, Mr. Surana. Gaura, let me come to you. You know, we've spoken about the quantum of pressure that it could put on the exchequer. Now, the question is the fiscal deficit pressure that comes in the form of the revenue lost to the government right now, one. And the other side of the story over here is, if they wouldn't have done something like this, they would have to let the OMCs pass on the price hikes that were happening, and in turn leading to higher inflation, which then would trickle down again to the government's borrowing program. If you have to look at both sides, do you think this is a better option that the government has selected, number one? And two, what is that trickling effect that you're expecting to see now?
It's a very good question, actually. I think the government's intentions are quite noble. It's a much bigger cut than we had penciled in. So they are trying their best to fully protect the consumers. So what had happened during the Russia-Ukraine period, where we had almost more than 100 days of crude above $100 per barrel, is that there was a burden sharing model. The government of India cut excise duty by, let's say, around 8 rupees per litre and 6 rupees per litre on petrol and diesel. There was also a 3% increase in retail fuel prices for the consumer. OMCs also absorbed some part of the, let's say, the LPG side of the shock in terms of under recoveries. Now, this is a much larger cut. So the I would say the insulation to the consumer is more, but I don't think the government will benefit from the perspective of fiscal, which you mentioned in terms of the borrowing yields. There also the cost will have to be paid. So after penciling in this sort of cut, and our estimate is, let's say this is only for 6 months. And then there are other costs that the exchequer has. There will be fertilizer subsidy that will go up. During Russia-Ukraine, your fertilizer subsidy bill went up to 1% of GDP from a budgeted of 0.4%. Currently, again, it's 0.4%, which is budgeted. Then you have LPG under recoveries. During Russia-Ukraine, the LPG under recoveries were around 220 billion rupees. This year, it could be much more. We have penciled in, let's say, around 330 billion rupees in terms of under recovery. So that will add to the LPG subsidy bill. Now, this cut, as you earlier mentioned, it does protect the OMCs to an extent, but not fully. If you look at the oil minister's tweet, where he's mentioned that the under recoveries or the losses that OMCs are facing on petrol and diesel, it's somewhere around 25 rupees to 30 rupees per liter. So this only takes some part of the pain away. There is still half of the pain that they are absorbing. Plus, they have that pain on the LPG side. So it can affect the dividend revenue of the government of India that the government gets from oil PSUs. And oil PSUs account for around 33% share of the dividend income. So the hit to the fiscal will be there. Our calculation on a gross basis, just looking at the revenue foregone, extra subsidy expenditure, and we are working with, let's say, a 6 months sort of hit from an excise duty cut. It's still coming around 0.4%, 0.5% of GDP to around 0.7% of GDP in terms of extra cost to the exchequer.
So
it will add to the borrowing cost.
It will add to the cost. Let me just once come in here. Now, if you see the bond yields, on the back of this kind of announcement, we have seen that spike which has come in. Is that telling you that it is weakening of the fiscal discipline is what markets are reading into with the kind of spike that's coming in terms of bond yields as well?
Yes, I think the markets are the best barometer of risk assessment. So the fact that the 10-year yield zoned to 690, it shows that the market is also sensing that there is fiscal slippage risks. And this is not a minor crude oil shock. Many have called this a combination sort of shock where you have COVID-like features, where you have a supply side problem, which can be not just in energy products, but also in chemicals like sulfur, fertilizer, because we get 33% of fertilizer from GCC countries. So it has a combination of an oil shock and a supply side disruption. So in a way, it is much more negative than, let's say, the Russia-Ukraine crisis was. So the market is very accurately pricing the fiscal slippage risks. So even Russia-Ukraine, which was purely an oil shock, even there you saw the fiscal deficit, it actually was higher than what was the budget estimate. So the movements today have priced in the slippage risks.
Right. Surana sir, just wanted to get in one comment from you. Yes, government has done a very good move when it comes to reduction in excise duty, but this has also led to some fear or some doubt in the market when it comes to oil exploration companies, like for ONGC. Obviously, the fact is that post the Exploration Act that was passed, the government cannot come in and impose any windfall tax. But what is your understanding here? If you could just give your understanding to the viewers to our channel on this as well.
Just before coming to that, I just wanted to add one point to the earlier point, that compared to the Russia-Ukraine war in 22, this time the exchange rate is much higher than that time. And every rupee exchange rate change currently will make a difference of 55 paisa or so on the petrol or diesel prices. So that also need to be factored in. So coming back to your question on the upstream companies, see, the situation is unusual. So while the new oil exploration laws does provide some sort of protections to ensure that the investors remain attracted to the Indian exploration business, and with a lesser risk, But at the same time, we need to see how it goes forward, because the situation is a developing situation and it is an unusual situation. So it depends on how the prices of the crude goes up and how long this goes and what is the exchange rate trajectory it follows. But right now, currently, the understanding is there that probably the upstream companies may not be required to pay the windfall tax, but the government may have different ways to make the upstream company participate in this undertaking.
Okay, I think all of these are just questions which only the government can answer in the end. But thank you, Mr. Surana. Thank you, Gaura, so much for joining us on this special discussion. Gives a lot of clarity to the viewers as well in terms of what could be expected and the kind of impact that we could see from here on. But a welcome move, at least, for the OMCs by the government so far. Going ahead, what will the impact be is what we need to wait and watch and see till the time the West Asia crisis continue. But a thank you from Somit, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who built the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, whoa, whoa. Guru? I'm no guru.
Okay.
I'm just a guy.
All right, we're talking about Biocon. When there is a change of guard, the top brass management changes. So Shrihas Tambe is going to be the new CEO and MD of Biocon, remember, from 1st of April. And also remember that he'll be the first MD and CEO of the integrated Biocon. So that's going to be a big one. We are joined by Shrihas Tambe now. Shrihas, many congratulations. And of course, this will be a Herculean task because this is a very important milestone in the company's journey on an integrated basis. What will be your focus areas in terms of integration and getting both the values of Biocon and Biocon Biologics?
First off, Michelle, thank you so much for having me on your show, and thank you for the kind words. It is, in that sense, the same companies. I begin my 30th year at the Biocon Group this year, so I really don't see this as two different companies that are coming together. The DNA is pretty much the same. We share the same first name as well. We do have different businesses, and as your business strategy evolves, which I've seen happen at the company so many times over that I've been here now. One of the things that is important is that you align the talent pool that you have to reflect that change. And I think we've done that remarkably well when we did that integration of the acquired business from Beatrice. And I believe we're in a very good place as we've now completed the integration of the biosimilars, Biocon Biologics business with the generics business that we had. So we're looking forward to building a fully integrated global medicines company at Biocon now, which will now compete on science, scale, and access. So very exciting times ahead of us, Nishin.
So you have worked, Shrihas, for Biocon for the last 30 years in different roles, but you have been the MD and CEO of Biocon Biologics. So does that part of the overall integrated unit of Biocon now take precedence over the other businesses, and therefore your expertise is going to be valuable?
Well, I think more than precedence, it's important to see what are the different constructs that you will put together as you grow. One of the things that we're putting together is, while affordability and cost leadership is something that will underpin and is going to be important for us, we're looking to transition, and particularly as I build the company, I'm looking to transition this to a capability leadership organization. And that can come from any part of the organization. What I mean by that is that we want to compete on the basis of the science that we've got, the quality that we bring to our products, the speed that we bring for products from labs to market, and most importantly, the reach that we are able to provide given our global presence. So the challenge is right now to shift the lens from saying that we are not just a low-cost provider, but really a credible innovator and a very trusted healthcare brand globally. That is really the transformation that I'm looking to bring at Biocon, not necessarily biologics versus the generics. They're both part of the same company.
In the lines of bringing in the expertise, Shrihas, but I do understand the leadership changes and the vision towards that. Now, as the MD and CEO from 1st of April, what are your top priorities that we are going to see a change in the first quarter itself?
People have always been my top priority, and we've had exceptional talent at Biocon. Many of the people that we have, I've had the privilege of knowing personally, and I know that we've talent which is second to none. So that's something that remains my top priority, to make sure that we kit and skill the workforce that we've got to align with the evolving priorities of the business. That's so very critical as we set ourselves up for the future. Setting up technology platforms, because we've got several tools at our disposal, several pockets of excellence. One of the key priorities would be to set up platforms that we can deliver products from. Those will be in R&D, those platforms will be in supply chain, those platforms will be in our commercial excellence, where we can provide products through a variety of distribution channels and engagements with customers. So an approach to building and strengthening platforms to provide scale would be the next priority. The third thing, which is very important for us, is that we are leveraging AI, and I use AI not as artificial intelligence, but as augmented intelligence, because I believe that technology is not just essential, but is very likely that will be determinant of success going forward. So we're setting up an office of AI, and that is expected to give us the speed that we want and improve the quality of decision making going forward. And the last thing is that we will evolve our go-to-market strategy now that we are a much more stronger global One Biocon as we go forward, is because it allows us to bring products to customers, not just on the basis of our pricing power. That is something we've always had. But right now, the ability is to see how can we be able to partake in several other parts of that value chain. So moving that needle from saying that affordability and profitability are mutually exclusive, that's not the view that we hold. We believe affordability and profitability can coexist, and if you can support it with the right scale, with the right efficiency, and the right focus, then that's going to be the ambition at Biocon.
Right. There have been also, Shrihas, some recent developments of the benefits that Biocon will get because of Eli Lilly joining Novo Nordisk, and you also have approvals for biosimilar versions. Can you give us more insights on that?
I'm not sure about what meant by Eli Lilly joining Novo Nordisk, but there is certainly there are developments where insulin manufacturers in several parts of the world have made announcements that they will no longer be able to support the insulin's products that they've got because of their increasing focus, we believe, and the demands that the GLP-1 products are seeing. Now, what it means for a company like ours, which is probably unique in that we have biosimilar insulins and the generic peptides in our portfolio, is it's a very large opportunity to serve so many more patients, particularly in Europe, which is where these announcements have come from, and to see that opportunity is to serve them in a very long-term, enduring manner, because these are chronic therapies. So yes, very exciting times, and we are ready for that opportunity because we built scale, we made the investment, and we're ready for that, realizing that opportunity.
And GLP-1 opportunity also very quickly, Shrihas?
GLP-1 opportunity is something that we've been investing in for a very long time. Our generics has focused on that. While we may not be in India in the first wave of products that have launched, we're watching this space very closely. And we have already launched the liraglutide generic in Europe. We've launched it in emerging markets, and we are seeing huge demand for it. We have approvals in the US. We will be looking to launch our liraglutide brand in the US very shortly. With the presence we have, we expect the uptake also to be quite favorable. So watch that space.
Sure. Yeah. So Shrihas, before we wrap it, and I know you have limited time, just finally, how is the Middle East situation really impacting the business?
It's certainly unfortunate, and we hope it resolves itself soon, because it's not helping anybody at this point. While it may not have impacted operations directly today, it certainly increased the cost of imports in terms of the transit cost that we are seeing. It does increase the cost of procurement of petroleum products that we will be using. So there is the odd chance that you would have increased shipment cost in a particular time frame. From a business and demand perspective, that's been robust. We don't see a change, but you see these increased costs for a period of time from a logistics perspective.
Good afternoon. You're watching Small Cap Buzzers with me, Varsha, and my co-anchor, Soumit Sarkar. Well, you listen to Biocon, wherein now Shreyas Tambe will be the CEO and Managing Director of Biocon. He is the man behind, the biosimilar business that Biocon has. But moving on, the other company which is in focus is TrueAlt Bioenergy. Well, the key triggers for this company is, of course, the core ethanol business, which provides a predictable growth. And also they are expanding into next-gen biofuels and green chemicals, which creates, a next leg of growth for the company. But to speak more about that and what lies ahead for the next 2 to 3 years, we are here joined by Mr. Vijay Nirani, who is Managing Director at TrueAlt Bioenergy. Well, Mr. Nirani, welcome at NDTV Profit. Always pleasure to have you. You're positioning biofuels as a energy independence platform. What is the single biggest growth lever over the next 5 years?
Thank you so much for having me. It's always a pleasure. So biofuels itself is a big potential, carries a lot of potential for growth. We have now tapped only ethanol as a company, as our company and as our country is concerned. The next big growth levers will definitely be compressed biogas. We're looking at the gas shortages, which we had to be resilient and which we had to be ready by now already, but at least better late than never. So CBG is a big focus area for Government of India and for our company. We are doing close to 23 more CBG plants. We're setting up 23 more CBG plants in the days to come. And also aviation fuel is a big opportunity for us to decarbonize the aviation sector and be indigenous for our fuel requirements. So almost everything in this space is going to be a big growth lever since biofuels itself is very new.
Itself is very new and you're seeing a strong growth. What is the growth guidance that you are internally setting in for the company for the next 3 years, say from FY26 to FY28? What is the kind of growth that you are targeting for top line and bottom line?
So historically, we are a 3-year-old company. This FY26 would be our 4th financial year. And going by trends, we've been growing at almost about 50-55% growth rate. However, this year there has been the FY26 for us is going to be a year of change because we are transitioning 3 out of our 5 ethanol plants into dual feed capacities. So we had almost Q2 and little half of Q3 of this financial year was almost no production. So our growth rate is going to be much lower as compared to the last 3 years. But going forward, we carry the same focus of having the same growth rate as the last 3 years, right? So I wouldn't give a number to be precise, but our growth rate should be at historical levels.
Right. And what about margins, Mr. Nirani? Where they stand? You have a EBITDA margin of around 15 to 16% for FY26 and going beyond. Can we see an inch up in margin, or there will be pressure in margin as well for 26?
So it will be nominally better than what it was in the past. Practically because the price of raw material, that is maize and the damaged food grains that we consume to make ethanol, has drastically fallen down because of consumption or allocation of ethanol. Now, that is leading to us getting, last year the price of maize was somewhere about 24 rupees a kilo. To today, it is somewhere about 17 to 18 rupees a kilo. So that's a huge drop in the cost of raw material. However, we consume more of this maize in the Q3 and Q2 and Q3 of during the ethanol supply year. So that is when we actually get to see a lot of improvement in EBITDA margins. But comparatively, we are looking at a nominally better margin as compared to last year.
And any capital expenditure plans that you have envisaged, and how are you going to fund the same?
Yes, sir. So we've got the compressed biogas plants. There are two JVs that we have formed. One is with GAIL, Gas Authority of India. That is to do 6 CBG plants under phase 1, which are about to start ground now and should be commissioned by third quarter of next financial year. So we're doing a capex of somewhere about 360 odd crores there. And there is another joint venture with Sumitomo Corporation that is to do 4 compressed biogas plants of 20 TPD each. And that's at a cost of about 320 odd crores. Net, there's a gross capex of somewhere about 680 to 700 crores that's being done. And it's with a blend of both debt and equity contributed by us and our JV partners.
Understood. And Mr. Nirani, you just said that FY26 you may see some pressure when it comes to the revenue. At least, I don't know the exact number, but at least can you see 25 to 30% of growth for FY26, or it will be below that?
So our expectation was to get to there, but considering the war situation in Iran, the consumption of petrol is being rationalized, and you've seen the prices of the product also going very high. So in the last 2 months, February and March, we've seen the consumption of ethanol to be a little lower. So the growth rate will not be double digits, so it will be in single digits as compared to last year.
Understood. So single digit of growth you're expecting when it comes to revenue. Got that too. Also, so what kind of asset turnover to expect from the 2,000 crore capex that you're doing in SAF project?
The asset turn would be somewhere about 1 times when we have the capacity fully operationalized, and we forecast about 2,200 crores on full use, or rather, let's say at 90% capacity use for a 300-day basis. And that is considering the cost of SAF to be at around 180 to 185 rupees a liter. So that's the target price that we carry, and that would give us an asset turn of almost 1 time. And let's say we've forecasted a bit of almost about 20-25% in that business there.
Well, thank you so much, Mr. Nirani, for joining and having a conversation with us, and all the best for the business.
Thank you, ma'am.
Well, with this was true alt, company may see some pressure when it comes to the financial numbers, or especially revenue in FY26, but is positive when it comes to FY27 and FY28. But moving on, let us invite our guest for the show, Astha Jain, who's Senior Research Analyst at Hem Securities. Astha, hello, and always pleasure to have you at NDTV Profit. Well, you heard True Alt management. What's your view when it comes to that counter? Because company is seeing some kind of pressure for FY26 revenue, but is bullish post that. So any view on that?
Hi. Good afternoon to everyone. See, this company came out with its IPO in September 2025, and the issue price was at around 496. But we were not able to see any sort of up move in the issue price as well, because it made the high of 530 and continuously falling from there. What I feel can be the possible reason was that, first of all, the valuation, because it came out with valuation of around 29 price to earning multiple. Now, looking after their Q3 of FY26 numbers as well, they have not shown any sort of big improvement in the profitability. In fact, there was a degrowth in the bottom line of the company in the Q3 FY26 as well. So that makes valuation more expensive. So my idea here is, don't jump into this counter at this moment of a time. Let it settle down, because it is already trading below its issue price. Let it settle down and then make any sort of entry into this counter, because now from the management view also we can see some sort of moderation in the bottom line in the coming time also. So it's better to wait and watch rather than making any entry on this counter. So we are recommending just to wait and watch, or if someone has the stock in their portfolio, maybe at the IPO time they may have applied for the IPO as well, then they should have to wait at least for 6 months. So if anyone has got this in the allotment, then wait for another 6 months. Otherwise, there is no need to make any fresh entry. You may find it at more lower levels from here as well.
Towards FNO market, let's get in Puneet to understand what's been buzzing there. Puneet, yet another day of fall that we are seeing on Friday this time around.
Well, consistent pressure this week, Somit, as you rightly highlighted, and even when you look at the stocks that are buzzing in trade today are also related to that. So while for the Sensex, it's bang on, consistent 27 stocks that are declining in trade today. You're seeing Reliance, Bajaj Finance, and Indigo continuing to be under pressure, while the auto pack, also led by Mahindra and Maruti, are also not doing so well today in trade. When you look at, of course, the Bankex also, that's been the other key factor. Consistent pressure there as well, failing to hold at that particular levels that we've been speaking about since the morning, both for Bankex as well as for the Bank Nifty too. So the private bank index yet to perform any moves, and stocks like HDFC Bank continue to languish. When you look at the stocks in the long build-up, essentially we've seen, Hutco as well as Godrej Properties continue to be so long build-up across on ONGC as well as LIC Housing. We're seeing short coverings on Oracle Financial as well as Sammaan Capital are the other couple of stocks. Long unwindings seeing on NBCC as well as PG Electroplast, and short build-up on stocks like Tata Motors PV, where you've seen that update coming in where a couple of weeks of production loss for JLR, while Sona BLW is also now on the list in that sense, where stocks broken yet again the psychological mark of 500 rupees, and 480 is where there is a medium or small term support, at least near term support for this. So these are some of the key stocks that you should have on your radar as part of our FNO setup.
Right. Thank you so much, Puneet, for all the details. Well, moving on, let's talk about a global biopharma engineering player, which is Fabtech Technologies. Let's see what that stock is doing. The stock is up almost 15% in trade. And if you see, the stock is buzzing on the back of volumes. But what are the key triggers? Let's go to Jasmeet and find out the details about that.
Well, Varsha, thank you for that. This is a recently listed company and the stock has been tanking since the time of its listing. We look at what the company does. Well, company operates in global biopharma engineering space where they provide end-to-end turnkey solutions. While the company operates as a design-led infrastructure platform-based company where they take orders and fulfill it for their clients. If we look at the key areas where they serve the pharma clients, biotech and healthcare companies across India and globally. Currently, the stock is buzzing on the back of volume which are nearly 21 times on a 20-day average. While the company also has presence in Middle East via the subsidiaries in UAE region. Now, if you look at the stock performance, the stock got listed at flat at its list issue by the 194 odd rupees, and since listing is down 19 odd %. Over last 1 month, the stock has tanked nearly. Stock is up nearly 5 odd %, but YTD basis the stock is down 19 odd %. Now, in terms of the Q3 key takeaways, Q3 saw a weak quarter. It was a complete opposite turnaround quarter for the company on YY basis, where the company reported a loss of nearly 5 odd crore versus a profit of 23 odd crore in the previous year same quarter. If we look at what did not work for the company, was the overall project execution lumpiness. The delay in that led to the overall flattish top line and impacted the profits as well. Now, in terms of the key financials, the revenue was down nearly 39% in the Q3 of FY26, while the net company reported net loss of 5 crore. If we look at the outlook, the management remains pretty strong in terms of what they see the performance going ahead. They reiterate the FY26 guidance of revenue of 380 to 400 crores, while they also want the PAT to reach a 39 crores of profit going ahead, while currently it's at loss of 5 crore. Now, in terms of FY27 growth, the management targets a 30% YOY growth in the coming year, while they also mentioned the PAT margin will be 9 to 11%. All in all, we do see strong guidance, but the stock has been tanking in trade, but today buzzing on the back of heavy volumes.
Right. Thank you so much, Jasmeet, for all the details. Well, Astha, what's your view when it comes to Fabtech Technologies? Clearly, FY27 company has given a growth guidance of 30%, but considering the valuations, what would you advise to investors currently?
Surely, because IPO came in September again and it was at the issue price of 191. So at that time also valuation was a concern because it came at a price to earning multiple of 30x. And I think with the kind of financial performance this company has posted in their Q3 FY26 number, it is not that very much impressive. We have seen a downfall in the profitability, or yes, it is almost a loss which we have seen. So not a very impressive counter to bet upon at this point of a time. Maybe the news flow has make this stock outperform in today's trading session, but we still want to see more clarity on their profitability. Maybe the Q4 of FY26 number will make or will provide a clear picture. So rather than, if anyone wants to take risk, then they can only make entry into this counter. Otherwise, I would recommend wait and watch if anyone don't want to take any sort of a risk, because even markets are not very in a very certain position right now.
Well, thank you, Asa. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, just before we end the show, let's get in Puneet to understand what's been buzzing with Likita Infra. Why, Puneet, give us a go ahead.
Well, stocks, been up 23% in the last 5 days, but has been a lackluster counter since listing. Now, last 1 year, stocks are down 38% from the highs of almost 300 odd rupees. But even since the listing back in 2020, it's been an underperformer. Stocks trading at 170 now after today's move, but listed at just 120 rupees per share. So in that sense, has gone nowhere in the last 5 to 6 years. The company is engaged in laying off gas pipelines, as mentioned on your screen, and presence across the 20 states. So it has clients like IOC, GAIL, as well as BPCL. But within the segments, city gas distribution, cross-country pipeline projects are some of the key aspects that they look at. But overall, when you look at the current positions, there are two key aspects. A 925 crore order book where the market cap of the company is 688 crores. So you have to keep that in mind. And the other aspect that the 9-month FY26 financial picture has been quite weak. Revenue is down 10%, EBITDA is down 17%, and profit is down 32%. So post quarter 4, it will be a better aspect to look at the company in terms of financial as well as order book. But right now, stocks buzzing over the last 5 days on strong volumes at this point.
Thank you, Puneet. Thank you for that information coming in on Likita Infra. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders.
Welcome back. You're watching Ask Profit right here on NDTV Profit. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and take all your stock-related queries. So if you haven't already, do start sending them on the WhatsApp number that'll flash on the top of your screen. You can also call us, speak to us directly on your stock-related query as well. The number for that is the landline number that's flashing on the top of your screen alongside the WhatsApp number. There you go. So please call us for solving your stock-related queries on a day that's been largely negative for the markets today. So let's look at the heat map for the Nifty 50, continuing to be under pressure as we speak, and down almost 400 points at this point of time. We've broken 23,000 mark yet again. So it's been consistent pressure on the markets. 42 stocks of the Nifty 50 down in the red, and stocks like Tata Motors PV that continue to be under pressure on the back of reports claiming 2 weeks of production lost yet again for Jaguar and Land Rover because of supplier issues in the UK is having a beating down impact on the stock. Reliance, Bajaj Finance as well as Shriram Finance yet again are down in trade today. Shriram Finance started to build some momentum with the up move on Tuesday, but all of that has fizzled out very, very quickly. In terms of the sectoral heat map though, you are seeing pressure across the board yet again. So the PSU banking index started the day with losses of almost 2 to 3% and has continued to do so. Nifty Realty, Nifty Auto, the Nifty Bank as well. All these indexes that have done very well in the past before the war broke out have seen reversals, money being taken off the table, and that trend has continued as well. The Nifty IT just barely by a slice of thread at this point of time in the green, but the move continues to be weak. In the advanced decline ratio, you had almost 2,150 stocks that were down in trade today at the morning in the morning edition of Ask Profit, and that trend has continued yet again. So just almost a 7:1 in favor of the declines for today. Mid cap, small cap also reflect that pressure that's visible on the benchmarks, as well as some indication that we've gotten from the advanced decline ratio. So down 1.6% for both these indexes. And individual movers finally of the BSE 500 show you that while some stocks have done well, like the graphite stocks, HCG, as well as Graphite India, you're seeing an increase in global prices for electrodes and hence visibly positive impact for both these players. But Supreme Petro also up 6%, ONGC and Oracle Financial after a while is up as well, but largely stocks down in trade today. Godfrey Phillips, Minda Corp, Spark, Uflex are putting pressure on the index. But let me welcome in Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal Financial Services on the technical side, and Radha Raman Agarwal, he's the Managing Director and CEO of Swarm Advisors at this point of time as well. I hope I'm pronouncing the name of the company right, Radha, but thanks so much for joining me today. Let me go across, take the first stock-related query that viewers you've sent us today. It is on Coforge at this point of time. Our viewer Siju from Qatar, who is a regular viewer, he's holding shares at 999. So he's bought it post the fall or just before that up move started a couple of years ago. He's holding shares for a 3 to 5 year horizon, holding 75 shares. Radha Raman, would you suggest Siju to continue holding these shares at this point of time given the correction, or is selling out and waiting for more clarity post Q4 results as a strategy that you would suggest? I think you're on mute, Radha.
Yeah, it's on. I think you are able to hear me.
Yeah, I'm able to hear you now. Go ahead.
So basically, what suggestion would be more in terms of that we should be holding on the stock. There's already a correction which has happened, and I think IT is showing signs of giving a bounce back, and with the rupee thing as well. So I think it should be a good advice to hold on and then move ahead, and maybe wait for maybe additions into times to come, and see the results of the fourth quarter, and then basis that decide that. But the current holdings, one should hold on.
Got that view. But the next question that's coming in, it's from Sunil from Pune, who's also a regular viewer. He's holding shares of Vedanta. Now, Ruchit, he's holding shares bought at 655. We have the impending demerger in the near to medium term. What would you suggest him to do?
Broadly, what we have seen in last 1.5 months just seems to be a corrective phase within a broader uptrend. The major support for the stock is around 600 level if you look at some positional charts. So 600 to 620 is the range where I think the stock would find a good support. So on your existing positions, if you have some positional view, you can continue to hold on your positions and keep a stop loss below 600 on these long positions.
Got the view, Ruchit. But the next question that we're taking in, viewers, you can also call us on the landline number on the top of the screen for stock-related queries as well, so that our guests can get first-hand of what your query is. It's coming from Mr. Ansari from Mumbai itself, and his question largely being a very, very long term. He wants to know, Radha, a couple of stocks that are on your radar that he can hold for a very, very long term, for a forever term is what he's calling it. Any spaces that you like for the very long term?
I think if you look at gold finance companies, that space is quite active, and that space one should be looking at. So effectively, the reasons is very simple, that the lending is quite secure. The gold prices have been moving ahead, and as when the gold prices move up, the LTV goes down, and that's an advantage. And in fact, if you look at from a retail loan book, I think that's a space which has been the most active if you look at last financial year. And I think going forward also, that space is going to be quite active with the secured lending. I think that space should be quite active. And I think going forward, gold always has a value. And gold financing will obviously take a lot of shape in India. So that piece is quite picking up.
Got that view, Radha. But the next question also coming in from Keshav from Chennai, Radha, towards you. He wants to know if Bharat Dynamics Limited is a key stock that he can have in his portfolio for the next 2 years. He's bought it around 1180, so very close to the current market price. What would you suggest? Radha, that's a question for you, yeah.
So I think BDL one should maybe take an exit right now. So more in terms of, I think with the ambiguity things happening, so it's maybe take an exit and then decide based on the quarter numbers. So that will be a good strategy in terms of Bharat Dynamics.
Got that view, Radha. But the next question coming in now, it's on Diffusion Engineers. It's a recent listing, and our viewer Raj from Jaipur actually holds shares at 265. So stock's trading very close to that price. He is asking if he should continue to hold on or exit this counter. Do you track this counter by any chance, Radha? If any, what should Raj do with this with Diffusion Engineers?
Frankly, we don't track this counter, but from a investment perspective, I think given the uncertainty, it's better that maybe we knock down few maybe related to pretty close to the cost price and wait for the uncertainty to get over. I think that's a better way of doing it in the given scheme of things.
Ruchit, any quick view that you might have on Diffusion Engineers Limited? And I know it's a very limited time frame, but any view on the stock?
Yeah, so not much historical data, but whatever short-term data is available, I think 290, 300 remains a major hurdle for the stock, at least for the near term. And until that is surpassed, the overall trend or overall momentum, I would rather say, it does not look much positive. So I think we could see some time-wise correction or getting continued in the near term. But until the stock surpasses 300 levels, one should not expect any kind of trended basis.
Got that view, Ruchit. But the next question, and this is a caller for today from Vizag, and Mr. Rao has a stock query for us. Mr. Rao, good afternoon. Welcome to the show. What's your query?
I wanted to know about Reliance Industries. Is it right time to buy now?
Sorry, which stock is that?
Reliance Industries.
Reliance Industries. And would this be a short-term bet or a long-term bet, Mr. Rao?
Yeah, I want to hold for 1 year.
For 1 year, got it. Radha, would you suggest buying into Reliance Industries at this point of time to Rao?
So I think we can look at a staggered buying in Reliance Industries today, although the stock is down given the news flow. But eventually, if I look at the sum of parts, I think with the Geo listing coming in, so effectively, I think it will be a good stock to own. But he can buy looking at it in tranches to take forward. So maybe he can start buying in tranches, and then as and when things unfold, he should keep adding that.
Staggered in tranches is what Radha suggests, at least for Reliance Industries. The next question coming in from Arvind from Mumbai, who is also a regular viewer. He holds 2,000 shares of Canara Bank, Ruchit, at this point of time at 160. So he is at a loss of almost 60,000 rupees. Ruchit, he is retired. So his question largely being, can those levels of 180 come back of the stock maybe in sometime in 2027 or in this year? A slightly more longer term view on the charts, what would you suggest?
Yeah, I think if you have such long-term horizon, then you should continue to hold on your existing positions. We have witnessed a decent correction in last few days, mainly because because of the market corrective phase. Immediate support for the stock is of around that 128, 127 level. But if I look at a bit longer term charts, then major support is around 119, 120. So I think we might see some more dip towards that 120, but that would be a good level from where we can again expect the stock to resume its higher degree uptrend. So hold on your existing positions if you have next 1.5 years point of view. Around 120, you can review again if you want to average it.
Got that view, Ruchit. And let's go across to our next caller now from Andhra Pradesh. Prasad has a stock query for us. Prasad, good afternoon. Welcome to the show. What's your query?
Good afternoon, sir. This is Prasad from Andhra Pradesh. Sir. Hello?
Yeah, Prasad, I can hear you. Go ahead.
Sir, my query about Lemon Tree Hotels or Godrej Properties. Which one is better to enter fresh paying, sir, for long term?
For the long term, got it. Rather, Lemon Tree Hotels in the hotel and hospitality space or Godrej Properties? Which one is a preferred, if not one, both of them, is it preferable at this point of time for Prasad to enter for the long term?
I think Lemon Tree will be preferred over Godrej Properties because I think it's come to a correction phase. The hotel is doing well given the sector it operates in. We have seen a correction, and effectively, once I look at bounce back in terms of coming in, there's a lot of leisure and corporate travel in that segment, and with this tier 2, tier 3, tier 4 kind of a backup in this. So Lemon Tree looks good in terms of accumulation.
Got that view. We also have the impending demerger and the asset-light business model that Lemon Tree will be adopting very soon. So continue to monitor this stock at that time as well. But go across to our next query. This one's again, from Mayur. He's holding 45 shares of HDB Financial, bought since the IPO price, and that was almost at 740. Stock's broken the 600 mark yet again today and trading downward. He has 45 shares. He's asking what he should do, Radhav, for the long term. Would you suggest buying right now as an opportunity? Is it a good time to accumulate?
If you also hold it slightly for long term, you can still hold, but no suggestion to add. I think the stock has not done well in the post listing, and there are other good NBFC players available in that space. And I think that will be better rather than maybe adding here. Maybe for slightly medium to long term, we can hold on, but not do any average out or maybe adding at the current levels.
And Radha, if you can suggest a couple of names also that's on your radar in that NBFC space, because of course this is a lot towards the CV cycle, and a lot of those stocks like Shriram Finance also are not doing well right now. So anything that is in the NBFC space that's on your radar?
So I think I mentioned the gold finance companies can be looked at, maybe the top 2 or 3 of them. That can be added given the uncertainties involved. And given the gold finance companies have a big advantage in terms of putting it forward, I think those would be good bets to add on at this moment.
The next caller also dialing in from Hyderabad now. Venkatesh has a stock query for us. Venkatesh, good afternoon. Welcome to the show. What's your query? Hi, Venkatesh. Can you hear me? We seem to have lost Venkatesh, but we do have a stock query on your screen right now. He's bought into Mazagon Dock. Seems to be at very close to the current market price. Ruchit, on Mazagon Dock, what would you suggest? It's been a volatile counter. Should Venkatesh continue to hold at this point of time?
The overall trend has not been positive if you look at last 4 to 5 months, along with the other names from the same sector. But one stock which has relatively fallen less or has shown a relative outperformance within the defense space is Bharat Electronics. So I think in case of any kind of recovery in the defense sector going ahead, BEL would be one which can take the leadership. And also in terms of the corrective phases, I think the relative outperformance could continue. So I would suggest to take a shift from Mazagon Dock to Bharat Electronics if you want to stay within the same sector.
Got that view, Ruchit. The next question now coming in. This one's on Sagility, and Jay Krishnan from Kerala, actually, Ruchit, is asking a 9-month view on the stock. And he is, of course, a regular viewer, likes the 9-month period quite a bit. But we had, on the fundamental side, Ruchit, analysts meet takeaways. On the charts, is that momentum visible? Is this a new bottom for the counter?
So the stock is trading around its medium-term support. 36 is a good support for the stock, and we have seen a pullback in the last couple of trading sessions from this. I think the risk-reward issue is definitely favorable if you look at next 6 to 9 months perspective after the recent correction. So you have positions you can continue to hold on. On the high side, 48 to 50 would be the range to watch out for when it comes over there, whether it takes resistance there. But at current levels, I think yes, you can hold existing positions even if you want to go create fresh longs. Then keeping a stop loss below 34 rupees, you can attempt fresh longs as well.
Got the view, Ruchit. But the next counter that we're focusing on is PFC. Now, Lalita from Bangalore, who is a regular viewer, holds shares at almost 416. Currently sitting on a slight loss. Asking what she should do at this particular juncture. Ruchit, what would you suggest? Is the arbitrage playing between PFC as well as REC at that point of time, and which one is a better counter according to you?
I think PFC seems better if you do comparative analysis within both. But I would also suggest to keep a strict stop loss below 380 on your existing long positions. The stock is in a consolidation phase since last 1 month. The good thing is that this entire sideways move which you have seen is above its 200 EMA support. So the mid to long term momentum seems to be on the positive side with 200 EMA acting as a good support. So till it is above 380, I think you need not worry much. You should get a good exit price once the dust settles in. But with a stop loss below 380, I would recommend to hold on PFC only.
Got it. So 380 is the level to watch on PFC. But viewers as well as Ruchit and Radha, time now for the rapid fire round in this edition of Ask Profit. please keep your answers on buy, sell and hold so that we can take as many in the next couple of minutes. The first one's coming from Ramesh on Paras Defense. He's bought shares at 713 Radha. Should he continue to hold, average down at the current market price?
No, sell.
Sell, got it. The next query coming in is on V-Mart, bought at 542. Ruchit, should he continue to hold his 80 shares is what Sushant is asking.
Sell on the right should be the strategy.
Next one's coming from Vignesh from Bengaluru. Now he's holding shares of Electro Steel bought at 180. Ruchit, any quick view on the stock that you might have?
Trend is negative. We have seen some pullback. 200 EMA resistance would be around 88. So you can look to exit around 88.
Zaggle bought at roughly around 300 rupees per share by Giridhar. Would you suggest him to continue holding Radha at this point of time?
I think we hold on onto the stock, but not add.
Happiest Minds bought at 450 by Lavanya. She wants to know what she should do with the stock now. What would you suggest, Ruchit?
Hold with stop loss below 360.
The next question coming in is from Bharat from Andhra Pradesh, holding on to Quality Power at 916. Recent listing yet again, Radha. What would you suggest for this counter?
I think you should hold on.
Hold on, got it. Srinivas wants to know a short-term view on Jupiter Wagon, Ruchit. He's bought it at 305. What should he do with his 200 shares?
The short-term trend seems negative, so look to exit on any pullback moves.
CC Avenue also Infibeam earlier, Ruchit. Our viewer has bought it at 16 rupees per share. Should he sell out, move out of this counter? What would you recommend?
There's no positive signs yet, so I would recommend to take an exit.
The next one coming in is from Ravi from Qatar. He wants to know about HDFC Bank, bought at 923. Is it a good time to accumulate more Radha right now?
I think he should exit. Given the news flows, he should not take a call.
Any view on Jio Financial, Ruchit?
Seems we would see some consolidation in the near term. If existing positions are there, should hold on.
Petronet LNG, is there a similar view that you have, Ruchit, on the charts for this one?
No, the short-term trend is negative. We have seen volume-based selling, so it can correct towards 225.
The next one coming in is on ITC Hotels. What would your view be on this one, Radha, at this point of time?
I think it's a good add to the extent.
Aisha Motors is the other one. What would you suggest for this counter as well, Radha?
I think it's also a decent add at this price point.
The next question coming in, it's on Sirma SGS. Is it a good time to add more, Ruchit? Is the momentum continuing on the uptrend?
Hold existing positions. Any dips towards 720 could be used as an opportunity to add.
SBI is the other counter. Is the momentum on the upside done, or should he continue to hold right now?
I think he should continue to hold.
Ruchit, sorry, you can also go ahead with we'll get both of you on the last stock for today.
Yeah, so 200 EMA support will come around 970. So I think if it comes towards 970, it would be good levels to add on.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. Ruchit as well as Radha, thanks so much for helping us solve all your stock related queries. But viewers, all the time we have on this edition of the show. Thanks so much for watching and sending in your queries. Do stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would ask call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift an house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 20
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. And Hiral, it seems like it's the midweek market holiday. The bulls took leave yesterday, obviously, like everybody else, but they didn't come back today.
Exactly, they've not come back. When will they come back is the question, because
next week is also several holidays, right?
2 holidays, so it's a truncated week next week as well, so volumes are going to be thin, but we are at the day's lowest levels on Nifty 50. We've broken below that 22,900 mark, and that's what we need to, actually take into consideration. A 400 points downtick right now 1.8% there, and your broader markets are pretty much in tandem with what Nifty is doing. I think the cuts are deeper when it comes to Bank Nifty, 2.5% shaved off in terms of banking majors, Alex.
Yeah, absolutely. Let's pull up the heat map for the Nifty 50 and we'll tell you about what is moving the needle. So mostly right on the screen, just about 7 stocks in the green holding out, right? ONGC, TCS, Wipro, so the IT majors, but a few of them have actually fallen into the red, whereas earlier on at the start of trade today, you had gains on the screen for a few more of the IT majors. What else? On the losing end right there, I think the stock of the day, Tata Motors PV, but also Reliance Industries losing quite a bit of ground. And if you look at the contributors chart, which we should do next, you will see HDFC Bank, you will see Reliance Industries. Let's pull up the contributors chart, because there you go, those two counters right there, the heavyweights, and followed by the other banks. So 3 banks out of 4, 3 banks and 3 frontline banks losing ground.
And to look at the opposite side of it, there's not too much weightage which is trying to give support at all. I mean, 18 points is nothing. So you know where we are actually headed to with this kind of a closure in trade today. Go on.
The other thing is, I want to pull up the intraday chart for the VIX, because the India VIX is at 26 plus. At least last I saw it, it's heading towards 27 and it's up as much as 8%. So that elevated volatility, Hiral, heading into the weekend.
Elevated volatility here. Let's just pull up the advanced decline ratio and then we should look at the broader markets as well in terms of the components. The advanced decline ratio, categorically the mouth is widening. Not to that extent, the greens are still only 300 versus 2,200 declines, pretty much where we started off. So there is that bearishness which continues in terms of where markets are concerned. And in terms of components of NSE 500, let's just look at that and see what's happening. I mean, a gain of 4 to 10%. HEG, Graphite India are the ones which are seeing some smart moves, but ONGC again is a crude beneficiary. What's losing out is a Spark, PCBL, Ease My Trip, Godfrey, Mahindra Life. I mean, it's a whole host of sectors. There's no particular direction that you're seeing in terms of BSE 500 as well. So that's what the market picture is looking like. But let's quickly look at the factors we should be watching out for. First up, the 2-day winning streak is what Nifty 50 has broken. That's clearly evident from what you're seeing in terms of the chart. And we've fallen as much as 400 points in trade. Your defensives, which is IT and pharma, these have been the only saviors in the market, but they've also kind of given up the kind of gains that we were talking of at the start of the session today. Banking majors clearly underperforming the benchmarks, and that was seen from the contribution that HDFC Bank, SBI and ICICI Bank are giving to Nifty 50 on the downside. Your PSU banks have been the top sectoral losers in trade as well. 22,900 now is acting as the clear support level, which has already been broken. So we know where we are headed from here on. Below 22,900, the bearish structure is something which is reconfirmed, and the resistance now is coming in at levels of around 23,000, which is a psychological resistance. And after that, the next level you should be watching out for should be 23,100. Now, clearly, it is a dull day of trade. For the last 2 hours, the market has been range bound, and we're talking about a range between 22,900 to 23,000. So it's just 100 points range that we're talking about. And very lastly, your cash market turnover is down 10%, very similar to what we saw in terms of Wednesday's session, while the F&O market turnover has been flat today, which was also under pressure, which was down, I think, 10 or 15% on Wednesday's session as well. So that's what the picture is telling you in terms of the setup so far in that last hour of trade. Let's get in our guests. We have Kunal Shah from Mirai Asset, Sher Khan and Samir Dalal who are joining in. Welcome to the show, Kunal. Let me take my question with you. With the way the setup is right now, clearly we've entered that bearish tone in terms of markets. 22,900 is what we've broken as well. What are you watching out for? Because again, next week is a truncated week.
Good afternoon to everyone. So I think this was a little bit unexpected from the markets as well. We had surpassed the hurdle of 23,000 on the upside, and then we headed towards 23,400 mark. We were expecting this move to at least continue towards the mark of 24,000 on the upside. Now again, the support, as you have mentioned, 22,900 has been broken on the downside. upside. Your India VIX has again started to pick up, so there is going to be volatility as well. Even today is the weekly close as well for the Nifty index. Again, we are going to have a doji candle indicating indecisiveness. So I think better not to carry any positions, whether on the long side or on the short side, because there are gap ups and gap downs that is likely to happen even on the Monday trading session. However, said that, I think approach for the Nifty index should be taken on a daily basis. Firstly, I'll be watching out for the 20 hourly moving average for the Nifty index. That is placed at 23,050. Till the time that is not taken out, I'll not be aggressively on the long side. So you will be cautious at the current levels. I will not even say be aggressively on the sell side as well. Yes, the undertone is on the bearish side, but I'll probably wait and watch, not take a trade on an index and go for the weekend. Similarly, for the Bank Nifty as well, I'll again wait and watch. Even for the Bank Nifty index, I was expecting this move to continue on the upside towards 55,000. Again, unexpected, that has happened today. Even for the Bank Nifty, any bullish trade to be taken has to be only above 53,000 on the upside. If that is taken out, then one can probably go aggressively long on the Bank Nifty. At the current levels, even Bank Nifty on the weekly chart is forming a doji candle, again clearly indicating indecisiveness. So there is no trade on index perspective. It's better to avoid the headline index at the current levels.
It's one step forward, three steps back for the Indian equity markets. And good afternoon to both of you. Samir Dalal joining us as well. Before we go to Samir on some of the key stocks of the day, let me come back to you though, Kunal, on individual stocks that you're seeing. Are you still seeing opportunities?
I think very few. First stock, what I'll look on the long side over here is Glenmark. Again, looking technically strong on the chart. There has been a rounding base formation on the technical charts, and follow-up buying momentum is what we are seeing. So good opportunity to add on to the stock on the long side. 2175 is where it is currently trading. One can buy this with a stop loss of 2100 and looking for targets of 2270 to 2300 on the upside. So Glenmark is one stock which is looking on the buy side. On the sell side, I'm looking for a sell opportunity, and that is on TVS Motors. So TVS Motors in the previous week had already given us a rising trendline breakdown, and the stock has entered into the corrective mode. It has been taking rejection at the 20 DMA, placed at 3568. So that is a sell for me at the current levels. 3476 is where it is currently trading. One can keep a stop loss of 3600 on the upside and look for downside targets of at least 3200 to 3160 on the downside.
All right. The stock that we've picked for stock of the day is actually a stock that Samir has quite a clear view on. So we'll come to him in just a bit. Let's first lay it out though. It is Tata Motors PV. It's trading at very close to the low point of the day, and seems like bad news for this particular counter does not seem to stop. And in the latest, of course, Jaguar Land Rover has reportedly decided to shut its Solihull facility for a period of 2 weeks. This is partly what was already planned, but there's more at play. Let's go across to Puneet to give you a sense of why this is important. Puneet, this is only the latest in a spate of bad news, and this is on the back of a pretty bad quarter as well. Why is this important?
Well, thank you for that. It's definitely the third such instance where you're seeing a production cut for FY26. So temporarily suspended production at one of its plants in the UK for 2 weeks is where the suspension is. And the reason that the company has mentioned is because of a supplier issue. Now, bad news, as you rightly mentioned, Alex, continues to follow the company, because you've seen that the affected area is also affected timeline is likely merging with the pre-planned Easter holiday timeline as well, but they will still lose about 7 to 10 days of production in Q4 as well as spillover to Q1. Now, this comes on the back of an impact that we saw in the month of August as well as September for the company in terms of a cyber attack, where they lost 1 month's production of almost 50,000 units, which was split between a couple of quarters, Q2 and Q3, and that itself cost roughly £260 million of lost sales as well as expenses that the company added. Now, apart from that, also 2025 in April is where they lost production because of the tariff impact. So cars were stopped essentially from the UK going into the US, and hence the impact. But when you look at the slump, now this is from November till February of 2026. It's while the numbers have actually gotten better post the cyber attack, you've seen still a 19% fall in Feb 2026 versus 37% fall in the month of November. And the sales, which is expected for FY28 for Jaguar and Land Rover in a single financial year, will not be even close to what they did in FY25. So they did almost 4 lakh units, a number that they did consistently since FY19. The estimate's only 3,80,000 from multiple brokerages, and this is an average summation of that number. So the next 3 years seem very difficult for the company. The first one we've seen in FY26. And that's largely the picture, Alex, because the next 3 years also, the sales are not going to recover back to their FY25 mark. And this year is very imperative, a new CEO with PB Balaji, but also the whole makeover of the Jaguar brand going all electric.
Okay, this is an interesting development. Thank you so much for that, Puneet. In fact, let me take this one with Samir. Samir, Tata Motors PV has been one of your favorites as well. How are you looking at it now with JLR again holding production? And as Puneet brought to us, the kind of impact it could have in terms of production. What would you have to say on this one? Would you have a change in opinion?
No, I don't have a change in opinion. I still remain very, very bullish on JLR and Tata Motors PV. And let me give you my reasonings, okay? So why have they cut production? We obviously know that there is a massive slowdown in the Middle East when it comes to sales of cars because of the issues that are happening out there. So when you have a situation where you're not able to sell, there's no point producing and holding on to inventory. We do not know when the recovery will happen because this could be a little prolonged, right? But having said that, are we of the opinion that this war is like a never-ending war that we have in Ukraine and Russia? I think that's highly improbable because I'm sure Iran is running out of ammunition. And at some point, the US is also going to say that the cost is not worth what they're putting in at this point of time. So it has to come to an end. Whenever it does, what you will see is slowly things will start to stabilize in the Middle East. And eventually, maybe 2 months or 3 months down the line, you'll see a demand uptick, and then you'll see a backlog of uptick also. So you'll see a sudden spike. Now, JLR in the current year has gone through a lot of problems. In Q2, they faced the cyber attack because of which production stopped. The resumption of which started in Q3. So, a lot of the negatives have come into the system in the current financial year. So the year has been a washout for them. Are we saying that this kind of system is going to keep happening for them going forward? I don't think so. So when the recovery starts happening, which we think will be maybe a month from now or maybe 2 months from now, what you will see is people will start looking at it from a different perspective. So you're getting it at a decent value. If you look at normalized earnings, barring the one-offs that have happened in the current financial year. So that is the first point. The second point that I want to make is that we got to realize that it's not, we are focusing on Jaguar Land Rover, but it is not only them, it's all over the world. Production is going to get affected for cars, including the others, Mercedes, BMW. We just don't discuss them as much because we don't have any exposure to them here in the Indian market. So this is an industry phenomenon. This is nothing specific to Jaguar Land Rover. And if they can use this time to get their refurbishments and plant maintenance done, all well and good. So it helps them when, production is up and running, they don't need to take a shutdown. So I don't look at it as a massive negative. We still have to look at things from a longer term perspective when you're a fundamental analyst. Right now when I'm talking and the stock is going through this pain and, the profits are looking weak, everyone is probably wondering why is this person being so optimistic? But a year and a half from today, when actually things are stabilized and things are growing and the stock is up, that's when people, the whole world and the bandwagon will come jumping in.
Sure.
And you'll have the opportunity.
Okay. All right. So positive, and there's quite a bit that has to change for Jaguar Land Rover over the course of next year as well, not least of which is the transition that Jaguar itself is making towards electric vehicles. Kunal, I want to come to you on a couple of frontline stocks. HDFC Bank and Reliance Industries. Reliance Industries in particular is among the top losers on the Nifty 50. In fact, if anything, I'm going to try and find out. It's the third biggest loser with cuts of 4.8%. and proving to be quite the drag on the benchmark, and HDFC Bank not too far behind. In fact, close to 20 constituents of the Nifty 50 are trading with cuts of over 2%, and quite a few of them are losing over 3%. So what's the call on these two heavyweights? That's practically 20% of the benchmark as losing between 3 and 5%. You're on mute.
Sorry, firstly for Reliance, the stock had already made a double top somewhere in the month previous, where it was in January. where the stock had made a double top formation. Post that, we had seen the correction starting in, and now we are facing this rejection at the weekly 20 moving average, that is 1430. So till the time that is not taken out on the upside, there will be no buying momentum that would be coming back. There was consolidation which was happening on the lower levels, and then again we have seen a breakdown. So I think the low, what the recent low of 1300, what Reliance had made, that will be very important. If that is breached on the downside, then you can expect a gap area to be filled on technicals on the downside towards 1180, 1190 zone. So I think I'll not be a buyer at the current levels for Reliance. 1430 is something what I'll be looking out for. If that is taken out, then probably one can go aggressively long on Reliance. But overall, the long-term structure still continues to be on the weaker side.
Fresh lows for the rupee in the meanwhile, and we continue to head lower, possibly closer to that 95 mark, as unprecedented and unexpected that would have been even last year when the tariff conversation was front and center. We weren't thinking about 95 on the Indian rupee, right? So it is a balance of payment issue, and the fact that the government is taking steps to curtail the impact of higher crude oil prices currently. But let's go across to Somit Sarkar with what the chatter from the dealing rooms is. And it seems, Somit, that just over the last half an hour, 45 minutes or so, the selling has intensified. What is the word from the dealing rooms?
Well, the sentiments are not at all optimistic given the fact that there is no clear direction firstly in the market, and these 2 days of gain and then 1 day of big loss, that has led to much more losses for retail investors and for dealers as well. Hence, the sentiments are not at all optimistic throughout the broking rooms that we are seeing. And if we close below 22,900 today, then this clearly reaffirms the fact that overall the structure or the market continues to remain quite bearish. So closing about 22,900 would be crucially important for the market in trade today. Few stocks still which dealers have highlighted where there are some flows that they are seeing. Firstly, when it comes to Tata Consumer, they are indicating that there are some DIs who have been actively buying this counter at lower levels in trade. Delivery volumes could be as well on the higher side. So despite the weakness that we are seeing in the market, that stock is down just 0.3% in trade. LIC Housing, that has been on an uptrend. Strong buy flows on the FI desk is what dealers have highlighted. Cheaper valuations, and if there's a potential repo rate hike, then this counter could benefit out of that. And that is also one of the reasons why there are some buy flows when it comes to LIC Housing Finance. For Newland Labs, there are buy flows on PMS desk. Dealers are indicating that the export data for the month of March is quite strong for this counter. So it will be interesting to see how these numbers pan out post the March, and these numbers will come out. So it will be important to track, but early signs are that the March numbers would be quite strong for Newland Labs. And lastly, when it comes to Page Industries, there are some buy flows on the large HNI desk at lower levels. Dealers indicate that management in one of the conferences has maintained its guidance and they are expecting a double-digit growth on the revenue front and margins to be anywhere between 19 to 21%. They have reassured their guidance, so that is one positive commentary is what dealers have highlighted, and hence there are some buy flows at lower levels on the large HNI desk.
Got it. All right. Thanks so much, Somit, for getting us those details. So Page Industries, Newland Labs, LIC Housing and Tata Consumer on Somit's radar with regard to what he's hearing as a buzz from the dealing rooms. Let's go across now to Alistair Newton, Chief Executive of Alavan Business Advisory. He's joining us live from Zambia. Alistair, thanks so much for taking the time, and good afternoon to you. What's the perspective on what is happening, first of all, in West Asia, and what's the sense that you're getting? I'm not asking from a geopolitical sense, I'm asking about how the market as a whole is viewing this, because it's not seeming like it's going to be a conflict that gets resolved very quickly. Is that being priced in?
I think you're right that this conflict is not going to be resolved very quickly. I also don't think it's being priced in properly. First of all, obviously we're seeing a lot of volatility in oil markets, and that in turn is driving volatility in both equity markets and bond markets globally. We saw after Donald Trump extended his deadline for the Iranians to agree to what I think is a Hail Mary 15-point peace plan, we saw oil drop by about 6% last night. It pushed WTI down below $95 a barrel, which seems to be some sort of pain pressure point for Donald Trump. Every time we see WTI, which of course is his major metric, going towards the 95 to 100 band, he seems to come out with some emollient statements. Now, WTI has gone back up again since he spoke yesterday. I think that could be in anticipation of a pattern which has evolved over the previous 4 weeks, that Mr. Trump always seems to be taking a hard line over weekends when markets are closed, and then being more emollient on Monday morning after markets open up again in Asia. We may well see that pattern repeated over the course of this weekend. Let's keep in mind that yesterday he did also say that if Iran didn't agree to a cessation of hostilities, the US would become Iran's worst nightmare. The other thing which markets are not taking sufficiently into account, in my view, is Lebanon. There is a huge conflict going on there between Israel and Hezbollah. And although markets are saying, well, there's no oil there, so why should we worry? I think investors need to be very mindful of the fact that the IRGC is standing shoulder to shoulder with Hezbollah in Lebanon. Iran will not sign any sort of peace agreement, cessation of hostilities, ceasefire or whatever, as long as Israel is attacking Hezbollah and the IRGC forces in Lebanon. So the Lebanon conflict does have a very direct bearing on what happens in the Strait of Hormuz.
Okay. Alistair, good afternoon. This is Hiral on this side. Everything said and done right now, the key question is, what should someone do when it comes to reacting to markets? Because one, either you sit on dry powder. Two, you can probably start deploying because you're off those highs in terms of valuations as well. And the third option is just wait and watch. I mean, what's your advice to investors then?
Well, first of all, I'm not a market strategist. I'm a geopolitical strategist. So your viewers should feel free to disregard anything I say on account of how they should play it from a market perspective. Clearly, we do need to continue to try to anticipate what Donald Trump is going to say next on Truth Social or whatever, because markets are moving according to the Trumpian rhetoric to a significant extent, particularly as I intimated in what I said a moment ago, oil markets in the first instance. A second marker I would point to, however, which I think has been quite well documented by those who are more expert than I am when it comes to bond markets, is that the administration in Washington also seems to get nervous whenever the US 10-year starts to approach 4.5%. Now, I know that there is this idea that Donald Trump reacts to equity markets, but let's look at Donald Trump's pre-political career as a realtor. If there's one thing he really understands, it's debt. And I do think he is perhaps even more susceptible to bond markets going against where he wants them to be, US interest rates in particular, of course, than he is even to equity markets. And I think we've been seeing that as a pattern since the so-called Liberation Day on 2 April last year, nearly 12 months ago now. I think Donald Trump is susceptible to adverse movements in US treasuries. And I do think that market participants need to be keeping an eye on that as well, perhaps even more so than equity markets. So oil and bond markets would be my two markers for market participants to follow very closely, trying to keep ahead of the curve on both counts and looking out for what Donald Trump comes out with, or indeed Scott Bessent for that matter, which may be designed to, shall we say, make sentiment more favorable from a US perspective.
Thank you, Alistair, for that and being gracious enough to respond to a market question when your expertise is more in terms of geopolitics. And to tie that up with it, my question to you is now, from here on, how are you seeing escalation to de-escalate, as a strategy? Because that's what everyone is talking about when you talk about what Donald Trump is doing, how the GCCs come and play their role as well, because they have been the ones who've been called a very neutral land, which no more is the case, it seems. And then when India comes into the picture, how are you looking at India's position as well in terms of being a negotiator?
Well, I think let's deal with the last part first. There's quite a few countries running around at the moment trying to act as mediators. Pakistan, Turkey, Egypt. I guess the Omanis are still in the mix somewhere. I think the problem with acting as a mediator right now, be it India or one of the countries which is already engaged, the practical problem is that the Iranians are not ready to call a halt, even if Donald Trump is, and that's an open question to which I'll return. And furthermore, Benjamin Netanyahu is not ready to call a halt at this stage. I think there has been a certain amount of rhetoric over the course of the last few days, which has been suggestive of this idea that Donald Trump can call a halt anytime he wants to. He can't. I don't think he necessarily has the wherewithal to stop Netanyahu, let alone to get the IRGC, who are calling the shots in Tehran to all intents and purposes, to agree to a ceasefire at this stage. We've seen their rejection of the 15-point plan already. So this basically leaves Donald Trump to come to the first part of your question with two options. It's either escalation or capitulation. And I include in capitulation something he hinted at about a week ago, which is that he may just walk away from all this. It's not impossible that he would do that, declaring victory along the way, even though there is a respectable body of opinion in my area of expertise, geopolitics, which says that as long as Iran controls passage through the Strait of Hormuz, America has effectively lost this war. And let's keep in mind, too, that escalation and ultimately capitulation in some way, shape or form are not mutually exclusive. There are more US ground troops moving into the area. I think it is still the case that nobody can call how this is going to end with any degree of certainty, or indeed when it is going to end. But I do think there is a better than 50% probability that things are going to get worse before they get better, not least from a market perspective.
A quick last question. I'm just squeezing one in, even though we're out of time, Alistair. But what is the worst case scenario, in your opinion, in the next week or so? You've pointed to the buildup of ground troops. They've been deployed from the US, and that presence has been building, even as we have a so-called cessation of targeting of energy infrastructure that was announced overnight by Donald Trump. What is the worst case scenario, in your opinion?
Worst case scenario, in my view, is that the Americans or the Israelis do something which provokes Iran into attacking desalination plants in the GCC countries. This is the biggest fear of the GCC countries. They are highly dependent, just on humanitarian grounds, let alone economic, on their desalination plants. If we were to see an escalation into wholesale attacks on desalination, this would be massively worrying. And I think in those circumstances, you would see a very big market sell-off indeed.
Alistair, always a pleasure. And I'm going to put it out there. I would love to speak to you again. And given the way that this conflict is going, I'm pretty sure that we're going to have to talk again, because our viewers will certainly benefit from your insight. Thanks
well,
so
I'm
much
very happy to do that, but you realize that you may actually be having to get me to say, well, I was completely wrong when you spoke to me on the 27th of March. Such is the uncertainty out there.
I seriously hope that that is the case and the conflict gets over by next week, in which case I will call you to congratulate you. Thank you so much for taking the time.
Okay, thank you. Bye.
Bye. All right. Well, on that note, I'd like to thank both our experts, Kunal and Samir, and apologies to the both of you, because that last conversation I thought was relevant, and to have a longer conversation on that, right? So thank you so much for taking the time, both of you. Okay, let's talk about one of the major stories of today, and this is reacting to the fact that oil prices have remained elevated, and the government announcing that it is revising its fuel duty structure, cutting the special additional excise duty on petrol and diesel by 10 rupees each. This is a measure to protect the consumer. First, let's listen in to Finance Minister Nirmala Sitharaman speaking about the government's announcement. Listen in.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें, और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में, अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
Okay, so that's the word coming in from Finance Minister with regards to where the excise duty cut goes. But let's understand the impact now from Somit Sarkar. Somit, impact one in terms of OMCs and the exchequer.
Well, definitely this news that has come in is quite positive for the oil marketing companies. But there are two reasons why oil marketing companies are still not cheering this reduction in excise duty of 10 rupees per litre. Firstly is the fact that one of the private players, Naira, has hiked energy prices or petrol and diesel prices by around 3 to 5.3 rupees per litre. Now, Naira has a market share of around 8.3%, and the second one is the losses on the marketing margin side when it comes to petrol and diesel still continue to be on the higher side for the oil marketing companies. Dwelling firstly on the first point, now Naira has hiked the petrol and diesel prices, and they have a meaningful market share of around 8.3% in the retail fuel market. So what will this do now is that there will be more market share shift towards oil marketing companies. Now on a normal day, this would have been a quite positive news. But today, the fact that they are incurring losses on sale of every litre of petrol and diesel, and if more market share shifts towards the oil marketing companies, then the losses for them will also increase going forward. So that is one reason why oil marketing companies are actually not cheering this reduction in the excise duty. And the second one is, as I mentioned, that the losses continue to remain on the higher side. And now earlier, as per analysts, the marketing margin loss stood at anywhere between 43 to 49 rupees per litre, and this 10 rupees reduction in excise duty will reduce the losses by just 20%. Despite this, the marketing margin loss continue to remain on the higher side of around 33 to 39 rupees per litre on blended basis, which means that by selling every litre of petrol and diesel, they are incurring a loss of anywhere between 33 to 39 rupees. So these are broadly the two reasons why why oil marketing companies are actually not cheering this reduction in excise duty. And this reduction in excise duty will have an impact on the government's financial as well. On an average, India consumes close to 170 billion litres of petrol and diesel on an annual basis, and this will lead to 1.7 lakh crore of loss for the government on an annual basis, which is nearly 5% of the gross revenue for the government. But again, these numbers are on annual basis. Now it remains to be seen for how long this reduction in excise duty prevails, because then that will decide what's the actual loss that is coming in for the government of India.
Thank you, Somit, for that. In fact, let's get in Prabal Sen from ICICI Securities. Prabal, welcome to the show. Hiral on this side. My question to you is, how are you seeing this benefit in terms of where OMCs go in terms of the financial impact? Because I was just reading right now from the press release where they're saying at current international crude prices, the under recoveries stand at approximately 26 rupees per litre on petrol and around 81.9 on diesel, and the combined daily under recovery, which is being absorbed by OMCs, is approximately 2,400 crores. And the excise reduction offsets rupees 10 per litre of those losses, ensuring that OMCs can continue to supply fuel without disruption while keeping retail prices unchanged. If you have to take this 2,400 crore rupee number into consideration, what do your calculations actually tell you in terms of impact?
So first of all, I think, the under recovery number that you mentioned is probably based on the Indian basket of crude. It is important to remember that the Indian basket of crude has a substantial weightage for Dubai and Oman crude, which is not really the price that is being paid, because those crudes are not the ones that are being purchased right now. Dubai and Oman, till about yesterday, were trading at a $50 premium in the physical market to Brent, if one has to rely on published numbers. And therefore, it sort of probably increases the under recovery number slightly more than what it should be. Having said that, I think I completely agree with what little I could get of Somit. I couldn't quite hear the audio, but what I could see was that the number mentioned was 48 odd rupees on a blended basis. Our numbers pre this change were also closer to about 40, 42 rupees. And therefore, with this reduction, the excuse me, the incidence of these retail margins is obviously reduced to quite a extent, but it still remains fairly significant. So as of now, with GRMs being what they are and with retail margins being what they are, I still think that OMCs are not really out of trouble. I think their numbers will probably still be in negative territory if you look at integrated margins on a per liter basis. Numbers that we have, at least for the last couple of weeks, against a normalized level of between 7 to 9 rupees a liter that companies make, start IOCL being the highest and HPCL probably being the lowest. Those numbers are trading at about 15 to 20 rupees negative at this point of time.
That makes sense. So, Prabal, you've put the numbers into perspective. My question then to you, and good afternoon, this is Alex here. My question is that in the price? Because the stocks started off with a spot of green, but I'm looking across the board and you have all three oil marketing companies, major ones, that are trading in the red. And so the street has obviously taken the similar view that you've just described, and you've described it very aptly. So is that in the price, in your opinion?
So I think there's a couple of things to look at. One of the things that we have been stating for some time is that if you look at the last three crises that have happened in the last, let's say, 15 to 17 years, starting from the 2008 financial crisis and all the way up to even the current crisis right now, there is a certain, trough level valuation that OMCs tend to recover from. If you look at what valuation they are trading at today, our sense has been, and this is something we wrote in our note on the 20th of March as well, is that there's probably another 15% decline that one can see, post which, and of course, this is all based on the assumption that this conflict will get resolved one way or the other over the next couple of months. That being the case, from the bottom, which is maybe about 10, 12% lower from the current levels, we have generally seen a 40% bounce back in all of these three names. Now, obviously, the challenge here is to predict the bottom at this point of time, because that entirely depends on how the dispute plays out. But this move by the government definitely helps alleviate some of the pain. But at a certain point of time, some price actions or further tax cuts are going to be required if prices remain at these levels. And I think that is something that will be a key monitorable to see if OMC fortunes sort of recover and the stocks recover from these levels.
Okay, so Prabal, when you say some more will be required, what's that quantum at the back of the envelope calculation telling you? How much more legroom that will be needed?
Right. So, every dollar increase in international prices, typically, if you have to keep margins at a constant level, is about a 50 paisa per liter change in the retail price, right? Given the fact that, 10 rupees of that has been taken care of, that means that about a $20 impact from the pre-conflict level has been taken care of. Now, if I look at what the prices were at that point of time, Brent was at about $73. Diesel was probably at about $90 odd.
Apologies, I'm going to have to...
That's the difference that you have to sort of look at.
Yes, you've made the point. Prabal, apology, I'm going to have to cut you off because we have to listen into what the Interministerial Press Conference has to say, probably about what we were just speaking about oil. Let's listen in.
Now, following this crisis, there has been a significant surge in the international crude oil prices. इस क्राइसिस की वजह से जो अंतर्राष्ट्रीय क्रूड के प्राइसेस हैं उनमें स्वाभाविक रूप से काफ़ी बढ़ोतरी हुई है और उसके अलावा there has also been a higher surge in the prices of petrol, diesel and aviation turbine fuel. तो इससे हुआ क्या है कि this creates a market and it also creates an incentive for the refineries to be exporting at higher international prices. So the government's response on that has been a very calibrated response. And yesterday we came up with certain export duties in the form of special additional excise duty, SAED. and a road and infrastructure cess. Both these duties and cess have been imposed on the export of diesel and the aviation turbine fuel, which has been imported from outside India. अगर मैं रेट की बात करूं तो डीजल पे 21.5% पर रुपये पर लीटर है और एटीएफ पे 29.5 नहीं 29.5 रुपीस पर लीटर है. Now these duties on petrol and are nil at present. So the duties which have been imposed on diesel and ATF. The duties on petrol are nil based upon the present crack margins. However, the rates will be reviewed on a fortnightly basis. हर 15 दिन में सरकार एक मैकेनिज्म लाएगी जिससे कि ये रेट्स रिव्यू हो. अब इस चेंजेस का फ़ायदा क्या होगा, इससे हम क्या हासिल करने वाले हैं. The idea behind having these changes is to prioritize the domestic availability of these products, that is diesel and ATF, and at the same time to ensure an energy security for the country in the midst of global uncertainty, which has been exacerbated by the disruption in the supply chain. And of course, the uncertainty prevailing in the international markets, both in terms of availability and price. Revenue gain at the back of the envelope calculation for these proposals would be roughly around 1,500 crores rupees in a fortnight. Situation, however, as I said earlier, will be monitored on a fortnightly basis. Now, there have been also, these were the changes on the export side. I will now come to the changes that have been made on the domestic side. Because as you would have read the Gazette notification yesterday, the changes are in two parts. One is an imposition of an export duty, and secondly, there have been changes in the excise duty on petrol and diesel for domestic consumption, where there has been a reduction by rupees 10 per litre by reducing the domestic special additional excise component of the current stack of levy that these products suffer when they are imported. So in real terms, the revised duty on petrol comes now from rupees 21.90 rupees per litre to 11.90 rupees per litre. The revised duty on petrol, पेट्रोल में जो संशोधित ड्यूटी है वो पहले 21 रुपये 90 पैसे प्रति लीटर थी, and from 21.90 rupees per litre it will now come down to 11.90 rupees per litre, 11.90 रुपये पर लीटर, एक रिडक्शन है 10 रुपये पर लीटर का. Similarly, डीजल पर the existing duty was 17.80 रुपये पर लीटर, which now will come down to 7.80 per litre. Now these above steps have been taken largely to reduce the under recoveries for the oil marketing companies, while at the same time ensuring that there is no increase in the prices of petrol and diesel for the consumers on account of the ongoing crisis. Revenue implications will be seen by the department. As I said earlier, on the side of the export, there was a revenue implication. We will be looking at the trends of imports for the fortnightly period and then coming up with what has been the revenue implication. Because please understand that the situation is dynamic. It is not business as usual where you would have a certain predictability कि इतना metric ton माल इतने period में आएगा. We are living in difficult times. You are all aware from the media about passages of ships and attendant problems. So any implication